huge problem, unlike any problem you had in the past, because this is not we all do well kind of world. This is a winner takes all world on the battlefield, commercial, and that's why the U.S. is positioned so strongly. Good morning. It's Alex Karp talking. This Palantir. We just dropped off again. Futures just dropped off. 10 handles. Our products are integrated with Anthropic, and in the future, it will probably be integrated with other large language models because of this dispute. The core question, though, is, and where I can give you my opinion, is in this country, on the battlefield, not domestic surveillance. No one believes it, but Palantir is the most important protector of the Fourth Amendment, or Fourth Amendment, meaning the right of privacy in this country because of the way our product works. And I'm deeply committed to that, as are most Americans. The Fourth Amendment, in my view, or extrapolation, does not apply to adversaries on the battlefield. On the battlefield, where we are confronting people who want to kill us. Imagine men and women who are the citing the Constitution on the battlefield. The only institution in this country that's widely respected by every demographic. Every demographic in this country respects the U.S. military. They deserve the best and most lethal technology in the world, and we at Palantir are going to make for effing sure that they get it. Whether we get it from Anthropic, whether we get it from OpenAI, whether we get it from Elon and X, or we get it from NVIDIA or Google, the thing for us is we are committed to the warfighter getting the best technology. And by the way, I'm bifurcating that from domestic issues. I see lots of reasons to restrict these technologies in law enforcement and in other use cases because they are so powerful, they could proxy eviscerate, even if they're within the context of the law, the rights that were given to us by a higher being in the First, Second, Fourth, and Fifth Amendments.
Okay, so if it's not cloud, there's another option available. Jim Cramer has a question back in the studio.
Alex, first, thank you for coming on.
New York fangs are all mixed at the moment.
Yeah, I'm supposed to look at the camera, but, I'm not a professional, so I'm looking at the camera and don't see you. But, yes,
we see you.
Nice to be here.
Thank you. In the technological republic, hard power, soft belief in the future of the West, you distinguish between companies that are doing things that are exactly what you're talking about. In other words, trying to help the warfighters, and then companies that, frankly, are doing different missions. You divided Google, Amazon, Facebook, shifted their focus from collaboration with the state to the consumer market. Do you think that in this particular war incident that we're having right now, there's been a uniting, and that these companies are helping the president to try to win this war?
Look, there's been thank you for the question. There's been a huge shift in Silicon Valley. When we started Palantir, we couldn't get funding. Because we were pro making sure the warfighter came home alive. And quite frankly, that in some cases means that our enemies and adversaries do not come home alive. And the Valley structurally, the hostile to skeptical to neutral positive on the idea that okay, futures continue to show weakness into the opening bell. Sit tight at the open. Thing, though, that I think even now is underestimated by all actors in industry, and including in Silicon Valley, is how disruptive these technologies are. If you are going to disrupt the economic and therefore political power significantly of one party's base, highly educated, often female voters who vote mostly Democrat, and military and working class people who do not feel supported, and you feel like you believe that that's going to work out politically, you're in an insane asylum. Like that, you cannot have it. This technology disrupts humanity's trained, largely Democratic voters, and makes their economic power less, and increases the economic power of vocationally trained, working class, often male voters, and so these disruptions are going to disrupt every aspect of our society. And to make this work, we have to come to an agreement of what it is we're going to do with the technology. How are we going to explain to people who are likely going to have less good and less interesting jobs from their perspective. And how is it that we are going, and by the way, on the military thing, these technologies are dangerous societally. The only justification could possibly have would be that if we don't do it, our adversaries and will do it, and we will be subject to their rule of law. So if you decouple this from the support of the military, you're going to have an enormous problem explaining to the American
Got 8 minutes to go.
why is it that we're absorbing the risk of disrupting the very fabric of our society, including the most powerful parts of our society, if it's not because it's about maintaining our ability to be American in the near term and long term. And the interesting thing is, people, even in industry, are not aware of how disruptive these technologies are. And therefore, it's true that people become...
Futures continue to drop off here.
...supporting the U.S. government in a way they weren't. But this is a road that we've never traveled before. And if you don't believe it, look at the battlefield. What do you think the Chinese and Russians are saying about what they're seeing on the battlefield now? They're not saying, oh, this is some kind of incremental technology. They're saying, wait a minute, the last time we saw America fight, it was like Afghanistan. It did nothing working. Now it's like stuff we can't do.
Okay, cool. I mean, Alex, are you fearful after that? And I agree with everything you say that Taiwan's in danger. I understand, speaking with some cybersecurity people I know you like, that this is, but right now China thinks that we are distracted, and that this may be an ideal time to make some.
No, sorry, that's not what I'm saying. Sorry. And I don't think that's the lesson. I think that, first of all, China is run by engineers. So that's an advantage and a disadvantage. But what our adversaries are seeing is they can do, for the first time in decades, they're seeing things on the battlefield that they don't believe they can replicate. And that is it's the same thing that's going on in commercial in the U.S. It's like, or the same thing.
All right, we're back into Monday's candle.
Probably blowing up your phone saying,
SPY,
you know which company is valuable.
moving back into the candle that
It's basically all the answers are the same. It's like these things
engulfed
are nearly impossible to pull off. Transforming large institutions.
Monday's candle with that news that the president shared with everyone, that the war's almost over, basically. Markets rallied on that, and now they're just kind of sitting here. You can see price action is just sort of pulling back. Actually, that was Friday's candle. Friday was a doji. Monday was a big bullish candle.
I'm pleading with my European friends. I spent half my life in Europe who largely don't listen. This is a have-not revolution. And like, there's all these discussions around software. Like, it's like, all these investors who thought we were a services company couldn't invest now think we're a software company and can't invest. It's like total BS. We get paid on value creation. Everybody in this world is going to get paid on value creation. And the way you get paid in value creation is you enhance large-scale infrastructure in a way no one else can. On the battlefield, deadly infrastructure. In the civilian context, less deadly infrastructure. There is not going to be, we're all trained, it's like we're all trained to think of the world as lawyers. Like, they're bad lawyers, they're good lawyers, so you pay a little more. But there's a linear progression. This is not a linear progression thing. This is, you have it or you don't.
I wanted to ask you about a report that the Iranian state media has leaked that Iran is looking at technology companies, including Palantir, and their Middle East infrastructure as potential targets. Your reaction?
They're evil, they're not stupid.
I mean, Amazon 3 data centers have already been bombed.
They're evil, they're not stupid. It's like, if you look at, it's like, even there you see a revolution. And again, we mind our own business at Palantir. Look who's on the list, look who's not. I mean, we're in the middle of war. You would expect it to be a list of hardcore military companies. They are interested in the things they can't produce. And look at the list. And again, one of the bigger lessons that I think we struggle with in America is evil does not mean stupid. They are very smart human beings, the mullahs. Now, they're more than willing to assassinate 50,000 of their own people on just because, that's how they roll. It's like, and then we have wide swaths of the American populace on far left, far right that are seemingly don't care about that. But, they're very smart humans. They make a list of the technologies that are...
All right, we're getting a little bounce into the open.
On the battlefield and in U.S. commercial, which is very much much linked, like supply chains are linked, but also if America is
Support 6,600, 68.20. We're in a trough. You can see this trough of negative gamma right here. The negative gamma tapers off as we move lower and as we move higher. Negative gamma tapers off. You can see that line's rising in both directions. So towards 6,900, negative gamma really tapers off dramatically. The other thing is a lot of traders are buying puts like crazy over here. So puts are bid. And if you've been looking at open interest, like a couple of you shared with me this morning, you see a lot of call buying in like April. Oracle saw a lot of volume recently. Open interest changing 230%. Capri Holdings, AXTI calls being bought May, June, August. I would suggest buying out at least in May. NVIDIA calls 104% increase in call open interest out in May, the 200 strike. Core Scientific puts being bought. Gilead, Google, Coinbase, AppLovin, calls being bought. Oracle, more calls being bought out in April. So start thinking about call spreads. Don't take anything less than May, in my opinion. That's where most of the open interest is coming. I'm sure Money Magic can confirm what I'm seeing. So people are bidding on puts right now. So they're paying up for it. VIX is elevated. Okay, we got 30 seconds to go.
We look forward to that early next week. Certainly one of the big catalysts of the month. Meantime, Jim, we're going to go into the bell with futures close to session lows. Right. VIX back to 26, Brent back to 99.
Yeah, I mean, I think that we have to have a plan beyond the president talking about how we're winning the war, and Iran talking about how we're won, yes. And then Iran making it so that we're not able.
Yeah, private credit's a big issue.
The Strait of Hormuz must be open. Now, again, I understand what Alex is saying. We got to support these guys, but the United States has to support them too. The president has to.
Okay, we are open. Watch the VIX. Looking for a fade in the VIX. Low tick alert to start. All right, so we got stocks bouncing. Microsoft popping, Netflix popping. NVIDIA is seeing some profit taking.
But you're absolutely right. The world is a gloomier place, and it's amazing that we're so close to the highs.
Yes. Although, Jim, I mean, not to Pollyanna it, but Goldman does have a note out today. John Flood looking at hedge fund positioning and arguing that if there is good news, watch out for what they're calling an explosive rally.
Look, I think that if you do Kissinger's plan, I keep referencing Kissinger because he's maybe one of the smartest people that I've ever met in my life. But you got to be able to say, the president has to be able to not talk.
Okay, futures continue to move lower. We got a lot of negative gamma below.
So the whites are out in Iran. Then see how they do. The whites are out in Iran, and the interstates are out with Iran.
Negative gamma tapers off below 6,700. Okay, here's 0 day.
Turn it into a parking lot. Then any kind of negotiation with intermediaries or a commitment not to attack.
One or the other. Go to Qatar and say, look, we want to win this war. But the problem with that is that they're still in charge, and the president.
Futures continue to move lower. Looking for a bounce.
So I don't know how the compromise to say your win does. They can't have a nuclear program. Never moves must be open. Those are the two things that we should be focused on.
Netflix on the move. Netflix.
Here at the Open, there's CF again and Mosaic again. LyondellBasell again. These fertilizer names.
There's unfortunately a very small group. I mean, I saw a new one.
Nvidia below the 20 MA.
Helium.
Nvidia below below the 20 MA. Nvidia.
From that area, and we have a strategic petroleum reserve for helium, but it's owned by Linde.
Netflix looking like it might bounce soon.
So I thought great about Linde. That's one that's up a couple analysts are talking about. I mean, I'm always looking for new names, cognizant of the fact that it's a war. I don't want to be like I used to be in here with Cal, but I do think that there are more companies that are going to benefit than just the fertilizer companies.
Airlines once again close to the bottom of the list.
No.
The IEA did cite specifically, Jim, that jet fuel is pretty vulnerable here.
Yes.
We're starting to get some surcharges from Cathay Pacific.
Netflix on the move.
Actually, Citi has an interesting positive catalyst on Delta.
Microsoft with a nice bounce. Microsoft.
Delta's closer to the bottom.
All right, let's see what the NASDAQ is saying. NASDAQ actually looks pretty good. NASDAQ.
It's tough to be able to break the competition of open ETF.
They're going to move as a group.
Yeah, so I don't want to go there. It's interesting that when do you buy Palantir over what Alex said? I think that I am a
Okay, we got 87 stocks advancing on the S&P 500. Only 20 on the Qs. CF Industries and Mosaic are higher this morning. CF Industries, Mosaic following through. Big gap up on Mosaic.
realize that supply chain is not their strength. He's been working, making better and better. Yet he put Palantir in for more. That's one of the reasons why I like the common stock of Palantir.
Mosaic looking for
Don't think people are focusing on that right
some
now.
follow through, gapping up.
Is GE reflecting sort of concerns about capacity growth in a stressed airline industry?
And that has been the case. That's been, I know that defense is not the front and center of GE Aerospace, but it's important. But yes, anything connected to the chain of aerospace is
Okay, let's look at Mosaic. Mosaic.
Along with some of the cruise lines again.
yes. Oh my.
Actually, Jim.
Okay, Mosaic, big gap up at resistance right now. Mosaic.
A lot of people are talking about that giant buyback that Mark Benioff is talking. He's borrowing a huge amount of money. Now, some people are saying that he can't believe that he's borrowing money. He's a software as a service group. And these are people who point out immediately that TEAM team, which is Atlassian, is laying off 10% people out of weakness, not out of strength. So there's this great dichotomy. You're saying, are they laying them off because of AI?
Low ticker at minus
Or are they
800.
laying them off because that model's broken?
Yeah. Well, the argument from team is that we're going to self-fund our AI investments, right? Rather than go to market to raise equity.
Exactly. And I think that it's really interesting. You see a company, it's down 51%, and then they say they're doing the right thing. And I say, well, wait, they're not doing it out of strength. Whereas I think that Mark purely used his strength to the point where he's got a lot of cash flow. He came on the show.
He's like daring you to sell at this point, right?
Oh, yeah. He's like in the Goldman Group. It's a rip your face off rally with Mark. Look, we own Commerce. We own this stock. It's been the greatest and also it's the best sometimes worst.
Yes. Jim, couple of calls on energy. This double upgrade of Oxy, I wanted to get your take on. Wells goes double upgrade.
Well, they're levered.
On some Permian, right?
Yeah, in the last 30 years, Oxy's the one you reach when you have
Mosaic looks good.
a spurt like this because they're
Let's see what's options wise. We've got a lot. Mosaic
When oil goes up, you have to buy them.
at the 30 strike.
That was kind of a gross sell.
Yeah, it's a move. The refining story is also interesting. Journal, nice piece about how refining, you don't just shut it off. If there are closures, it's going to take a couple of months to reopen some of the refining.
And yet people went on Valero in any way. It was up really big. And I think a lot of that was the president talking about how we don't have a lot of refineries. And if you're short refineries, the ones that are refineries, pure and simple Valero, do go up a lot. People are going to reach for Valero no matter what. That's like ingrained in the psyche. Bible era.
Sort of Pavlovian.
Exactly.
Reflex, yeah.
Pavlovian. Exactly.
On levels here, Jim, you know, we took out yesterday's low, but the lows of the week, Monday was a bad day. Right?
Yeah.
That would take you back to 66.9, or actually 66.40. So there's some cushion there in terms of retracing our weekly lows.
Well, I think any sign of weakness from Iran, wherever it is going to cause that rally that Goldman talked about. Short of that, I think people are just, okay, this private credit thing really scares me. It's 1.8 trillion, and it's instead of looking, seeing, well, what happens if they just decide, you know what, we're not going to let them have the money back, and it's not going to be like 2008, where the stuff's all junk. I mean, you go over the portfolio, it blew out. There are some pieces of paper that aren't that good. You go over KKR, some pieces of paper that aren't that good. But they're not that good. They're first lien of companies that you would not want to own. They're not all Chapter 11. They're not. There are very few of them are Chapter 11. Very few of them are bankrupt. But we've decided that the whole group should be dismissed, and that's probably not right.
Well, you've got market volatility that is making a dash for cash.
Yes.
And
CoreWeave bouncing, CoreWeave bounce.
In a liquid trade, that's unnerving. That's sort of the tie between the geopolitical
Ripping.
and the private credit.
CoreWeave is ripping here. CRWV, CoreWeave. Okay, this is day 10. CoreWeave, day 10. Futures turning back up. Watch the futures. Watch hedge flows.
It's a shame because every one of these companies, other than Carlyle, is just under attack. It's like we don't know what's going to happen. But if you felt that things were going to get better, you would look at that Blackstone portfolio. You would look at the employees bought stock, and you would say, "I want to own calls on Blackstone."
Yeah. I'm going to guess you don't throw Morgan Stanley into this bucket, although it's one of the worst performers today.
I know, and I think that look, they're very good, straightforward company. And 10 picks doing it.
Okay, we got some sellers here at 67.20, 67.20.
I'm a believer in pick, totally, and I think that this is a company that, again, if you believed in a positive scenario, you would do Morgan Stanley right after you would do Goldman Sachs. And Goldman Sachs, I think, is playing this volatility. It would be it'd be amazing if they weren't doing well. It really would be amazing if they weren't doing well.
Yeah. We'll watch that. Morgan Stanley, we mentioned Gunlack's post from yesterday, Jim. Private credit, fund to funds in 26 seems to closely resemble a CDO squared in 07.
Again, these are very, I respect him immensely, but it's very easy to compare to 2008. It's very easy to say canary in a coal mine. It's very difficult to calm our viewers into remembering that even if you bought the day before the big collapse in 2008, you were even, not till 2014. And you can say, well, that's a lot of opportunity cost. But I view my job as not being a Pollyanna. I mean, like, look, I don't want to be in one of those funds. But I know sometimes that you could ride out.
Yeah, Russell, everyone is bidding on puts, worried. You can see that chart showing everything is pushed to the left, which is telling you puts are bid, meaning calls are cheap.
So therefore, are they really clowns? No. And so I really urge people to look at the portfolios of what they're selling. They're not as bad as you think. The thing that I'm worried about are the ones where they funded funds, took in money, gave it to these guys, and then into these various companies, and then didn't have a gating themselves. So now they have to go to the and that's where the nexus is up.
So Gunlack's, this reference of a fund to fund makes some sense.
Fund to funds are in a jam because I think that they pretty much promise their people liquidity. But these
Okay, Apple's still dropping off here.
I know I thought this was funny when I talked about Streetwise. Semi-liquidity. What is semi-liquidity? Well, you know, you're half pregnant, and that's it. It's going to be tough. They're one half. I mean,
Okay, you can see Oracle's got the largest changes in open interest.
But let's lump them into what the hell.
I do want to get you.
I saw some of them coming. Give us some credit.
I do want to get you on some corporate debt issuance, Jim, because Monday.
In VTS, that's one that Grover mentioned yesterday.
Was a record day.
Yeah,
What do you think that's saying?
well, I think that there are two markets. Those are all. I mean, Amazon tomorrow could say, okay, AI, we're going to do a Dorsey. We're going to fire 60,000 people. We're going to save $18 billion, whatever. They can save a huge amount of money, and you end up with a company that is. That if they went cash flow positive right here, I think you'd feel pretty good. And when I listen to Oracle, I think that they could be cash flow positive very soon in Amazon.
All right, Micron pulling back.
Or negative right now.
CoreWeave higher.
You don't read it as a batten down the hatches as the 10-year goes to 4.25 today.
And I still think that that's not so bad. And we did some stuff this morning on the Contessa Brewer this morning, which talked about how there's just people lining up to be able to buy homes. It just ticks down a little bit, but they may have to come up anyway. So I think, again, there's two economies. There's the economy that's doing quite well. And when we look at a company like Dick's, okay,
Now we're going to get to retail.
Dick's 40 was up 7. Now it's got that lousy market, but they're turning around Foot Locker. Foot Locker looks like could be turned around. By the way, I know Dollar General, everyone hated what they said, but be careful. Dollar General has a history of
Oracle higher.
flying back up after they talk. I think Dollar General, when it's down, they say 15 will be fine.
Yeah, the Dollar General comps. Traffic drove the beat, which was kind of good.
I love traffic driving beat. Thank you. That's buy not sell.
Elsewhere in retail, this lawsuit on Costco, Jim, arguing that members deserve a tariff refund of their own.
Costco was the first company to sue the president. Get them a break. Go eat some samples. They want to give them a lifetime of samples. Go right there in that shrimp.
Section 301 news yesterday, Jim, where we're going to target 16 countries, including China,
I know.
as the president.
Okay, Nvidia is a bit lower at the moment. Nvidia below the 20 MA on the 60-minute.
Kind of anticipated that. I was taken aback that they're able to do a lot of things at once. How about that?
AV's on the move. AV.
Didn't have any on these guys.
The other thing Greer said was that the EU has, I think his words were have complied with 0% of that bilateral. And so now you're talking about additional trade tensions in the face of these geopolitics.
I didn't think it was the time to do that because you want a united front against Iran. I thought that was ill-advised. An ill-advised move.
And then finally in consumer, Jim, this McDonald's $4 value meal kind of is an indicator of where at least the largest restaurant company in the world sees things going.
It just has worked. That stock is a buy. I have to tell you that I have had the $5 and I get the free French fries on Friday. I mean, that makes me feel terrific. I think that McDonald's is doing well. We had
Oracle
Roadhouse for the challenge.
having a good morning so far. Oracle.
Brazil come in because the cattle herd in our country has not expanded, and it takes a long time. They have the same gestation period as us, but yeah, in the last month they're finally down a little, 3.8. But my problem is that look, you just battle these restaurants. What their raw cost is, and they have to keep passing on what they're doing, and you just wonder at a certain point, will people just say, you know what, I'd rather go to McDonald's. Because McDonald's is really offering me
there's a look at some relief.
Yeah, coming down a little, but if you look at a longer term chart, you realize that nothing good is really happening.
I'll tell you what's moving, Jim, is Wolf. Jeffries goes to buy.
I like that.
They did say the heavy lifting is behind us.
Oracle on the move.
For the first time in a month or two.
Yeah, I mean, those of us who go there, that's where you go. I mean, Joel Anderson, welcome back. That is actually and then we decided to go Petco because my wife would say, "Gee, Jim, it's the same food at Petco. It's kind of like coffee with Smucker. Yeah, it's kind of the same coffee."
And while we're in the Staples neighborhood, Jim, this downgrade of 3 names at Wells.
Oh my God, ConAgra.
Campbell, ConAgra, General Mills, all 3 taken underweight.
That Campbell's poll was just so depressing, and yet note says that the estimates are still too high. And,
Dividends are tight.
yeah, ConAgra, I can't tell you how many times Sean Conley told me the dividend is pretty much sacrosanct. No, maybe it's not. And General Mills was always the generous Mills. I mean, they're always the best.
All right, futures continue to move lower for now.
Again, that's trouble. That's a trouble yield. This group is just, and what's incredible is and then you got Ramon LaGuardia. He comes up with a plan to be able to make it so that Frito-Lay, they cut the price. He cut the price. I mean, Ramon LaGuardia cut the price and said America deserves a break. Kaczynski cut the price.
Yeah,
You have to
you're
cut
right.
the price.
It's a huge turn.
Low
going
ticker at
from volume
minus
to price.
800.
And you have to do it. You have to recognize the American people are tired of higher pricing, and you have to adjust and pivot, and then your stock goes up.
Yeah, you do save a special place in your heart for PepsiCo. I think
Oh
relative
my
to
God! Well, because Ramon would tell me, "Look, Jim, it's going to work," and I would be skeptical because potato chips don't hit the GOP standard of approval. But he changed the bag, he changed the value, he took a hit, and America listened.
Watch bonds today as we're right at 6,700 S&P. Starts were not too bad.
Okay, a lot of positions are lower. USAR dropping off a little bit this morning. Nvidia dropping off. Netflix looking to buy some of these dips. Mosaic looking to buy this dip.
That's a win, and be careful. That win can be, it can be had.
We're back in a minute.
Oracle hanging in there. Watching Oracle. Mosaic. Mosaic also. Watching Mosaic here. Potential entry. Okay, let's see what Trace is saying at the moment. Trace, we got some fairly large positions down here being added down below. Okay, you can see this right here, 6670.
And the cost of living has become an important factor for more families over the last 3 years. And yes, we saw about a 20% increase last year. Actually, in the first 2 months of this year, we've seen the year-over-year increase at about 30%. So it's continuing to be a really important factor. And what we're working on is making it ever easier for people to ask for the help they need, which is the new product we're launching today, which we'll talk a little bit about.
So that growth rate, I was doing this in real time. A little quick math. That accelerated versus what you saw last year.
Yes.
Where are they spending? Where are those largest buckets? Last time you told me groceries, those haven't gotten any cheaper.
No, I mean, it is rent, utilities, groceries, and fuel. And that can be fuel for heating, can be fuel for your car. All of those basket of day in, day out, week in, week out expenses have become more challenging. So it's the whole
CRM,
Line of sight that's in Operation Epic 30 started February 28th. And
Salesforce.
Oil prices, that was first. That has continued. We've seen gas prices pick up pretty significantly across this country. What have you seen on the platform in the past 2 weeks during this? Have more campaigns picked up? What's the activity look like?
We haven't seen a strong trend in that area yet. It's a bit too early to see that. So we'll just have
looking for a follow through.
Not yet.
What is, this is a topic, of course, because you are the CEO of GoFundMe, but I know this is very near and dear to you. When these geopolitical tensions pick up, lots of corporations pull back. How concerned are you about that happens again here?
Do you mean in terms of investing?
In giving and helping others help themselves.
For us, our giving comes from consumers. So when people reach out for help, they're reaching out primarily to their friends, their family, their neighbors, their people in their church community, and other communities, and those people step.
Okay, Microsoft pulling back a little bit. Expect volatility. We do have negative gamma tapering off below current prices and above current prices. We're in a trough. of negative gamma, with traders bidding on puts, which means calls are cheap. If you're buying out in May or June, look for the highest open interest. In many cases, those will be like 40 deltas, 50 deltas, whatever, or maybe even 60 deltas. I would suggest looking at those and maybe do some call spreads to make them a little bit more affordable. But looking for an upside move, yes, we're negative at the moment. Markets are off 65 handles, but cooler heads prevail. Just watching hedge flows at the moment. S&P with big trades on Oracle, Tesla, the 420 strike. Tesla's pulling back at the moment. NVTS, looking for some follow through on NVTS.
And so it maintains through whatever is happening in the wider world.
How does Gen Z and millennials act differently than older generations when the news flow is coming in hot and heavy like the past 2 weeks, and it's far from favorable news?
Yeah, I mean, what we
Palantir basing at the highs at the moment, basing above 150, 151, 152, right in that zone. Palantir. Okay, CRM looks pretty good. That's from the watch list. Palantir basing up here near the 50-day. Tag the 50-day again today. Palantir. Alex Karp was on CNBC talking this morning. Made a lot of sense about the long term. Short-term volatility aside. Okay, NASDAQ 100. Got about 31 stocks advancing. About 32 stocks advancing on the Qs. We've got about 68 stocks declining. All right, breath still looks pretty bad. So we're just waiting for a change in direction here. VIX lower, VIX higher, sorry. VIX volatility picking up a bit. Bouncing again. Crude oil bouncing. Crude oil back up above 115, 116.
Let's get stuff straight. I refuse to fuel the flames of negativity. CBS, really terrific piece by Bernstein. Take it to outperform.
Oracle. Inside day, looking for it to move above the 50-day, start to break this downtrend. Volume yesterday suggests institutions were picking up shares.
If you believe that we can find a way into a positive territory, because it won't hurt you if we get in the negative, won't crush you, and if we get positive, it's part of the rip your face off.
Yeah, I gotta say, I mean, the sell side has made an effort this week to find pockets of opportunity. I wouldn't say strength.
Yes, and look, I mean, what are you going to blow out of Blackstone? All right, could Blackstone go down 10? I don't know. Look what they did. They had their employees. And my understanding is, by the way, the employees said, "Listen, our portfolio is good. We want in Blackstone." And you know what that says to me is, I'm not going to panic about Blackstone, but you know, people don't. People panic.
Now, I mean, financials are down 11 for the year, Jim. That no sector's that down that much.
No, I mean, I think that the private credits hurt them, and I think that there's a belief that ever since the president said we want to cap 10%, that's got people thinking.
The credit card.
Yeah, that he's going to go after them. I think that he.
Palantir looking for a bounce. Futures at the low. Hedge flow still pointing lower. We got this big level down here.
Saying, hey, paper tiger, don't be a paper tiger, but don't tell them your plan for heaven's sake. You do the plan, you don't tell them the plan ahead.
Really quick tonight.
Study this, momentum. Oh my God, talk about of stock that's been unbelievable. And that's involved, obviously, with next week. We've got Jensen Huang and GTC, and he's going to tell, like, look, Jensen is a humanist. And I like that.
Yeah, we look forward to that. Can't wait to see what you bring us next week, Jim. We'll see you tonight.
Yeah, hot show.
At 6 p.m. Eastern time with the down 600, a touch below 6,700.
All right, still looking for a floor here. We got negative gamma below. Okay. Nutrien, we got the May 85 calls being bought. Okay, chemicals, fertilizers working. Okay, LXU, not the football team. LXU, chemicals, fertilizers, big gap up. Yeah, that's one we mentioned a couple of weeks ago. Thank you, Corey. No position. Mosaic, I have a position in. Mosaic looking for follow through. MOS. Okay, look, it's gapping up. Volume was well above average yesterday, telling institutions. Push that back above the 50 days. Now it's above the 200-day. RSI rising. MACD stochastics turned up. Volume looks good for the last 6 trading days. Only one trading day where we had some profit taking. And that was an inside day. We followed through yesterday. Big gap up. That's what I've been looking for on Mosaic. This looks really good. Mosaic. Looking good. Fertilizers. Okay, this looks good. Looks like it's going to keep going here. Mosaic. Still consolidating. A little pennant. Okay. A pennant versus a flag. Pennant looks more like a triangle. All right. Here's your pennant. Looking for a break to the upside. Okay. Mosaic looks good. Oracle coming back in a little bit, giving you an opportunity to buy inside day. We'll see if we have more weakness. Right now, the markets are pulling back into Monday's candle. Let's see what junk bonds look like. Junk bonds did fade yesterday, fading again. So junk bonds not giving us a clear signal. Let's look at the FANG stocks. Okay. Yesterday we were talking about either we were going to get rejected at the 50-day or we're going to break through, potentially consolidate. We're getting our answer. We're pulling back a bit first. Futures turning back up. All right, I got to fill in my active trader here. Let's see, S&P 500, using some 30 deltas just so that I can follow bid, whether it's bid puts or bid calls. Have an active trader open and ready. Very helpful. You can also sell premium. Looks like we're starting to bounce.
Hello, everybody. Welcome to Morning Trade Live. I'm Sam Bartis, live from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour. It's been a very busy morning. So here is a look at what is coming up on today's show. Is market volatility due to geopolitics just going to become the new normal in the short term? We'll examine that as the Middle East conflict continues to weigh on these markets. Over the next hour, we'll have example trades trades for Lennar and Dick's Sporting Goods. Lennar reporting earnings this afternoon, and Dick's Sporting Goods is higher this morning after issuing Q4 strong numbers. But for now, let's take a look at where markets stand around half an hour into this session, because we have very much got pressure building for U.S. equities this morning. S&P 500 on the back foot to the tune of 1%. We're just holding that 6,700 mark right now. Of course, as they're very much
Futures turning up.
in these markets, given, of course, all the headlines we're tracking this morning with President Trump taking to Truth Social.
Give it a few minutes. Premiums will relax a little bit. Bitcoin starting to bounce. Bitcoin. All right, so releasing oil reserves didn't have much of an effect. Crude oil's back up near the highs. I expect it's probably going to take a few days. All right, Palantir's starting to show signs of a follow-through. Palantir, nice buy point. Palantir looking for a nice buy the dip here. Stop right underneath that low.
Contained moves when you think, relatively speaking, we've seen those wild swings in the vicinity of like.
Okay, Palantir looks like it's going to go. Palantir. I was listening to Alex Karp this morning. The dude has pretty good insight into the future. Haves and have-nots. It's a zero-sum game. Well, not necessarily. I mean, those who have the technology are going to capitalize on it, try to be the winners. Right now, everybody's focused on private credit. I should say everyone's focused on the war, but the real issue is private credit. And there's a lot of headlines that suggest that private credit could be the problem that we face even after the war, if there's some relaxation in the current downtrend. All right, S&P starting to rally. That's an American expression, not an Australian expression. Drink from a fire hose. Okay, so we got this support down here. We got this negative gamma that's just sitting here winking at price action. Hedge flows are turning back up, so that tells you what dealers are doing. They're buying a basket of stocks. Let's see what this looks like. Basket of S&P equities. This is a basket of S&P equity stocks. Okay, I don't know the exact breakdown of the number of stocks in there, but if we look at the positioning of most traders, they're very bearish, which means this has an opportunity. These stocks have an opportunity to move all the way to the right. Okay, so this is negatively positioned. Puts or bid. We're looking for some of this to start to move to the right. Okay, the odds are that that could start to happen. We're already starting to see some positioning that suggests that institutions are thinking this way, with Oracle looking at calls out in June, May, June, July, August. Tesla's lower at the moment. Palantir turning up. Netflix is looking like it wants to push higher.
We do have the situation where the United States has announced that we are going to be releasing some barrels from the strategic oil reserves here.
No follow through yet. We got some short covering. Assume just short covering for now.
120 days in order for them to fully release, looking at around 1.4 million barrels per day once we actually get this ramped up here. So we are trying to make an attempt to try to dampen down some of the prices, make sure there's enough oil flow that is out there, but it's a temporary solution. And if we do see this conflict being elongated within the Strait of Hormuz, as well as the offline nature of major producers like Saudi Arabia, Iraq, Oman, others, that's going to be a major disruption for overall energy patch, and that could actually have an impact when it comes to equities. And that's exactly what we are seeing right now.
Country by country across the globe right now, KG, everyone is trying to do what's best for their economy. Obviously, folks out in Asia having a pretty tough time. I mean, when you talk about some of those headlines we were mentioning yesterday.
Oracle pulling back from the high.
Because people have been talking
Okay, so buying the dip is better, obviously. Looking for this to get above the 50-day. I'd be looking out in June for calls, June, July, August, later in the year, December even, January. Everybody's focused on the short term, current volatility. Once that volatility releases, a lot of those puts are going to evaporate. People are going to start jumping into calls. Right now, everyone's positioned on the left side, on the bearish side of the boat. Boat's leaning to the left side. Got to counterbalance that with calls. All right, Oracle looking good here. Let me see what I want to buy here. Oracle. Oracle. Let's see. What do I have on Oracle? I have, where'd you go, Oracle? Oracle. I have January calls. Okay. January calls. I might add some January. Let me see what January looks like here at the moment. January, Oracle. Listening for high tick alerts.
So it just depends on how you look at it. Now, we have not seen a full replenishment of the SPR since President Biden drew that down in 2022.
What is
around 50% of that capacity.
What do it look like here?
Now, this drawdown.
All right, hedge flows did pop up a little bit. We're in between, though. If you can see this, in between these levels. 6,800, 6,820.
Interesting task. It probably would take the under on that. The maximum refill capacity of the flow that we can get back into the SPR is around 785,000 barrels per day. That's if everything works according to plan. And usually that does not happen here. So even if you're looking at that replenishment rate starting today, we would not refill the SPR for another 255 days. That's if we're working around the clock 7 days a week, 24/7, right? And so that might be a little bit more of a high bar, maybe a little bit more of a talking point compared to what's actually going to happen on the ground when it comes to the SPR. And then there's also some hurdles that does take place as well. Usually we refill it with domestic production. We're not a major producer when it comes to heavy sour crude. We produce about 1.1 million barrels of that on a day by day.
Still a range-bound market.
When it comes to this SPR and how to refill it, it's not as easy as you take 100 million out and by the next day you put 100 million in. It's actually easier to take oil out than it is to kind of replenish it. You also have kind of a maintenance period that you have to kind of maintain.
That's a zero date that I'm posted in the trading room just now. Calls. We're just above this 6670 level, 6670.
Obviously, with these flows, when you look at headlines about continued attacks on tankers, you've seen reports also about Indian tankers now potentially even making the dash as well because their situation is getting quite critical. You've got China now banning some exports reportedly too. Just talk us through the disruption that we're seeing on a global level and what you're paying attention to the most. Because as you point out, and as we've been talking about, it's not just oil, it's the flow of LNG and fertilizers as well.
Yeah, you are seeing a mad dash in the Asia markets, and unfortunately, a lot of these countries, or some of the smaller countries, are going to see the immediate impacts. We are already seeing a rationing taking place in some of the smaller countries. Now, if you're looking at the Asia countries that actually do have a significant amount of supply that's within their reserves, China is going to be kind of number one there, and then you're looking at Japan. But with Japan, it's going to be actually very unique because their flow rate out is actually expected to be a lot lower than what a lot of individuals are expecting. India is looking towards China in order to obtain not only oil potentially, but also looking at some of the chemicals as well, especially when you're looking at fertilizers. So China's going to be a major player. The monkey wrench in this whole thing is if China actually starts buying while we are releasing the SPR. That's exactly what happened in 2022, which kept prices elevated for a relatively long time. Let's see if they're going to act in that same manner. But this is going to kind of have an impact on the overall global supply chain as well as the global economy.
Palantir about to break out here, folks. Palantir, get your ticket before the plane takes off. Palantir about to go.
An adversary, if they're going to come to the rescue, or if they're going to really kind of hoard a lot of the reserves that they currently have right now.
Yeah, and an interesting conversation is just how Russia has been emerging also as a beneficiary in some of this, particularly when it comes to countries like India, which is just such an interesting dynamic when you think about what happened in 2022. KG, thanks so much for breaking that all down for us and trying to help us wrap our heads around this very fluid situation. I really appreciate it. Coming up, we will take a closer look at the effect Iran conflict is having on energy and equity markets and how policy decisions have impacted volatility.
Okay, ExxonMobil moving back up as well. Russell, okay. CoreWeave moving back up to the highs. So they keep buying. They keep buying. Palantir. Okay, looking like we're going to follow through here. Oracle. March. Let me see. Oracle. Let's see what May looks like. May. I'm just looking at open interest. May. There's a ton of open interest in Oracle above, really above 150. Lots of flow near 210, 200. That's in May. Let's see what June looks like. June, same thing. You got 12,000 in open interest at 165. Oracle 165 has a lot of open interest. I'd like to see more flow today. July, Oracle July. All right, a lot of open interest at 165, 170. That's probably spreads there. Looking for the flow. September. Oracle. Okay.
Like Schwab. Everything investors need, all in one place. Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now.
Invest your
Okay, S&P trying to climb. Sorry, I got the wrong symbol here.
No spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Oracle 163. Okay. 163. Okay, those Bitcoin's going. There goes Bitcoin. Bitcoin going. Bitcoin starting to go. Futures looking for a launch, looking for something to happen here with the futures. Hedge flow still rising. Okay, Oracle starting to bounce here. Palantir looking pretty good, looking for it to go. Palantir, it's at the 50-day, so there's going to be some stickiness in this area. Palantir.
Petroleum continues to climb as well. So we are seeing very much energy emerging as the big winners in recent sessions off the back of these elevated prices and this situation out in the Middle East. So we'll continue to track that. Let's move on. Joining us now is Dion Pouncil, Chairman, Hybrid Advisors. Dion, very good morning to you. I suppose being in the business of advising is pretty challenging right now. Just talk us through your thoughts this morning with all these headlines.
Yeah, thank you for having me. I think the big point is to know where you are in your financial journey. Are you looking to
Okay, S&P no follow through yet? S&P?
playing the long game? And that's what we talk to our clients at Hybrid Advisors about is first of all, knowing your risk. A lot of people will say, well, you know what?
That's nice. That's nice.
Private credit as another firm limits redemptions. And now Jeffrey Gundlach weighs in.
CoreWeave, Palantir. Palantir is trying to push to this level. Palantir. Looks like it might go. Watch Palantir here. Palantir here. Palantir. There's Palantir. Palantir. All right, trying to get above the 50 day. All right, let's see.
Actually means liquidity and you can get your money in and out. What I would say is pay attention to the flight to safety and position yourself in normal supply and demand dynamics. So looking at bonds, if you're more risk off, looking at metals. Also, if you are
Palantir.
Enthusiasts, you can be looking at this as a good time for Bitcoin and potentially the start of a bull market. The thing is, ideally, you would like to be delta neutralized so that you have the ability to be market neutral. But if I'm looking at stocks on the daily right now between the next 7 to 14 days, I would be looking at defense stocks. I will look at Lockheed Martin. I will look at consumer stocks like Costco and Walmart, things that people will pour into knowing that over the last recent emergencies of the world, these stocks have gained over time and been tried and true with defense and consumer goods going over those different opportunities.
And then how, on the flip side, do you approach the long game? Because I suppose that becomes somewhat more challenging because it's hard to know where a company or a sector or even an economy is going to be in, say, 5, 10, 15 years from now, given all the cross currents that we are currently dealing with, you know, the disruption fears, the credit risks, the geopolitics. So where do you look in that case?
Yeah, so if you're thinking bigger picture long term, right now the market is on sale. So you're looking at positioning yourself to look at different dollar cost averaging strategies where you're just buying at the same frequency at the same amount, getting you a very good entry point, especially if you're just getting into the trade and investing opportunities. This is an opportunity for you to build your long-term portfolio at good prices. Now, if you are someone who doesn't like volatility for the long route, then you can stick to the bonds. Now, if I'm looking at right now, I will be looking at metals specifically to grow over time. Gold will probably hit about $5,500 based off of the volatility that we're seeing here. And that potentially could happen over the next 3 to 6 months. So you're positioning yourself now in the metals that could potentially help you in your longer term portfolio as well.
How are you thinking about technology? Because, you know, Lizanne Saunders over at Charles Schwab has talked about how you can't be monolithic when you approach tech. And you can see that playing out in the market. I mean, the semi versus software spread, obviously that bifurcation that we've been watching, who's emerging as immune versus the vulnerable, the winners and the losers and the disruption fears. How do you play that?
Yeah, we've seen a flight out of the Mag 7. We've seen how it's also impacted the overall equity market. And so when you're heavily weighted in one sector, which most of the market has been on the technology side, now this gives you a data-driven reason to be able to start taking some of those profits and reallocate to balance the portfolio. Now, the thing is with the entire market doing all of that at the same time.
Okay, watching Palantir for a push.
A run to the downside on the equities. And then that is where you also want to be able to position yourself for the flights of safety. Now, that is for the short term. If you are trading, if you are investing, you can still look at this as an opportunity for entry points. Now,
160 call wall on Palantir.
This is also impacting the private credit markets. But a lot of people have
low tick alert -800.
Okay, low tick alert. No follow through.
Which has actually been financing and giving the startup community the capital that they needed to actually grow the companies, grow the tech, and really be able to position themselves to be able to not have to IPO and have that pressure to generate those liquidity events. So if you want private credit exposure, these are still good opportunities. While a lot of people are asking for redemptions, you'll be able to get in at quality prices. Now, you do still want to stick to the blue chip companies that are providing those private credits so that you also still minimize your volatility. But this allows you to diversify your portfolio and get exposure to different asset classes that you may not have or had good entry points when you wanted to in the past.
Okay, volatility can be your friend. I think, obviously everybody is looking at that right now, particularly on a day like this. Really appreciate it, Dion. We have to let you go. But we'll catch you next time. Dion Powell there, Chairman of Hybrid Advisors. Appreciate your time. Coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
Okay, let's see. Futures looking for higher lows. Yeah, looking for a bounce.
Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters.
Palantir. Just watching Palantir. Let's see what else is working here. Let's go back to number of stocks advancing. Palantir, the 155 is the first call wall. We're right at that level right now. 155, 160. Above 155, we could see dealers re-hedge, buying shares to push, try to push things down. Palantir gets above 155. That's the call wall. It's trying to get above it right now. 155 call wall. Let me just delineate that on the chart. 155, 155, 160 call walls.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
Palantir. So once it gets above the 155 call wall, we'll see dealers. They have the incentive to keep it below. That happens to coincide with the 50-day as well. You can see on the right. 50-day is the blue line on the daily. Palantir. Okay, let me just cover a few other things. I don't want to get focused on Palantir too much. Palantir.
We're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Okay, so no follow through yet. Puts are a little bit bid. So are the calls for now. 30, 40 deltas. S&P puts and calls are both bid at the moment. I'm just looking at the volume and price action. Not doing anything yet. Okay, we have 192 stocks advancing, so more stocks are being bought. It was like 100 stocks advancing this morning. We're almost at 200 advancing. The queues haven't changed much. Still about 32 stocks advancing out of 100. So what this is telling me right now is to just kind of chill, wait for more stocks to start advancing. Keep an eye on junk bonds to see if we can produce a wick on the bottom of the candle. So far, we're producing a wick, little wick, not much. If you recall what breadth looked like yesterday, we're getting down to extremes now where we start to see inflections. So we're getting close. We're not quite there yet. We could get down to minus 30 or lower. That lines up with fear. So if you haven't been buying anything, that's probably not a bad thing. We're waiting for good opportunities. We're watching a few things for day trades like Palantir, Oracle for longer term. Robinhood pulled back again, still basing Robinhood. CoreWeave looks like it's going to go. CoreWeave looks like it wants to go. CoreWeave, I might buy some calls actually to go with those put credits. CoreWeave, 87.
the kind of demand destruction that everybody's looking out
Let's see what
for.
CoreWeave looks like here.
The market entered this year in which we
Scanners.
thought that there was going to be a lot of productivity in the
CRWV. CoreWeave.
but what are you looking out
CoreWeave. Puts are still expensive. Not quite there. Call spreads make sense on CoreWeave. If you've sold those put credits, I'll take them off pretty soon. CoreWeave.
Specifically the fixed income markets, is that higher oil prices have the potential for raising inflation.
CoreWeave.
And if that comes to fruition, what I would expect is that we would see longer term bond yields move up a little bit. We've discussed in the past how we like to break down moves in the treasury market into expectations for the Fed funds rate, inflation expectations, and then the term premium. Right now are those inflation expectations. If you look at TIPS break-even rates, Sam, on the short end of the curve, they are elevated. They have moved up to.
All right, puts are more bid at the moment. Looks like we're going to drop here a little bit. S&P looks like it's going to drop.
If you boil it down to it, is that it likely puts a floor on how much lower
We could get down to this level here, 66.70.
Plumbed around 4% just a couple weeks ago, but I would not be surprised if that's the low for this near-term cycle, and we continue to at least move range.
Thanks for the updates, Money Magic, as always.
Yeah, I mean, the 2-year yield's hitting the high for the year, and I suppose that says something. We do have this sort of growing uneasiness in these markets, particularly when you look at global bond markets, where we have seen very much yield spiking across the board, everywhere from the UK to Germany to Australia. I think bonds have actually erased most of the gains for the year in some of those markets. I'm just wondering how you're looking at the 10-year just to touch above 420 in the US, and what that tells you about the performance here versus the rest of the world.
Yeah, so in terms of performance, we would not be surprised if bond yields or bonds post positive returns for the year. So one of the positives, if you look at kind of the positives of higher yields, is that that gives you a better entry point, a better starting yield. And over the long term, the number one contributor to total returns with fixed income is that coupon return, is that initial yield that you're likely to get. So given that yields have moved up, that actually does bode well looking forward for total returns. Obviously, prices and yields move in opposite directions. So if we continue to see yields move higher, then yes, that would be a deterrent to total returns. But we do think that there still is a place for fixed income in a portfolio because of those higher yields look to be a little bit more attractive today. And also they do provide diversification for more riskier investments. So the way we're looking at things overall is to hunker down a little bit in your fixed income portfolio. For those investors who are a little bit more conservative, Sam, we're suggesting treasuries, mortgage-backed securities, TIPS, investment-grade corporate bonds, investment-grade munis, if they fit your tax bracket, and taking credit risk cautiously.
Yeah, okay, and there's plenty of that out there at the moment. Coop, always appreciate it. Thanks so much for your thoughts this morning. Cooper Howard, their Director of Fixed Income.
Okay, S&P is still pulling back.
Research. Coming up, it's time for the morning trade. We'll take a closer look at Lennar ahead of its earnings this afternoon. Morning Trade Live. We'll be right back.
Low, ticker -8.
All right, more low ticks. Markets, puts are bid. Puts are running up right now.
Traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
All right. Palantir, looking for more upside. It's hosting a AI Pecan 9 meeting. All right.
Stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, opening bell live at the NYSE, right when it counts.
We're back on Morning Trade Live. Let's focus on Lennar. The home builder reports earnings after the close. We'll take a closer look at that coming up next with Marley. But this chart is not standing on a firm foundation. Lennar is down more than 15% this month and hit a new 52-week low at the open. So that is a very, very uncomfortable chart there. Other home builders have been weak to start the year, and Lennar has by far been hit the hardest. So that's the focus of the morning trade. Joining us for a closer look now is Marley. Very good morning to you, Marley. So for the Lennar, we've seen the charts. How low is the bar going into this report? What can we expect?
It's about as low as it could possibly be, Sam. It's a pretty battered chart. You just showed it. Expectations very low here. Analysts projecting about a 55% year-over-year decline in terms of the EPS number. They're expecting it to be about 96 cents. That's down from $2.14 in the year-ago period. Their bottom line expected to have weakened significantly during the fiscal first quarter compared with that year-ago period because of its increased incentive offerings that it's having to offer.
Palantir pulling back a little bit at the moment. Okay, markets
Also having to lower their average home sale price. That's another expectation.
markets moving lower in sympathy.
Their sales volume in an attempt to try to improve some of these numbers. With the fluctuating mortgage rate and affordability crisis environment that the housing market currently has in the U.S., Lennar chose the path of
Palantir backing off now. Palantir backing off a bit off the highs. Let's see what's working. CF Industries continues to show strength. CF Industries, big gap up. Mosaic, these fertilizer companies. Looking pretty good here. Mosaic, might add to Mosaic actually. Mosaic looking good.
Because of that lower home sales revenue with that lower average selling price, analysts expecting about
Oracle looking to add to some Oracle. Got January calls right now. CoreWeave. Stock's pulling back right now. You could get better entries if you wait a few. Most likely, the markets are pulling back. Hedge flows. All right, we're moving down to this S1 level, okay, that we identified earlier, right here, 66.70. Below that is 66.50.
Expenses are expected to be about 9.5%. That's a percent year over year. So that should weigh on margins as well. And Sam, you mentioned how low is the bar here. They've only beat estimates in one of the last 4 quarters, and I do not think that is the setup for today in terms of what I saw from the sell side.
It's a tough time for some of these home builders given the environment. Thanks so much for that, Marley. Let's trade it now with Joe Tigay, portfolio manager of the Rational Equity Alma Fund. Very good morning to you, Joe. Not a great morning for some of these home builders. It'll be the next test with Lennar's earnings. I mean, as Marley said there, you've got a challenging housing environment. Obviously, we've seen that mortgage rate ticking up once again this week. And look, margins are the big story. So how would you approach an example trade for this chart, which looks pretty tough?
Yeah, and you got to stick with the trend, in my opinion, here, just lower, and it's been a tough go of it. I think I expect more of that. There's no reason to think that it's changing anytime soon. And yes, it's been a bad environment for the home builders, but just lately, this past 2 weeks, it's been a very bad environment for stocks.
All right, looking for a bounce.
It's going to be major headwinds into this earnings event. So
okay, 66.70. 66.50. We're going to bounce here, or what are we going to do? It looks like another day where we have these hedge flows back and forth, back and forth. I think you should be looking at.
That'd be great. Of course, for the stock, I'll be limited to the premium I pay for my put spread. But just
just looking for a little more downside. Unfortunately, in Lennar, just having that on there just gives me a little bit of protection throughout everything else I own.
Okay, a good look at Lennar there. And I mean, look, it is down alongside all the other home builders as well. We know some of the incentives have
Robinhood back down into the base, so no follow through on Robinhood yet. Micron trailing off the highs, so no follow through, no release to the upside yet. Oracle also pulling back. We're seeing some option volume as institutions position further out, June, July, August, September. We're seeing options being bought, call side options being bought out in the future.
Came all the way back down below 90. Now we're back in the mid to high 90s, going higher. So just uncertainty. When's this going to end? How long is this going to last? Right now, it's doing some short-term damage, of course, to the economy. This high oil prices. I think a very steep increase past 120, maybe to 150. That could do a lot more very sharp damage. Could bring us immediately into a recession that lingers there for very long. Staying here in the below 100, 80 to 100, maybe we can get through that. It's very, very tough to do so. It might slowly grind the economy down. It might cause some stagflation. I think a sharp increase quickly brings the economy down, and of course, economic slowdown might lead to deflation, actually. So it's interesting. The two dynamics. We're caught in a bad spot right here. Oil.
All right, watching the markets still drifting lower. Markets lower. 60, 670. Going to get tested.
In fact, the SPX has just rolled over as far as that 6,700 mark is concerned. Hasn't been able to hold that this morning. Joe, always appreciate it. Thanks so much for your thoughts this morning. Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Coming up, we will take a closer look at the sectors on the move this morning and the international headlines impacting global markets as well. Morning Trade Line. We'll be right back.
Okay. Yeah, it's not gonna happen in one day. That's not gonna happen in one day. The effect won't happen in one day. But it will have an effect. I'm just sitting there watching the markets. I'm not eager to do anything. I'm not going to buy puts at the low today for certain. I am looking at potential trades to take calls further out in time. March tends to be the time where we see the markets bounce.
Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Okay.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome back to Morning Trade Live. I'm Sam Bardas, coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that have moving markets this morning. So George Sillis is joining me today. George, I've been dying to ask somebody all day, what is it with softwares that seems to outperform when we see this sort of more risk-off tone in these markets, like we saw last week?
Well, this is interesting. We talked about this for several weeks. Clearly, there's some appetite now to purchase software stocks as a whole in the group based on some valuation discounts. But there are also some lingering concerns about still what's going on with artificial intelligence displacing many of these companies' businesses. But what I've noticed is within the context.
Okay, Mosaic, watching Mosaic. These fertilizer companies are doing very well. Mosaic dipped initially. Okay. Along with CF Industries, all these are working. CF Industries, CF. I didn't think chasing this made any sense. And then yesterday, it pushed a bit higher off the 90 MA, now gapping up this morning. All right, I'm going to take a 2-minute break. I'll be right back. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday, March the 12th. Okay, let's see. Palantir backed off a bit. Palantir looking forward to breakthrough 155. It's not going to be so easy to get through 155.
It breached the 50-week moving average, which is an approximation of the 200-day moving average. Now it's nested right around the 100-week moving average. So again, for what it's worth, that is a concern, I think, underpinning what's going on exogenously in the Middle East.
Yeah, absolutely. Not to mention more red flags this morning in private credit, George. I mean, there's a long list of headlines that I could go through. Cliffwater, Morgan Stanley, Deutsche Bank, Blue Owl, you name it. I mean, no doubt some of that's weighing. But I mean, just when you talk about the ping-ponging and that violent churn that Liz Ann Saunders talks about, is there any rhyme or reason or logic or explanation? I mean, I understand you're talking about the quantitative guys, the algos, the hedge funds, but I mean, is it random or is it sort of more technical in nature as to, on which day specifically you see this outperformance v. the other?
Well, to them, it's a business and it's a game. As long as they can pick other traders' pockets, they will. I can't see, from an observational standpoint, it doesn't have a pattern really. It seems to be that there's appetite to take risk in the tech sector. I think this is important because if you look at the tech sector overall, irrespective of what's going on with oil, it's actually performing quite well.
Palantir.
Within that space, on a daily, sometimes it's an every
Okay,
other day
we'll see if
basis.
Palantir can do something today.
2 days, the hardware names were higher and the software names were down. So we're just seeing a reversal in that. So mostly it's essentially, one institution trying to pick the pocket of another, quantitative in nature. But overall, I think there's some positive accumulation. I guess what I'm trying to say within the technology sector. And again, the sensitive areas, the areas that have gained so much, it's an easy place to sell because, it's easy to sell a lot of NVIDIA or Micron stock to garner liquidity, to gain liquidity. Because again, just looking at 10-year yields higher today, that tells me that there's appetite for liquidity.
Okay, coming off the low now, S&P coming off the low.
Long duration bonds into short. So again, liquidation is occurring within the tech sector. And the other thing is too, risk spreads in the high yield market too, irrespective of the stock.
All right, I'm going to take a 2-minute break. I'll be right back.
When we say private credit, it sounds like it's sequestered into a group. It's not. Private credit is tied into the banking system. All of these assets and liabilities or balance sheets of the banks are tied together. So you can't just sequester private credit and isolate it on its own. It's not. It's tied into the tied into the broader financial system.
Yeah, no, it's good. It's a good distinction. And I think it's important to put it into context. So with that, I mean, it seems to be sort of a broad sector type of concern right now. George, really appreciate it. Thanks so much for getting us across all of that this morning. the price action overseas now, European stocks under pressure as oil was back in triple digits overnight before pairing gains. Investors in the region remain on edge amid a repricing of oil and rate expectations. European banks have had a tough week as well. JP Morgan cautioning European lenders like HSBC and Standard Chartered are among the most exposed to the Middle East conflict, potentially pressuring earnings and not helping the mood today. The Trump administration announcing new trade probes into the European Union as well as China, Japan, India, and a number of Southeast Asian economies too. BMW saying it expects earnings to be hit this year from a combination of those tariffs, higher input costs, and competition in China. The company has been trying to reduce expenses to help some of that profitability. But some good news for Tesla in China. Sales recovering in the country last month, even as government subsidies faded and people celebrated the Lunar New Year. The company reporting a 91% jump from a low base last year after a 45% drop the previous month. Tesla has continued to try to incentivize buyers with attractive financing plans, and the jump in sales comes as the broader EV market in China looked sluggish last month. But Elon Musk's cars still face competition from local rivals like BYD and NIO, which has turned profitable on record sales, currently trading down at 2.5%. Alongside its Max 7 peers today. Coming up, it's time for Inside Out. We'll take a closer look at Dick's Sporting Goods after earnings and bring you an example trade for that name when Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alice Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. We're back on Morning Trade Live. Let's take a look at some of the retail stocks that reported earnings this morning. Quite a number of them, actually. Dick's Sporting Goods is trading higher by almost 2%. Ollie's Bargain Outlet is also up 4.5%, but Dollar General is lower by 5.6%, and Build-A-Bear Workshop is also down almost 4%. So a very mixed picture across our retail earnings this morning. So a little bit of a split picture. So let's dig into some of this. Go inside out on Dick's Sporting Goods. Joining us now is Ana Garcia, who's the equity research analyst over at CFRA. Ana, thanks so much for joining us. What did you make of Dick's?
Yeah, thank you for having me. The performance was better than expected, I think. Everyone was a little bit more nervous of what was going to happen now that they have Foot Locker on board, right? But performance was great. The core business continues performing. And in fact, their comparable sales were double what they had guided for. So, and that's made up of both traffic and ticket, which is different than what we've observed across the retail space. So I think it speaks to the strength in the core business. But it's not just the core business that was performed better than expected. We also saw
A lot of volatility.
Across margins.
Palantir.
Costs came in ahead of expectations. So yeah, overall it was a good quarter, and I think overall the market is focusing on the outlook for 2026, which I think people were nervous that perhaps the outlook for Foot Locker, which they expected to be accretive to performance in 2026, was going to be below expectations. But we have heard good news on that front as well, right? Still accretive so far, and we know that Dick's tends to guide conservatively when they start the new year. So definitely possibility for upside, and we're definitely going to be keeping track of their guidance and what they have built into expectations for consumer health, especially with
CF Industries, Mosaic, these stocks are doing very well today. Mosaic, Doji for now. CF Industries higher. Market's very volatile. Hedge flows early on are giving us this sine wave pattern that we're always looking for. There's no trend here. Started to look like a trend from the open into 10 o'clock, but then we quickly reversed back down, came down to test this level down below 66.70. We haven't gotten there yet. What's Starbucks and Nike looking like? Nike. Wow, look at Nike. Haven't seen Nike this week in a long time.
And multi-physics fusion, I mean, it sounds very technologically advanced, everything. What exactly does it mean, I guess, if you can describe it in layman's terms? And, you know, we've talked about this before. Your main competitor is Cadence in this space, in most, you know, in many spaces. And so if you can sort of describe to us some differences or advantages that you see over the competition.
Yeah, if you look at the Synopsys portfolio today, we are the number one in
XLK looking better.
electronic design automation. We're the number one in what's called the interface IP, which is the connectivity between the chips. And the ANSYS brought to Synopsys the leadership position in multiphysics. What does multiphysics mean? Is, as the word states, in physics, you have to deal with thermal. How do you dissipate heat as you're building products? How to manage mechanical stress? How to manage
Starbucks. Starbucks looks a lot better. Starbucks trending.
You're doing a crash testing or any physical prototype that you need to build in order to simulate the impact of physics. We can do it through our software. So we're bringing the physics simulation into a virtual representation or digital twin to help our customers build better product faster and cheaper.
And so
Okay, you're dealing with a lot of volatility here. I mean, look at VIX, where VIX is, where crude oil is. You're going to get these big swings. That said, the market's not too bad. Crude oil back up to 117. Futures trying to make a higher low. CF Industries at the highs right now. A little profit taking. Feels a bit extended. We're looking for software to catch a bid. IGV. Looking for that to bounce. Okay. It's not going to go straight up. So the previous couple of weeks, that was institutions buying. It's relaxing a little bit. A few people's taking some profits off. Once we see the next move, it's going to test the 50-day most likely at 90. And then we can get this turn. Okay. Stocks like Microsoft should be turning as well. Microsoft just consolidating for this week. Looking for it to turn back up. RSI MACD, and stochastics are all pointing more bullish, but flattening out at the moment. S&P puts and calls, jockeying back and forth, chopping people up. Better to sell premium at the present time than buy it. Oracle still drifting a bit lower. Looking to buy some Oracle. The 170 strike is very popular. Booking.com is higher, so that's telling me what? Take a look at airlines. UAL down again today. UAL no follow through with the crude oil prices spiking back up. What are Carnival doing? Carnival Cruise Lines, CCL. That's still back down there at the low. Let's see what's actually working. CF Industries, Dow Chemical, Mosaic. These looking good. Lionel Bessel. CRM. Looks like that's going to break out. CRM's about to break out of this base. Look for a base breakout. CRM. Inverted head and shoulders on that one. Flat base. Yeah, CRM looks good. Let me see what I want to do with CRM. Where are the options positions? CRM. CRM. CF Industries still hanging out there. CF Industries looking good. CRM. $210 call.
Good Thursday morning. Welcome to Money Movers. I'm Sarah Eisen with Carl Quintanilla live from post 9 at the New York Stock Exchange. Today, oil surging again this morning after new comments from Iran's new supreme leader about keeping the Strait of Hormuz shut. A top energy trader will tell us how he's navigating all the volatility and uncertainty.
We're joined by one former State Department official who helped lead secret negotiations with Iran that produced the nuclear deal during the Obama White House. We'll hear why he says investors need to pay close attention as this war drags on.
And AI meets PE. Okay, Anthropic reportedly looking at a private equity tie-up. We'll explore why this could be a double-edged sword for the software sector.
As for markets, checking.
All right, a lot of people selling put spreads on CRM.
We did settle down pretty much the open, down about 600, and we're trying to defend 6,700 on the S&P. VIX back above 26. Watching a bunch of different things as the 10-year did get to 4.25 this morning.
Yeah, we'll see if we can get that kind of relief that we've been getting around late morning from the worst levels of the session. The S&P down worse than it was an hour ago. It went down 1.2%, but for the week it's only down 7% because we've had these rebounds. We're going to start with the latest on the war in Iran. Eamon Javers in Washington. Eamon.
Hey, Sarah, we've got these dueling statements now from the President of the United States and the new Supreme Leader of Iran. each one sort of doubling down on his existing strategy. Here's what the president said on social media a short time ago. He said, the United States is the largest oil producer in the world by far. So when oil prices go up, we make a lot of money. But a far greater interest and importance to me as president is stopping an evil empire, Iran, from having...
The evil empire. Sounds like a Star Wars episode.
I won't ever let that happen. So the president here is suggesting that high oil prices can be a good thing for the United States, and vowing to continue pressing the military action to make sure that Iran doesn't have a nuclear weapon. Meanwhile, Iran, for its part, the supreme leader, doubling down in his statement on the idea of attacking shipping in the Strait of Hormuz, saying that's Iran's leverage, and vowing revenge. The supreme leader says, we have been doing the revenge, but it is not yet complete, and the file of this revenge will remain open. And we're going to be sensitive about the blood of our children that were shed during this war, the crimes of the enemy, especially with regard to the school in Manab and other cases. So the Iranian...
I saw a video that showed an errant missile is what actually hit, not the U.S. You don't know what to believe with the media and everything that's going on. Okay, we're starting to move into the Kirby price action.
The other interesting element, Eamon, was this sort of appeal to the Gulf states to shut down U.S. bases, arguing that U.S. protection is, quote, nothing more than a lie, still clearly of the belief that they can get those elements to side with them and not us.
Yeah, look, the United States said at the beginning of this, Carl, that this was not about regime change, but as long as this goes on, you wonder if that can still be the goal, or that can still be avoided as a goal, because the idea of leaving a very wounded, very angry Iranian leadership in place, you can only imagine that if there was to be some kind of ceasefire at this point, the Iranian regime...
CF Industry is breaking out. CF is breaking out.
...against the United States, and to continue pursuit of its nuclear weapons in order to have more leverage against the United States. That would be a regime that would be looking for more leverage against the U.S., not less.
CF is breaking out.
Regime change as sort of the default option for the U.S. government here. The idea that we heard in the early days of sort of the Venezuela option of finding somebody 2 or 3 rungs down the leadership work chart who could work with the United States, that's feeling like that might be slipping away as an option as you see what the leadership is saying here. Of course, it's very unclear who's actually in control in Iran right now, what the leadership is like, and what their military capacity might be going forward.
Yeah, I think Michael Oren, the former ambassador's point on, we didn't see or hear from the new leader.
Yeah, I'd say the same thing.
Just to your point about this calling the shots and what exactly, how much of a hold they have.
Yeah, it's a really good question. We don't know. I mean, a lot of this is opaque fog of war stuff in the moment. But if you're looking for, the benign scenario in the first week was, we'll find an Iranian Delcy Rodriguez to work with, and this thing will kind of sort itself out in a couple of days. I think you kind of have to start moving that off the table and looking at, okay, what is the option for the U.S. government to get the Strait of Hormuz open? Does this involve U.S. ground forces in Iran, at least on the coast of the Strait of Hormuz, to try to secure that area? That would be a very difficult and tricky military operation. Not clear that the president wants to go that far, but at the same time, not clear that the president can simply turn this off like a spigot at this point, because even if the U.S. stops its bombing campaign, no real guarantee there, if the Iranian regime is in power, that it would stop its campaign in the Strait of Hormuz. That might be something that the president now can't control.
Right. And of course, educating the American people on what it would take to secure, say, the coastline, to your point, Eamon, is another...
Okay. CF Industries continues this move higher.
For more on the market today, let's bring in MetLife Investment Management Chief Market Strategist Drew Mattis.
Mosaic, looking good. Mosaic.
I want to get to that, Drew, but overall on the macro, Sarah mentioned Goldman raising their peak unemployment rate forecast, cutting...
Mosaic moving up the list. Mosaic.
Headline PCE near 3. How do you think this is going to affect the macro here?
the important thing to know is that most of what we're talking about is temporary impacts. So if we think about, for example, inflation, five-year inflation break-evens have gone nowhere, right? So to the extent that oil prices do feed through into higher inflation expectations and reduce consumer behavior a little bit, it's not something that's expected to last for a very long time. And then finally, one of the things I was taught was, it's not a move in oil prices, it's a sustained move in oil prices, and the key word there is sustained. So we've had a short-term blip in energy prices, yet feeling it. But if oil prices come down reasonably quickly, and they may or may not, but if they do come down relatively quickly, then the impact of this should be relatively short-lived. I don't think this will be something we'll be talking about at the end of the year.
So you don't think, even if we got something resembling a resolution, you think oil would revert? So some argue there'll be conflict. Well, my question is,
CRM looking good. CRM.
$1 higher than where they were, right? So it's a matter of the magnitude and the sustainability of that. And I think it's reasonable to assume that if we get some sort of resolution, that oil prices would go back down. Where they would go is an open guess. But I think the direction of travel would be lower than they are right now, and that would have that would mean that the negative effects from higher energy prices shouldn't be taken off of a $95 or $96 a barrel price, but something lower.
CRM.
Revisit the math in terms of the forecast.
So overall, what kind of impact?
Looking for a breakout here. CRM.
I think we're going to have a temporary hit to inflation. I think that's reasonable to assume. But the key word there is temporary.
Puts are catching a bid again. Puts on the S&P. I haven't done anything with the S&P. S&P is just chopping around here. Okay, whenever you see this sine wave back and forth, peaks to valleys, just moving sideways, no trend. Expect price action to get choppy. Best to sell premium in this kind of market, above and below support and resistance.
Do you think the bond market then is mispricing the situation, taking out cuts?
I think, yes, they're being a little too preemptive in taking out cuts. I think the long end is kind of behaving as we expected through this year. The simple fact of the matter is that there are, inflation's going to be sticking to the upside and was going to be before this situation. And so there's no real reason to expect 10-year yields to come less than below 4%. It could. I think there's probably more risk of them going higher than lower. But I don't think
CF Industries following through. Mosaic with a nice hanging man candle above the 200-day. Looking for the break, continuous break to the upside. Puts are currently bid on the S&P. Back down to support, 66.70. Looks like that's the possibility here. 66.70 right here, S&P. Looks like that's where we're headed. I'm not doing anything with the S&P right now. I could be selling premium above and below. If we do get if we get a test of this level and we start to get a bounce, maybe what was that? Was that a low tick or a high tick? I didn't catch that. It had to be a low tick. Okay, it had to be a low tick. I'm just looking at the tick right here, minus 800. Tick cumulative is still dropping.
What are you looking at? Because Bank of America put out a note this week.
What are you looking at?
They're tracking, at least 10% higher than they were last year, and actually has accelerated week to week.
They might be looking at average tax refunds. I'm looking at the aggregate numbers, and I would say Bank of America also put out a note saying that only 10% of those tax refunds were going to get spent. So, I think that we have to bear in mind that it's not just how much is coming back to any individual group, but
CRM
coming back and how likely are they to spend it once they
looking
get it.
good.
15th, right?
That's what they say. Drew,
April 15th.
Drew, thanks as always. Drew Mattis.
When we come back, the IEA's planned oil release, not enough to quell prices. Brent now back above $100 a barrel. We'll talk with one energy trader about how he suggests playing this volatility.
Of course, it's not only oil that's being impacted. Fertilizer shipments moving through the strait are being disrupted. We'll look at the move in some of those names, which again leave the S&P today, and talk about the potential ripple effect on food.
CRM looking good here. Looking like it might want to go now. CRM. Earnings. CRM. 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 Let's see. News on CRM. Anything? All right. Today is March the 12th. March the 12th. AI trade that's separating Wall Street's winners and losers. Okay. So Wall Street. 0.72 team scored hundreds of millions of dollars in gains, while a smaller firm is closing after losing money on software stocks. Tech portfolio manager at 0.72 generated hundreds of millions of dollars in investment gains in the first 2 months of the year. Salesforce and Workday. All right, CRM. CRM. Salesforce. All right, let's see.
Oh my gosh, let's do Home Code Explorer. Yes, it helps you shop, quote, and buy the right cover for you. What do you think?
All right, welcome back to Money Movers. Investors still trying to make sense of all the price action in the energy market as the Iran war enters its now 13th day. The volatility spreading beyond crude. Natural gas yesterday posted its biggest daily gain since January. This all as the U.S. gets set to release 172 million barrels from the Strategic Petroleum Reserve, just one day after the IEA said it would release 400 million barrels of oil from its own reserve. U.S. Energy Secretary Chris Wright joining CNBC earlier this morning to discuss the decision. Listen.
As we release this oil to address the short-term needs, we're doing it in swaps. So we're going to release 172 million barrels and swap it for more than 200 million barrels that'll be back in the reserve within a year. So ultimately, this is going to help us fill the reserve, but we need the oil in the short term for a short-term pain for long-term gain.
Joining us now is Skylar Capital Management CEO and head trader Bill Perkins. Bill, welcome. Is the market just telling us that it's not enough, all of these reserve releases that we're getting?
Well, I think the open question is what's the rate? The headline number is very large, but at what rate will that crude flow? You know, we have estimates of 15 million to 20 million barrels off, call it 15. The high highest rate we've ever seen is 2 million barrels per day. So the market is a little bit uncertain about whether or not that rate will be satisfactory.
But you mean, so it's not necessarily about the overall amount?
No, it's not how
Market's still fading, so not doing a whole lot at the moment. Puts are still bid. Calls are coming off the low. Salesforce beating.
I think that it was more about the statement of, the bazooka of what we're doing to fight these high prices. How sort of undersupplied do you see the market right now, given where production is overall?
Right, I guess there's some reroutes, there's some oil slipping through. I'd call it 15 million barrels a day off the market. But having a bazooka and only a pea shooter comes out, that's not going to help. We need to make sure that we have a lot of flowing crude oil to match the hole that we have.
Bill, when it comes to policy measures all around the world, I mean, people are talking about tax holidays, they're talking about export controls, price caps, the Jones Act's in the mix. Are there ideas that you think should be floating to the top first?
I think the Jones Act is a wonderful idea. It makes it a lot more friction to move natural gas and crude oil around the United States, around the world. I think all these ideas and all these mitigations are welcome. It's not as if they aren't welcome. The question is it enough? I think the cessation of hostilities and the negotiation to open up the strait and to get these facilities, which may or may not be damaged from being shut down, they've never been shut down to this extent, both natural gas and crude oil in the region. That will take time. The insurance situation, that will take time to work its way out to insure these tankers. These things will all take time, and I think that's going to be the best medicine for what's happening. And then also the markets work. Nothing cures high prices better than high prices. And so right now these high prices are signaling people to cut demand a little bit.
Right. Yeah, we heard, like, for example, from Casey's General Stores, they argued that you'd begin to see some demand destruction here on retail gas in the 5 range per gallon. Make sense?
Makes sense to me. People are, at the end of the day, these are going to be consumers with budgets. They're going to be companies with budgets. They're going to be alternatives that they'll be looking at. The invisible hand of the market, I like to call it the invisible disc, because sometimes it puts you in the face as a trader, will work as prices rise. And so the market is providing the function that does. It provides a signal to people to, hey, let's conserve, let's switch, let's reduce demand.
So what are you doing, Bill? Are you just trading in and out of this?
I'm listening to every expert on geopolitics and military analysts that I can. Ultimately, any long or short bet is a bet on how long this strait will be closed, both from a natural gas perspective and a crude oil perspective. This is not my area of expertise, Middle East politics and war. And so we've been just reading as much as we can and taking in as much information as we can to have an opinion on how long this will last. And currently, I think it's going to last a little bit longer than consensus. I don't see a 2-week solution or a 1-month solution.
Yeah, well, I mean, although you're not a Middle East expert, I'm sure you're well schooled in a distribution in the Middle East of crude and energy. I just wonder, we pointed out that the Iranians likely knew there would be policy responses like we've been talking about. And I wonder if it's your expectation that they are thinking about what happens when some of these reserves, for example, do run out.
I think they realize that these things help, but it's not enough. And their ultimate leverage is the strait. And so as long as they're going to continue to fight or be at odds with the administration, that there's no deal, no leadership change, then they are going to have maximum effort to keep that closed, because they're aware of the infrastructure upstream. They're aware of the previous historical rate that we've been able to release crude oil barrels. And this is not lost on their strategy. So once again, any type of crude oil go down is straight opening and barrels flowing. I don't think it's going to be these mitigation measures. I think it may slow the rise, but ultimately, this thing needs to get solved for energy prices.
All right, Bill. Thank you very much for joining us. Some of the color that you're seeing.
Okay. S&P still farting around down here at the low. Oracle, no follow through yet. Oracle.
Fertilizer shipments moving through the strait also being disrupted. It could eventually mean higher prices on food. Our Brandon Gomez is watching that for us today. Hey, Brandon. Hey, good morning, Carl. Yeah, that's right. More than 1/3 of the world's fertilizer passes through the Strait of Hormuz. And with traffic now largely halted, economists are warning that timing is critical, especially for fertilizers like urea, which is used to boost crop yields. It's applied early in the spring growing season, so if supply is tight, farmers could reduce application, which lowers yields for crops like corn, soybeans, wheat, and rice. Now, the wider ripple effect driving up costs for consumers. Wolf Research estimated U.S. food at home inflation could rise by roughly 2 percentage points if disruption persists, adding to the existing inflation pressure from energy. Already, urea prices.
Okay, can we get something going here? This is boring. I'm sure you're bored. I'm bored. What time is it? 11:23. Okay, so they're going to keep talking up crude oil and fertilizers, so that's fine with me. These are actionable setups. Mosaic continues to push higher here. All right, so Mosaic working. Mystery chart.
Fertilizer producers, on the other hand, benefiting from the price hikes. Mosaic, Nutrien, and CF Industries all surging higher, reflecting a rare upside for the industry, Carl. We're lucky in this country, Brandon, where we do grow a lot of our own food, but the situation's a lot more dire for countries like, say, India, which is trying to get urea from China, because a lot of these countries in Asia import almost all of their food. Yeah, look, this is a very global issue, right? And in the U.S., as you point out, a lot of our fertilizer imports do come from our neighbors south in Mexico and Canada. There is still some through the strait. You also have the fact that it's what that can be long-term, the fact that we are in a growth cycle here in the northern hemisphere, an opposite cycle down in the southern hemisphere. So if this problem does go on for as long as 6 months, say, that's when you start to get into the other side of the cycle and you start to see that even further global impact too.
Okay, Brandon, thank you very much. Some of these stocks at the very top of the market. CF Industries.
Mosaic continues.
Next, Rivian just revealing new details.
Up another 10% today. Mosaic. Looks good.
Former top advisor to the presidents Obama and Biden, a lead negotiator on the 2015 deal, why he sees a chance of a diplomatic end to the war growing increasingly unlikely. When we're back in a couple of minutes.
Nothing's really changed. They don't want Islamic rule over in Iran. And I'm just talking out loud. And the neighbors are not exactly cool with what Iran's been doing either, you know? So I don't know. It's got to change. Too much death to America. Too much threat of a nuclear weapon. Can you imagine if Iran had a nuclear weapon, what the Straits of Hormuz would be like? It would be like Armageddon for the global economy. Okay. Anyway, S&P is climbing here. S&P is climbing off the low. Finally getting a little bid here. Finally starting to get a little bid. There goes hedge flows turning back up. Okay, watch the hedge flows. If you're going to buy options, calls are bid. I would use 40 deltas, maybe. Puts are being sold off, taking profits. Okay, getting a nice little rally here off the lows. Okay. Okay. Doo-doo-doo. Okay, so this looks good. Ba-ba-ba-ba. All right, so we got a nice rally up off the low. Okay, we just ran into the 105 EMA on the 1 minute chart, Grover's 1 minute chart. Mosaic still rising. Mosaic. Okay, CrowdStrike, CoreWeave turning back up. CoreWeave looking for that to move higher as well. Bitcoin with the bounce. Bitcoin bouncing now. Bitcoin is bouncing. Doji 2 days in a row. Doji is looking for a push above 72,000. Get above the 50 days. Start to turn that 20 EMA on the 60 minute. Okay, let's take a look at Mosaic on the 60 minute. Mosaic, a little extended. Looks good though. Mosaic.
January 15th, 2027, 309 days. I know I like to send it out far, but the reality is, as a trader, most of them blow up their account because they don't give themselves enough time. I'm looking at the
Yep. That's exactly what he just said. Most traders blow out their accounts because they don't have enough time. Right now, I'm looking at June options, predominantly June or later in the year, especially for some of these call-related names. Or excuse me, some of these software-related names, tech stocks that have gotten beaten down. Looking out in June, the markets tend to bounce in March, mid-March. So we're looking for a bid at some point. The news, it's a pain in the butt, but we do have a headwind that we got to deal with. Private credit, a lot of people not really talking about private credit, so that could be a bigger problem than what we're seeing right now from crude oil problems. I mean, that could get worse too, but
Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all.
okay, let's see how many stocks are advancing now compared to this morning. We had about 100 stocks advancing. We got 175 now. We need that over 250, 300. We still got 2-to-1 down volume across the board. Q's almost 6-to-1 down volume. The SPY is 3-to-1 down volume. NASDAQ 3-to-1 down volume. New York Stock Exchange 2-to-1 down. Mosaic continues to push higher. Mosaic. Okay, if CF Industries is any indication of what we can expect from Mosaic now that it's turned the corner. Okay, once it got above the 50 days, CF Industries back here in the second week of January. It based out in February and then it took off about what, 13, 14 days ago, the Iran conflict. Once people started to realize, traders start to realize, analysts start to realize the impact of fertilizers that are sourced out of the Middle East. Here's CF Industries. So Mosaic is playing catch up right now. Okay, it moved above the 50-day yesterday on volume. Look at the volume here. That's institutions buying shares. CoreWeave looking for a push higher. Oracle coming off the low. Oracle, if you were buying the dip on Oracle, looks good.
Conflict in Iran is continuing to impact markets and the outlook for oil. Joining us now, Tom Essay, the founder of the Stebbins Report, to take a closer look at this ongoing situation. Tom, thanks for being with us today. You know, I read your most recent report. The geopolitical headlines, of course, obviously driving the markets right now, top of mind for most investors. What are some observations that you're making about how the market's performing and how investors are operating in this environment we currently have?
Yeah, Marley, thanks very much for having me on. You know, it's certainly an interesting time, and really 2026 has been an interesting year. Investors have really been bombarded by policy headlines that have caused volatility, none bigger than the current U.S.-Iran war. I think the first thing for investors to really focus on is that you have to be able to differentiate what's happening with the price of oil versus the war itself. Markets don't really care about the war. They care about the price of oil. So that makes the Strait of Hormuz the pivotal issue for this market.
All right, watching CoreWeave, trying to do something here. CoreWeave. Okay, that needs to get back to green on the day. CoreWeave. Oracle coming off the low. Oracle's coming off the low. That needs to get back to green as well. Mosaic making higher highs and higher lows. CF Industries, obviously, at the highs. Crude oil, 118.
Think about what's happened with inflation, about the cost of everything else. $100 oil is actually substantially less of a burden on the economy than it was, say, 10 or 15 years ago. So I think to really cause economic strain, we have to see oil above $150 sustainably before it really...
Okay, and let's talk about here, because we got CPI. It was mostly in line, but obviously this huge jump in oil prices not factored in. That will likely come in March. So the markets pretty much looked past the report. There was not really any...
ExxonMobil.
They're now looking ahead. How much impact do you expect there to be?
ExxonMobil still moving higher. Watch Chevron and ExxonMobil, ConocoPhillips. All of these are higher. Chevron breaking out. CVX breaking out the new all-time highs. Russell mentioned that earlier. CVX. ExxonMobil. ExxonMobil. Bollinger Band starting to open up. Okay, you want to buy in the squeeze, look for price action to explode along with volatility. Stochastics oversold. MACD turning back up. Volume starting to pick up again. ExxonMobil.
It's not just because of the geopolitical risk. In fact, really, the war is consuming all the air in the room, and reasonably so. But there are two other issues that in some way might be longer term problems for this market. The first is the private credit strain that we're seeing.
Mosaic continues.
AI anxiety replacing AI enthusiasm. All three of these are headwinds on the market. And so far, the market has proved incredibly resilient as it has been for years. But this is now a growing weight on stocks. And I think it's important for investors to realize that if the Strait of Hormuz opens up and we get oil to drop, that's not the only issue right now. Private credit is a growing problem that is not getting a ton of attention because of the war. And there's still a lot of uncertainty over AI and tech leadership.
There is, but I'm going to move us into earnings here, talk about Oracle. We've gotten some strong tech earnings, not always seen a really positive reaction in the market to some of the strong numbers we're getting, but we certainly did with Oracle. We've got Adobe coming up today. They had their 10% jump after their report. Are these strong earnings and the positive price reaction that some of these companies are getting, is that enough to offset?
Okay. NVIDIA is starting to turn the corner. NVIDIA. Shorts covering NVIDIA. Same thing with Tesla. Shorts are covering. Coming into the lunch.
Everybody kind of zeroed in on that, and now all of a sudden we have the war to sort of distract everybody. There's not a lot of debate that software companies are going to post strong earnings right now. They should be posting strong earnings. Everything's in their favor. The issue is what are these companies going to look like in 5 or 10 years? Are they going to be needed?
Hi, ticker plus 800.
Terminal value. That is a question that will not be answered by an earnings report. It's going to be answered by sort of how
High tick alert.
AI and how they
High tick alert.
And I think this is a consistent headwind with regards to software and companies like Oracle. They have been beaten sort of unmercifully over the past 6 months, so they're due for a bounce.
Okay, all the New York fangs are starting to see short covering.
Which is number one, is all this money being spent really going to yield a substantially positive ROI? And number two, how do you value companies that used to free cash flow billions of dollars and now have negative free cash flow because they're investing so much in AI?
Well, Tom, we really appreciate you being with us today to take a broad look at the conflict in the Middle East and where we may see some of this impact show up and when. Tom Essay, the founder of the Sevens Report. Coming up next, we've got Disruptors. George Tillis will bring us the news behind Ben Affleck's AI movie-making company being acquired by Netflix. That's next.
Okay, we've got a high tick alert there. S&P spiked off the low. VWAP. Back to VWAP. MACD's turned up. I am starting to pick up a bit. We'll see if we get a follow through or not.
Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out the New York Stock Exchange for a check on the markets. Welcome to Nicole Petalides, host of Opening Bell and the Watch List here on Schwab Network. Good morning to you, Nicole. We're about 2 hours into the trading day here. A sea of red, a pretty significant sea of red across the board for this Thursday. What's sticking out to you so far in the session?
I think that we still have oil front and center. That's going to be our ongoing story. So right now, you've seen oil right now at around $95 a barrel. Everybody remembers it was at 120, almost 120 earlier in the week. And that volatility in the crude play will continue because you still have everything.
Okay, NVIDIA having a nice reversal here. NVIDIA.
The new Supreme Leader, Khomeini, who's now saying that they want to keep that Strait of Hormuz closed. You're not dividing Iran. That's been thwarted. Be careful with those U.S. bases. A lot of tough talk. And also $200 barrel oil. Same time the president has, had his retaliation saying, look, we have plenty of oil here in the States. I'm paraphrasing. And we're going to stay until the job is done. In the meantime, private credit's still front and center. You have Morgan Stanley and Cliffwater capping some of the withdrawals. And that comes on the heels of the pressure
stretched they are, if they're still shopping as much and buying as much here. They beat on the top and the bottom line, but we are seeing them move lower today. So, Nicole, what specifically in the numbers is causing this move to the downside?
Yeah, the look back is good news. The look forward, not such good news. And that's really the story. And that's why you're seeing Dollar General, which has been an incredible performer. It's up 75% over 1 year. And there may also just be some profit taking on this story, too. But you are seeing folks looking for value. The end of 2025 showed 3% gain for same-store sales. That was great news. And it was for the third year in a row. And so people are there. But the outlook was somewhat downbeat and saying that same-store sales in this current quarter will be affected by some of the severe storms, even though the good news was people were, in fact, stockpiling ahead of those storms, and they have seen traffic in the stores on the rise to the tune of about 2.6.
All right, S&P continues higher now. Got a nice reversal underway. S&P coming off the low. S&P calls her bid.
Groceries, consumables, as you could imagine. But I was surprised even to read that people were, in fact, spending on seasonal home products and apparel as well. But the big picture here is that going forward, the outlook is a little bit weaker than we had expected, and the growth will slow in 4 years.
Thank you. Now it's disruptors. George Tillis, our senior markets correspondent, here with today's company. We're talking about Netflix. The streaming platform is going to acquire an AI movie-making platform that was founded by Ben Affleck. George, tell us more about this.
It's a good payday for Ben Affleck. I mean, if you look at Netflix, in fact, Marley, we're actually higher year to date as well as over the last year. It's been a pretty
Okay, nice slow follow through so far. S&P.
stock price from last June to early this month. There was a 40% decline, plus 40%, and of course on the back of the Warner Brothers deal.
Nice squeeze presently. Hedge flows need to make higher highs and higher lows. Some longer dated 6770s being sold up here and 6790s. So that's overhead resistance. No follow through yet. Got a little bit of negative gamma right overhead. We're still in this trough. If you were looking at what Brent was mentioning this morning, we're in this trough right here. Okay, right at the bottom of this trough. So as we move to the right, higher in price, negative gamma dissipates. So that's making it easier for the move to the upside. Same thing on the downside. Lack of negative volume down below, making it support a little bit more supportive. Down to about 6,600. So we're looking for an upside move. Still haven't gotten the follow through yet.
Scalable business model that they have and the fact that profits have been growing, that value really hasn't been unlocked, irrespective of the fact that it's come off the lows, which were around $76 going back to just a few weeks ago. So one of the things you'll notice too is that it hit around $100 or close to it. It's pulled back into a nice bull flag pattern formation. And right now it's respecting the 10-day moving average. So I'm going to structure a bullish trade with that 10-day moving average period or support level in mind. So I'm basically going to go out in April monthly contracts, and I'm going to buy the 95-100 call spread. So buying a $95 call, which is slightly out of the money, selling the $100 call against it. Altogether, it costs about $2.50 a share or $250 a contract. So it's bullish trade. There has to be a position at the very least gain to 97.50. That's your break even. So 1-to-1 return on risk. So you're betting 250 to earn 250, and that 250 you earn will maximize at $100 or greater by the third week of expiration in April.
All right, right now Netflix is trading slightly lower on the day, not as down as the rest of the markets are, about 0.75% at 94.17. George, we appreciate you taking us through the latest headlines on Netflix, and also for that example trade here. That's George Tillis. Coming up next is our 360 round. We're going to take a look at Dick's Sporting Goods after a strong earnings report. Stay with us.
Marcus is still sitting here trying to break through this area right at BWAP. For now, MACD has turned up.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock. That could certainly be a short to near-term catalyst. Next in investing, 1 p.m. Eastern.
Only on Schwab Network.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marlene.
ExxonMobil at the highs.
Round to take a closer look at Dick's Sporting Goods. Shares are trading marginally higher right now. After the sporting goods retailer reported better than expected earnings, the company reported revenue of $6.23 billion versus expectations looking for $6.07 billion. Also raised its annual dividend by 3%. Joining us to take a closer look at the report, Sucharita Kadali, the vice president and principal analyst at Forrester, and Mark Herman, the senior consultant research analyst at R5 Capital. Thank you both for being with us. Sucharita, let's start with you.
Okay, no follow through. S&P is still dogging it. Meanwhile, Nvidia is trying to climb back up.
It's been on an upward trend. It's been doing well given
Nvidia is trying to climb back up.
a lot of questions around how the retail industry
Okay, trying to get back above the 50-day Nvidia. Mosaic. These stocks are at highs. Little profit taking. Getting a bit extended. I would take some profits off. Yeah, Muhammad Ali, when Billy Crystal would do him. If we can manage to catch a bid here, we've got a lot of negative, a lot of seller or buyers here A lot of buyers. All these red bars are the dealer is short. Market is long, up to about 67.70. Oracle looking for more upside. Okay, that's starting to turn. Oracle could stay here for a few more days. Oracle, I'm looking for it to pop above the 50-day. Oracle, looking for it to pop above the 50-day. I'd like to trade this into year end. So once Oracle gets above the 50-day here, this should be good. Oracle. Institutions have obviously started buying shares as of yesterday. We got a nice Kirby above this level around 200, 205. Once above 205, then you got the 200-day. Oracle coming off the low, looking for Microsoft to do something too eventually. Still lagging, no follow through. For weeks now, we've been looking for Microsoft to do something. CoreWeave looking for that to get above the 50-day in the short term. ExxonMobil and the oil and gas names, these are all doing well. ConocoPhillips breaking out. Chevron, new highs. Chevron. So you can move those 195 200s or take profits. Roll 195 200s, maybe a little bit higher. Wait for a little bit higher. 195 200s, your maximum profits at 200. We're currently trading 197 and change. So you could take profits on half and maybe roll the rest out to July from June, maybe 200, 205, and just keep doing that. Take profits on half. Bitcoin, also watching Bitcoin. Watching Bitcoin for a move out of this level, still basing for the past 6 weeks. We're trying to get above the 50-day. We attempted to twice already. So once this turns the corner, 9 and 21 day turns up, we'll be looking to add to positions like MicroStrategy and Coinbase. Riot, what's that doing? Riot still sitting down here below the 200-day and the 50-day.
Change in sales based on their guidance without the same rate of change on EPS. Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision. I think what
most important things as you're making a play in a risk-defined way here going into earnings?
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, not a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, and Wall Street remains under pressure as surging oil prices and escalating tensions in the Middle East weigh on sentiment. Let's get it right into a check of your scorecard as we hit the lunch hour on Wall Street. You are looking at the S&P 500 lower by 1%. The downward sentiment being led by industrials, consumer discretionary, and communication services, but information technology is pretty close there with the downtrend. The Dow lower by more than 1%. We've got a triple-digit loss there. The Nasdaq 100 also off by more than 1%, 1.25, a touch more than that. Also triple-digit decline there on a points basis. Russell 2000 is lower by more than 1.5%. Here's the roadmap for today's show. We'll look at example option strategies for Adobe. It's got earnings due after the close of trading. It's been caught up in the SaaS apocalypse, was already under pressure ahead of that, though. Plus, the team from Lightfolio will be along with new sentiment data on Ulta Beauty ahead of its results. And Lennar is also on our radar today. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio and Joe Mazzola, head trading and derivative strategist, Charles Schwab, joining us once again for the month. All right, guys, we've got oil prices higher once again. We are sitting close to $95 a barrel as these escalations in the Middle East rattle energy markets, rattle equity markets. Tom, your thoughts?
Yeah, that's the theme that's been playing out here. Energy prices go up and equities take it on the chin, and that's what we're seeing. I think one of the key takeaways is, the S&P 500 is only 4% below its all-time highs. I would have thought that it would have been a lot lower due to the fact that we've seen this rise in oil prices up another 8.6% here today, and Brent's back above $100 a barrel. So, this theme's going to play out. The longer that it lasts, the more of an impact it's going to have. It still feels like everybody's kind of waiting for things to just turn on a dime, where crude oil goes back to $70 a barrel, and then equities are off to the races to the upside. I just don't know if that's going to play out because of the pushback that we've seen. The new supreme leader in Iran came out with some comments today, basically stating that, hey, we're going to keep the strait closed at this point to put more pain on the U.S. and the global energy markets at this point. So, yeah, there's a lot to dissect here, but if you think this is going to be just a flip of the switch where we're going to start rallying and going back into equities, I think that's far-fetched at this point as this continues to get dragged out. Now, the energy secretary said that, hey, the U.S. Navy is not going to be able to escort ships through the Straits of Hormuz until possibly at the end of the month. That's a concern
right there, as it's been basically stagnant at this point. And then you've got the 10-year yield getting back above 4.23%.
VWAP looking for it to release and push higher. Bollinger Band's tight. Watching MACD, volume, S&P. ExxonMobil breaking out. ExxonMobil.
Reserves, petroleum reserves from multiple countries opening up, and you get changing up the Jones Act to allow for movement of energy and energy products on the different coasts, and you still see crude up 8% today. So that's those don't align. And the other thing that I'm now really starting to see is you're starting to see corporate bonds yields starting to widen. That was the last thing where we were kind of pointing to and saying, well, you know what, corporate bond yields are still pretty tight, so it doesn't show that there's a lot of fear or extra supply. Well, here's the thing. Now you're starting to see more and more companies go to the bond markets looking for that supply, and there's got to be a push and pull, right? At some point, investors are going to require more for the risk that they're taking by issuing that money, and now those spreads are starting to widen. Those are one of the things that you see from the credit market when you start to see some signs of some cracking and some signs of concern. The other thing I would say is that
ExxonMobil breaking out.
Yesterday, where now you have all four of the indexes from a technical level where the 20-day moving average crossed below the 50-day moving average. So whether it's the S&P 500, the Dow, the Nasdaq, and now the Russell, all four of them are showing some of that near-term to intermediate-term weakness. But as Tom said, we're still only 4% off the all-time highs. To me, that doesn't make a lot of sense.
NYMO's at minus 81.
There's this belief that, well, since the U.S. energy market might be a little bit more insulated than what we're seeing with the rest of the world, U.S. markets are where we want to be. There's probably some truth to that, and you definitely see that in the strength of the dollar. So the dollar's been a huge rally, a huge comeback, but that's also affecting other things that, as Tom mentioned, like the 10-year yield. And so there's a lot of pressures that are pushing on the market right now. As of right now, it's holding up. But the other thing I would say, Diana, is that even with all the bounce backs that we've seen, whether it's Monday's rally, off the lows that we saw in the opening print, we still haven't gotten back above that 6,800 range and that 68 to 7,000 range that we were in for so long. That seems to be a resistance level. And if we can't get back up above that, it's not that far for us to fall maybe another 60, 70 points in the S&P 500 before we start testing those Monday lows. And if those go, well, there's more room to the downside.
Okay, so guys, investors, we know this, and strategists that I talked to have talked about how these higher energy costs could certainly reignite inflation. And then this makes the Fed's path more complicated on interest rates. We got PCE coming up tomorrow. Tom, you and I dived into the latest economic data this morning, and then CPI yesterday, which of course we know the CPI print is not going to matter. We've got PPI next week. Tom, your thoughts when you think about the macro picture?
Well, yeah, as Joe mentioned, some of the S&P 500 levels that we're looking at, 6,800 on the upside, right? We can't hold that. And then what comes next for the S&P 500, on a macro scale is that 200-day simple moving average down at 6,600. Maybe that's where markets want to go at this point. The
low ticker minus 800.
Another low tick. Okay, we're getting a spike here, and puts are starting to spike up now.
Maybe there is so much money sitting on the sidelines just waiting to buy any good news that comes out. This is a headline-driven market. You've got to take that into consideration. If it does turn around, does it hold? I think that's going to be one of the keys. We've seen that in individual names post earnings where they'll move one direction and not be able to hold maybe any gains or any losses. They quickly reverse. We're seeing that in the overall equity market too. So it's a little bit dicey here. I think one of the things you have to watch as a trader or an investor is, margin requirements. Margin levels are at, elevated. They're near record highs. If we get a break or a further break in crude oil to the upside, if we see yields get, that 10-year gets to 4.5%, 4.4%, does that start breaking some other asset classes? We're not seeing that push into the safety of gold right now. Dollars firmed up. That's kind of capped gold gains at this point. But there's some curious things going on. I think you just got to be ready for anything to happen here.
All right, let's talk retail. They're not taking center stage. If we, coming into this time period, retail would have been a clear focus for us, but they do give us some insight to how consumers are doing. So we're keeping an eye on Dollar General. Those shares are lower. Dick's Sporting Goods, those shares are higher right now. For Dollar General, the story looks like investors are a bit worried about the sales outlook, especially given its performance. That one had been a strong run. Joe, let's start with you. Your thoughts when you look across both of those retailers.
With Dollar General and Walmart and all of those kind of discounters, they had done very well with the anticipation of the trade down. But I think at some point, the lower kind of socioeconomic groups are going to just have to not consider trade down, but at some point, they're really starting to feel the pinch, and they're going to feel it at the gas pump. It takes a few weeks for it to kind of make its way into the system, and it's not. I don't think everybody's filling up the car every week, but maybe they fill it up every 2 weeks. So then the second time that they're starting to do that, that's where they're starting to notice, and I think that's going to ultimately lead to a pinch at companies like that or at retailers like that. Dick's is an interesting story because it came in better than expected, much better than expected actually, and its acquisition of Foot Locker is starting to show some fruition. They're expecting Foot Locker to generate comparable sales growth of 1 to 3%. Dick's overall is expected to generate comparable sales growth of 2 to 4%. We kind of think about that in terms of what we've been talking about with some of the other retailers, and that looks pretty darn good, relative to the expectations that we've seen with the others. I think, ultimately what it's really going to come down to is, once again, the strength of the consumer. We need to kind of keep an eye on how much of these discretionary funds are still going to be used towards purchases at stores like this, because there will be a pinch at some point.
Tom, your thoughts on these two?
Yeah, you think, take a look at Dick's Sporting Goods. Basically the chief executive came out and stated that, hey, we're done with the losses that are getting dragged down on us by the Foot Locker acquisition. So that's positive. Same-store sales were up over 3.1%. That was better than anticipated. They were expecting less than 2% growth on comparable same-store sales, so that's a positive. Came in a little bit light on guidance. The holiday shopping season was good for Dick's Sporting Goods. It seems like they're really good at executing. The stock's relatively flat. Did print up to about 207 in the pre-market after they released. So overall, pretty good report. Now, on the flip side, you look at Dollar General pulling back over 4%, but it's a big green candle on the chart. Stock's to over $10 above its lows that it hit post-earnings, so gaining some strength. Traffic was really good. Same-store sales were really good, above 4%, even though they guided a little bit softer maybe than the street anticipated. But, the inflationary pressures are driving people to some of these discount retailers. I mean, Dollar General is still up 84% over the last 12 months. So it's had a good run. This might just be some profit-taking on the less than expected guidance moving forward for this company. But, with over 20,000 outlets and fitting right into that mantra, pushing back against inflation, and now you got oil back above $95 a barrel. Inflation's not going away anytime soon, so maybe some of these discount retailers take advantage of this, like Dollar General.
NIMO minus 80, looking for a bounce over the next couple of weeks.
though, are lower today amid this broad market weakness. It's off the low, similar to the broad market. Tom, if you got in on Tesla at the beginning of the year, you are frustrated with this one. Your thoughts on Tesla?
Yeah, you might be frustrated since the beginning of the year, but if you look at it, if you got into it 12 months ago, you're up 60% in the shares. So, yeah, it's made some inroads. And this is with even decreasing EV sales across the globe in every market. Remember that. You know, this stock's not built on EV sales anymore. There's a Wall Street Journal article that came out and said, hey, their full focus is on autonomous driving and the robots moving forward. And they start ramping up production of the RoboCab or the Cybercab. And then, you know, they start rolling out in different cities by the end of the year. That's going to be where, you know, the rubber meets the road for this stock moving forward. But, you know, you still look at it for the week, the stock's relatively flat, down about 20% from those all-time highs that we saw at the end of 2025. So overall, not a bad looking chart on a 1 or 2 year chart because it has done pretty well. It needs to hang on to that 200-day simple moving average at this point. That's around 393. That's been an area of support for the stock recently.
Joe, your thoughts on this one?
You talked about being frustrated. You got in at the beginning of the year. Think about September. It's basically been stuck in a range really for, you know, that whole time. It's going on 6 months now. And the interesting thing is, even as the stock has come down, the PE hasn't come down because they're earning less. And so, you know, the multiple continues to stay high and continues to expand, and really on belief of what the cyber, the robotics, you know, all of the Elon Inc. could be. And look, I'm not betting against the man. He's done extremely well. And so I think right now investors are kind of given a bit of a pass, you know, to Elon with the idea that, you know, these things will eventually come to fruition. It's just a matter of when, right? So what we tend to see from a trading pattern with Tesla is when it gets down to these levels, it tends to be one of the top 5 buys with Wishbone clients. We talked about that in our stacks report. Once it gets back up around those 450 levels, it tends to be one of the top 5 sells. It really is something that retail likes to trade. And that is kind of really been the story of the stock. Like I said, going all the way back to September, when it pushed up above 400 for the first time, it's just really kind of vacillated between about 380 on the downside and around 500 on the upside, but really kind of stuck within a range. It's a wide range, but it's still a range regardless.
All right. Well, let's put a pin in it, guys. We've got bull versus bear coming up. The guys will get their example trades put together for Adobe. That one's been under pressure this year. It's got earnings due after the bell today. We will have more fast market after this break.
Continues to ramp higher. ExxonMobil.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Adobe's next on deck to release its quarterly results after the close of trading today. Analysts are expecting the software maker to post earnings of $5.88 per share on an adjusted basis on revenue of nearly $6.3 billion. AI disruption fears have hammered shares of Adobe amid the software sell-off this year, with some dubbed the SaaS apocalypse, adding to the malaise already around the stock.
Keep in mind, Adobe is down more than 35% on a year-over-year basis. Investors will be looking for growth in subscription revenue and commentary on how the company plans to ward off AI disruption. All right, time now for the Tug of
All
War.
right, S&P, all we're doing is chopping around in a range. All we need is a catalyst to pop it out of here one way or another, as the pretenders would say. Watch the hedge flows here. Hedge flows starting to move. All right, we'll start. High tick alert. High tick alert. Okay, hedge flows rising. Hedge flows rising. There we go. Hedge flows are rising.
That, Joe. I wonder if it does beat, if it will be treated like Oracle or if it will be treated differently. That would be very interesting to see. Tom, your thoughts?
I think Joe made a good point. If you look at the growth rates or expected revenue,
All right, we're pushing through this level right in here.
Year over year, but that's actually a decreasing number at this point. Margins have started to shrink a little bit, even though they're showing growth. Remaining performance obligations last quarter, those were up 13%, right? But 65% of that is coming due in the next 12 months. Do they get people to re-sign? This is probably out of the SaaS companies, this one might have the most risk to it, and I think the market's pricing it that way. The stock's down over 60% from those all-time highs in November of 2021. This stock almost hit $700 a share. So yeah, the bar is low, but the bar's been low for the last couple of years. And every time they report, it seems like there's more losses in the stock. Valuation is going to be key here. You look at their forward PE, it's about 11 times. That's below their historic average of over 30 times. So yeah, it's cheap, but maybe it's cheap for a reason. So if those growth rates continue to slow down, nobody's going to reward a company like that until we see a basing or a bottoming in those growth rates. And I think that's been the concern. But yeah, I mean, valuation-wise, it's one of the cheapest software stocks out there.
So is the Sassacre done? That is the question going into its results later today. Joe, let's get into it. What's your approach for your trade example today?
All right, so this kind of goes back to the steps that we normally take when we look at these trades. We want to sell premium, buy premium, strike selection, all that stuff. So first thing I did is I kind of looked at what is the implied volatility right now and where is it relative to where it's been. It makes sense when the stock sells off as much as it has. The implied volatility rank and percentile rank is high right now. It's basically in the top 80.
S&P trying to get through this level right here.
You're a premium seller. You're collecting a little bit more to a credit, which makes it a little bit more beneficial to be a seller. So now the next thing you got to do is you got to figure out direction. You don't want to be bearish or you don't want to be bullish. with the thought that if I can find a spread that I can sell, and it kind of looks at, all right, where's the relative low that we've seen? What are the expectations?
S&P pulling back in, back into the squeeze. Got excited for nothing.
That you could get a bounce. And so what I looked at actually a 2-week trade. It's the 27th expiration. So it's not this week. It's not the regular expiration of the March 20th. It's the 27th. Looking at sell the 250, 245 put vertical. You should be able to collect somewhere between $1.20 to $1.30. So let's just say it's $1.20. That means I'm risking $380 to make $120. Break even on that is going to be $248.80. Sorry, I had to do it in my head real quick. $248.80, which is interesting because that's pretty darn close to where we saw that low point put in around 245. So looking at that, I was also looking at the expected move, which is just below 7%. That's around a $16.5 move, which would, kind of given where we're at right now, or at least theoretically, keep it outside of my short strike. But you never know what's going to happen in terms of these earnings, but you're kind of weighing risk reward. And when I see implied volatility as high as it is right now, I'm looking to sell. The other thing I looked at, Diane and Tom, is I looked at the skew on these, and it's basically kind of in the middle. So you're not seeing a lot of heavy betting on the put side or the call side. Investors are kind of evenly.
Ugh, this is it's really slow day. Really slow. Oracle, no follow through either. ExxonMobil at the highs. ExxonMobil trying to go. MACD stochastics turning, looking for a break to the upside. ExxonMobil.
Case a neutral to bullish one and collect more option premium. But let's break this one down. March 27th weekly option, sell the 250 put, buy the 245 put, short $5 wide neutral to bullish put vertical, collecting roughly about $1.20 credit. The credit you collect is what you can make, $120 per spread, and as Joe mentioned, $380 in
TSSI, it looks good.
Break even down to 248.80 to the downside. So you do have that cushion to the downside. The option market pricing in about a push.
My average is still down there near 11. 1080, 11.
Expiry. It's about $28 either way. So maybe just within that one standard deviation move to the downside. But you've got a probability that short 250 strike put you're selling in this of about 71% that it'll be out of the money at expiration, which is what you want. You want that higher probability of success on this passive neutral to bullish trade here in Adobe. Joe made a good point about the technicals too. The 7-year lows on the stock are 244. It's bounced off of there. Remember, the stock has bounced about 3% so far this month alone.
Yeah, 4 months later, TSSI looks like it's finally going to get something going here.
So there's your bullish example trade here. Joe, I went something a little bit lower cost that gives you upside exposure if you think the stock's going to maybe go up that one standard deviation. I looked at a call calendar to the upside here, or put calendar to the downside, excuse me. Well, this is the bearish trade, Joe. Sorry. Going out to the March 20th monthly cycle. So 8 days to expiration. I looked at where the stock's trading now, 270, about $15 below that. The 255 strike, buy that in the March 20th monthly options, and then sell that same 255 put in 13th weekly options that expire in 1 day. Sell that same 255 put 1 week wide. Put calendar, you're paying roughly about $1.80 debit on it. That's where it's trading. There's your risk, $180 per spread. While you're pinpointing that 255 line to get the most profitability out of this strategy, you still have a nice range on this one, probably between about 240 on the downside and maybe about 270 on the upside to be potentially profitable. So while you want 255 to the stock to trade there over the next 24 hours, you still have that nice wide range to be potentially profitable. And Joe, when you look at a trade like this, we always talk about vol dispersion. Buying about a 73% implied volatility on aggregate in the March 20th options where you're buying the 255 put, selling about 156% implied volatility on aggregate.
S&P just can't get out of the way.
So that dispersion really lowers the entry
Too much of a headwind.
Yeah, well, that's why you can do that calendar spread for $1.90, right? I mean, it's on a $270 stock. That seems like it's a fairly low cost. Remember this, though. What happens after the announcement is, since this is a long Vega trade, yes, you know, the belief is that that front month crashes faster, right? They're the one that expires on Friday, but that back end's going to feel a little bit, or that back month's going to feel a little bit of that all crush as well, too. So if this thing moves down towards that 260 to 255 level, it turns out to be a really nice trade. At that point, you have the optionality of either closing the trade, rolling it, right? You can get one roll out of there as well, too. Or actually get, you can get one roll out of there as well. And at the same time, you could even turn this into a long put if you think that it's going to continue to go further, or you could, you know, you could roll down and turn it into a short put spread. That's the nice thing about the calendars, is it does give you that optionality where you can really adjust this trade if need be.
Yep, and you got some assignment risk on that short put over the next day.
TSSI, watching that one as well. TSSI coming off the low, bouncing off the low. Fill that gap from yesterday.
I'm Alex. I'm Jane. And I'm his mom. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time.
Low tick alert -800.
All right, now low ticks. Chop, chop, chop. Just can't get any kind of follow through. One direction or another right now.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex.
MACD is trying to turn on the 15-minute time frame.
Access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Landon Swan, co-founder of Blankfolio, taking a look at Ulta Beauty today. All right, Landon, curious to know how we should look at this one, especially in the context of the competitive landscape. It was a strong outperformer last year. It's continuing some gains this year. But what does the landscape look like now?
Yeah, it's been a good year for Ulta investors. I mean, as of late, there may be a little bit disappointed, maybe a 10% pullback or so. But I'll tell you, that's probably an opportunity, as I've been saying quite a bit lately. Really, the consumer is strong, especially in this holiday data that we've been getting and collecting. Generally speaking, you know, the makeup, skincare industry has been pretty strong. Not all of them have been winners, but Ulta is definitely one of them. They're not at the top of the list, they're kind of in the middle of the pack, but middle of the pack is a good place to be, considering most of them are up. when we look at Ulta on a year-over-year basis, their web data is very strong, plus 23%. As you can see, they're at the bottom of the winners, but still one of the winners. So we got a few losers in there, and some others that are maybe doing better than Ulta. But again, this is sort of a rising tide lifts most boats, as you can see. Not all of them, but most of them. And Ulta's one with that 10% pullback in the stock. I think that this could be a good opportunity for them to, moderately surprise investors with some strong data. And actually, when we look at the line chart of the data over time, it's an incredible Q4 for them. I mean, it was definitely a very strong output, and that's coming off the heels of a strong quarter last quarter. I mean, their net sales were up 13%, their comps were up 6%. Their ticket sizes were up almost 4%. And the number of tickets were up over 2%. So everything is kind of moving in the right direction here. But as you can see, this blue line's our data, and it's going to be seasonal with gifts and just more people shopping and buying around the holiday season. But that is an outsized move over this last season versus the one before it. So we like the fact that it's pulled back a little bit from 715 down to 637 or so, and we think that we could have an opportunity for a moderate beat to the upside.
Landon, this kind of chart when the stock's up over 93% over the last 12 months, that's what scares, I think, investors right now, because we've seen this multiple times where, hey, it's had a good run. Even if they report good numbers, that doesn't mean the stock's going to go higher, right? Just because of the fact that it's already had a spectacular run. And you start taking a look at some of the other retailers in this space, tariffs might impact them negatively a little bit, but at the same time, 10% pullback's great, Landon, but it's still up 93% over the last year. And
Market's still chopping people up. Hard to pick a direction right now when the markets are just consolidating. Many stocks are basing. We need to see some breakouts. Stocks like Oracle, looking for it to turn back up, but it's stuck at the 50-day. Stocks like Palantir are looking for a follow-through as well. Palantir's been basing all morning. Management has a presentation today. GE Aerospace, one of the presenters. Stocks that are making new highs, oil and gas related, ExxonMobil, ConocoPhillips, Chevron making new all-time highs. Okay, looking at stocks that are actually moving on the day. Okay, fertilizers doing well. CF Industries, Mosaic, off the highs of the day, but nice follow through, and ConocoPhillips and Mosaic, sorry.
Thank you for the shout out, Landon. I was like, oh, I know this. I mean, I know Ulta, right? I think one of the things that it's leaned into and done well is the covering both mass market and premium, because that's one of the things that has been a challenge for Sephora.
If you're frustrated with price action, join the club. Most of us are frustrated. The prices just seem to be stuck in this area, with the exception of some of these stocks that are breaking out, like CF Industries and Mosaic. Material related names, chemical related names, energy related names, those are the movers. Watch this, the top 10 on the S&P 500 most actives every day. This will give you an idea what's playing. Got Chevron making new all-time highs. American Waterworks trying to break out as well. Phillips 66. You got refiners also moving higher. Phillips 66 months ago, back in January, we're looking for this one to start going. It's up 35 to 40 points from entry levels. So there is a theme there. Looking at the Dow 30. Okay, CRM, looking for CRM to break out. Once it gets above 205, we could start to see the right side of this pattern building. Some insurance name, Travelers. We got Walmart trying to hold this level. It's below the 50-day. Coca-Cola, after a nice run up in January and February, consumer staples starting to catch the bid again. Verizon looks good. Microsoft, trying to get Microsoft out of this malaise that it's been in for the past 6 weeks, looking for that to push higher. It needs to get above 420. Once it's above 420, that'll indicate that the bulls are in control. Right now, the bears still in control as institutions continue to accumulate shares down here. It hasn't made new lows, and software way oversold. Not every company is going to be put out of business with AI. Microsoft's going to create AI agents and everything else. So they'll continue to have a nice business. I don't see them going out of business anytime soon. But it is frustrating waiting for this to do something. So I'm there with you, just waiting patiently. We got the headline risk with the war in Iran. The rhetoric just continues to escalate. Even with oil being released from the Strategic Petroleum Reserve, many countries, not just the U.S., it's not going to have an immediate impact, obviously. It's going to take a few days to filter in. Meanwhile, these stocks continue to move higher. Sector-wise, you can see what's in play: energy, utilities, and materials. Those are positive. Consumer staples. Tech is off. Okay, Palantir watching for a breakout. Palantir looking for the breakout. S&P is trying its best to move higher, but it is frustrating, to say the least.
Trade. I looked at an unbalanced call butterfly here, where I'm actually going to take in a credit on this type of strategy. This is out in the March 13th weekly cycle that expires in just one day. We're going to buy one of the out-of-the-money 660 strike call, sell two of the 665 strike calls, and then buy one of the 690 strike calls. So there's your unbalanced call butterfly here. You're going to collect a credit. We've got a credit of about $6. That's where it was trading earlier. The stock is now down at intraday lows. So the farther it moves away from this to the downside, the less credit you're going to collect.
Going to take a 5-minute break. I'll be right back.
It's currently trading about $3.50 to $4. Now, the bid-ask spreads on each one of these individual options within this strategy are really wide. So some price discovery warranted on this type of trade. Maybe the midpoint might be $3.50, $4, but you might be able to collect $5, $6 on it. So some price discovery may be warranted. But if you do collect that $6 credit, that's what you can make if the stock stays below the 660 level. Because you collect that credit, you just get to keep it. Wow, what's your risk? Your risk is above the 690 strike. That's where you've got about $1,400 in risk to the upside. Now, you see that little kicker there right at the 665 strike where you sold two options. That's where you can make the potential to make $1,100 max profitability at or near that 665 level. So you do have a little bit of a kicker even if the stock goes higher. Now, if you collect the $6 credit on it, it takes your break even up to 676 to the upside. That's about that one standard deviation that the option market's pricing in on a one-day move, and this is a one-day example trade that I brought here. So while it's neutral to bearish, you still make some more profitability if the stock goes up towards that 665 strike. What you don't want to happen is it to go above 676. That's when you start losing profitability and you start digging into losses on this type of strategy. So keep that in mind. and you'll have some assignment risk. Remember, if the stock goes up towards 665, you might have some assignment risk on those two short options also. So keep that in mind. But yeah, neutral to bearish, but you got some cushion to the upside before you start getting hurt on this one.
All right, good stuff. We have got the breakdown coming up. We're taking a look at Lennar ahead of its quarterly results. We'll have more Fast Market after this break.
Low tick alert -800.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge
Extreme low tick alert.
features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, I want to give you a check on where markets stand. We still got pressure as oil prices spike today. The S&P 500 lower by more than 1% right now. So too is the Dow Industrials. The Nasdaq 100 off by about 1 1/3%. Russell 2000, the weakest performer among the major indices today. The Russell 2000 down more than 1.5%. This as crude oil sits above $94 a barrel, though off the highs of the session. It is still spiking. Over in the housing sector, Lennar is on deck to release its quarterly numbers. Wall Street is bracing for both a decline in revenue and earnings on a year-over-year basis. As for consensus expectations, analysts are projecting the home builder will report earnings of 96 cents per share on an adjusted basis. Now, the housing market has been stuck in a rut for some time now amid affordability challenges plaguing the industry. Time now for the breakdown. For that, let's welcome in George Silla, senior markets correspondent, taking a look at Lennar today. It's been tough for this sector, George, and the expectation is, we may not see the housing market come completely out of the woods this year. And then, of course, now you've got inflation fears back in the picture. How do we look at this one?
Well, I was just looking at the chart. The stock appears to me, looks like it's hitting some new 52-week lows. So I think that's very telling, first off. The other thing is, if you look at the 3-year chart, the stock actually peaked going back to late 2024. So this has been basically a company, which is the largest home builder essentially by revenue. They generally cater to entry-level homes, which is still in high demand right now because of affordability versus some of the luxury homes out there like Toll Brothers. But again, the challenge maybe for Lennar is they don't have pricing power, and volumes have actually gone down. Now, I was just looking too at the EPS numbers. Last year, they published around $8.06, and for this year they're expecting around $6.85. So I'm using this to start off our conversation here too, is to give you an idea that when the earnings
More chop.
core bases are less than the trailing.
Okay, Palantir's trying to break out here. Palantir for the day trade. Trying to get above the 155 call wall.
96 cents, roughly speaking, is the number on adjusted basis, down 55% compared to last year where they earned around $2.14. And then, of course, sales are also expected to be down 6.83 billion versus last year where they generated 7.63, so that's down about 9.6%. So effectively, basically 50% decline in earnings, 9% decline in sales. The company basically provided already guidance for new orders estimated this quarter between 18 and 19,000, deliveries between 17 and 18,000, as well as average selling prices between 365 and 375,000. So again, these are the metrics analysts will be looking at. But I do suggest that effectively home sales gross margins are going to be a key top line benchmark from a profitability standpoint. They're expected between 15 and 16% down, around 17% last year. So all these numbers are moving down, but the stock price also may reflect that, having been down year to date around 21%, and over the last year, like I said, down the double digits, hitting some new 52-week levels.
Let me ask you this, George. So obviously the spring home buying season is in front of us, and we know guidance is always key with any company with regard to earnings. How crucial is it for Lennar, especially with that key season in front of us?
Very much. I think the new orders numbers, like I said, are going to be looked at very carefully, considering we're moving into a very favorable seasonal position for mortgages and homes. I do think that if the numbers come in ahead of estimates, that might be a positive.
More chop.
I think the other thing is incentives. Are they having to push more incentives or first-time buyer or even new buyers to incentives to get them to buy? But there also might be catalysts outside of seasonality, assuming we get some resolution in what's going on in the Middle East, which is, I think, creating a problem for long-term interest rates because the 10-year yield keeps moving higher. Some relief in that yield structure might actually provide a bounce for Lennar. Could be temporary, could be short-lived. It also could be more meaningful, assuming we move into a positive growth mode in the stock market, at least perhaps in March to April. So we'll have to see. But again, the unit back order is going to be interesting as well, because backlog is around 14,000 units, and the number of homes also last year were 85,000. So if all these numbers come in terms of guidance higher than previous, that also might be a catalyst, because even as earnings are coming down, prices, unfortunately, it's just not getting cheaper as the stock trading around 14 times earnings, because price is moving down, but so are the earnings. Historically speaking, it's around 9 times earnings multiple.
Okay, great breakdown there, great perspective on that one. Thank you, George. That's George Silas, our senior markets correspondent, with a look at Lennar ahead of its results. So let's get Tom back in here. Tom, before you get to your example trade, I know you have thoughts on this because obviously you've been closely following the challenges of the housing market. It's been very depressed. The CEO on the last earnings call has talked about the affordability crisis. I'm curious to know your thoughts before your example trade.
Yeah, that definitely hasn't gone away by any stretch of the imagination. You've got 30-year mortgage rates firming up. Actually, last week they went up to 6.2% from just under 6.1%. So that's going to be a headwind here as we go into the spring selling season, right? And you're starting to see estimates for revenue are supposed to drop basically about 10% from the year ago quarter. So that's not a positive. And George mentioned the incentives. They're trying to get away from giving buyers incentives at this point because that was hurting their margins. And that's one of the things you have to consider. Now, you look at this on a valuation basis, and we talked about it with Adobe earlier in the show. Valuations compared to historicals really low on this one. The trailing 12-month PE about 11, right? Typically, home builders don't get exploded PE ratios of above the 20 level or anything like that, but we're really low on a historical basis.
Okay, calls dropping off again. puts getting bid back and forth.
That's 3-year lows for Lennar. So this has been just a falling knife over the last year and a half or so ago. Remember, this stock was $193 in 2024, September of 2024. So it's gone down. So the bar is really low on this one. Now, they do pay a 2.15% dividend yield. If that continues to get paid, this strategy takes advantage of that. So I looked at a covered call strategy where, hey, the stock's at 3-year lows, valuation's really low. If you want to own the shares, maybe you want to create some yield against owning that stock because it's capital intensive. So for every 100 shares of stock you buy, you sell it out of the money call. I looked at selling the March 20th monthly options that expire in 8 days, sell the 98 strike call. It's out of the money by about $5 to the upside. Now, we've got a price of $92.80 on here. It's currently trading about $91.50 because the stock has pulled back to session lows. So remember, you're buying the stock too in this type of strategy. So what the stock does is going to negatively or positively impact the price on these. Now, if you pay that $92.80 for this or $91.50 for it, that's going to be your risk, over $9,000 per spread because you own the stock and it could go to zero. Out of your own possibility, but it could happen. So keep that in mind. And it's also your break even. So you're buying the shares, but you're buying them at a discount because you sold that out of the money call to the upside. So that reduces that break even by the stock price minus what you collected on it. Now, you do have some assignment risk. You get your stock taken away if the stock rallies above 98, or you could start to adjust or roll that short call also. That creates credits. But this is a longer term type strategy where, hey, I'm creating yield by collecting the dividend if it continues to get paid, and I can continue to roll or adjust that short call on a week-to-week or month-to-month basis here in Lennar.
Palantir looking to get above 155. Dealers have an incentive to keep this below.
Stay with us. You've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you with unlimited.
Chevron continues its ramp higher or romp higher, depending on how you want to look at it. Chevron. Okay, looking for Palantir to go. Looking for a move in Palantir.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family. Wait. Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really
Okay, AVAV going.
Whatever have makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at SchwabNetwork.com. Welcome to Next Gen Investing. I'm Jenny Horn. Let's check in on markets, how we're faring, of course, now at the noon hour here in Chicagoland, as we've seen continual pressure today, really led by some of the volatility that we are seeing, frankly, of course, from the Middle East, as we are lower in all four of our major averages today, with losses.
All right, Mosaic. Okay, moving back towards the highs of the day. Mosaic. Moving back to the highs of the day. CF Industries. CF ditto. Tesla off the low. Finally, Tesla. Since about 10:30, Tesla's just been grinding higher. Tesla grinding higher. S&P is just chopping people up. Palantir trying to get above 155. S&P is just going nowhere with the threat of dropping off. You can see the daily over here on the right, testing that Monday low. What time is it? 1:02. Completely missed halftime report today. Anything good on halftime report today? They have nothing better to talk about. Come on. Let's talk some stocks. Let's talk stocks. Let's talk setups. Watching oil prices and stock prices for big names like ConocoPhillips, Chevron making new highs, and ExxonMobil all moving higher, along with fertilizers. Okay, Microsoft trying to pop here. Microsoft moving higher.
that are hard to root out. And we've seen that play out in Russia and Ukraine over the past several years. The drones on the battlefield really change the calculus in terms of what you can do with actual.
Microsoft looking better, holding up very well above the 21 day. Microsoft, it's just a matter of time. This one's going to go. We'll look back on this and say, yeah, remember that base back in February, March?
Hey, Kelly, so with the strait still impassable, Gulf nations are turning to other export routes to the extent possible, including Saudi Arabia's east-west pipeline with delivery in Yanbu. Exports there are up to 2.8 million barrels per day. That's up from 1.2 at the start of the year. That's according to Kepler.
Excuse me.
There at 4.5 million barrels. Now, there's also Fujairah over here in the UAE, just south of the strait. Exports there risen to 1.94 million barrels per day, up from 993,000 at the start of the year. Now, both of these sites are not without risks. We did previously see Houthis attack ships down here in the Bab el-Mandab Strait, also another choke point for global oil, and both are also within reach of Iran. But the bigger picture here is that this rerouting helps, but it doesn't. The same with the IEA's historic release of 400 million barrels. It buys time, but it is not a long-term solution. Now, we have started to see the futures curve come up. Now, prior to the war, Brent for delivery back in October was trading around the $70 mark. Now it's up to $83, of course, still short of the 99 where we are right now. But those tail prices are starting to come up now. Kelly?
So, Pippa, one more time, the other ways they're routing supply are through that pipe. Tell me that one more time.
Yeah, so we have the east-west pipeline in Saudi Arabia to Yanbu. If we can get that map up here. And then we also have Fujairah. And so they are both trying. Here we go. There is Yanbu, and there
Microsoft trying to lift a bit more.
within range of an Iranian attack. And so that
Google's starting to lift. Amazon.
increase outputs at Yanbu, but it does remain a risk that if you then increase capabilities at both of those sites, they also then kind of become sitting ducks in terms of potential attacks
And targets. All right, Pippa, thank you. Pippa Stevens. Now, with the Strait of Hormuz still effectively closed, the stakes for global markets are rising.
All right, Google and Amazon are lifting off the low. Netflix, Nvidia, Tesla. Microsoft high of the day. Looking for a pop through this area. Would love to get through to 420. Microsoft needs to clear 420.
In the near term, I think the market is not reacting enough because there is a very large percent probability that it does last quite long. And so I think in the near term, the markets are too complacent. Even the oil markets that you're referring to, the spot price has gone up today. I don't think enough. I think the prices need to get to 120, 130 for the crisis to
Okay,
end.
Amazon.
What I would say to you is that I'm more short-term concerned about the complacency.
Amazon bidders going on. Amazon bidders coming in off the low here. Amazon. We'll see how far this goes. Amazon.
In order for them to maintain the closure of the straits. So the U.S. is going to shift into a punitive air campaign. I mean, President Trump basically said it. He said he's going to rain death, fire, and fury on Iran, and they will do that. And so, anybody who thinks that the Iranians can do this for 6 months is basically making an assessment that this regime is willing with effectively turning the country into a parking lot over those 6 months.
Well, I mean, what other choice? When you listen, we're all hearing these statements from the Iranians. What would be a sign to you that despite the rhetoric, they were looking for something behind the scenes to de-escalate the situation?
Well, first of all, they're talking behind the scenes to a slew of countries. Second of all, they haven't been clear on the closure of the straits for the past several days. They were equivocated. They said if you fax confirmation of Israeli and American ambassadors being ejected from the country, we'll let your ships through. We also have confirmation, although it's not completely confirmed, at least I don't know if it is, that some Indian flagged tankers have gone through. It just doesn't seem to me like they're in it for the long haul. Also, of course, they have to present as if they are.
Just like President Trump used to talk about regime change.
Futures still chopping around,
That narrative from the U.S. side has changed.
expecting range-bound action.
It is in their interest to suggest they're willing to do this for months. But there's another question too that I have, which is that why does everybody pretend like this has never happened? You know, this actually did happen in the 1980s. We had tanker wars between Iraq and Iran. And eventually, yes, the U.S. Navy, but also it was joined in that effort by many other countries, even the Soviets participated, did clear the Straits of Mines and did put in a naval escort mission. So the question to me is really this. There's like a mathematical equation here. How much pain is Iran willing to tolerate from a punitive air campaign, multiplied by a coefficient of the ability of the U.S. and the rest of the world to clear the straits over the next month, and then probably multiplied by some other coefficient of how many reserves does the world have? How much time can it buy? In the 1970s and 1980s, we didn't have as plentiful global reserves. I mean, one of the reasons we have them is because of what happened in the 70s. So, Iran would basically have to endure extreme pain from a punitive air campaign by the U.S. longer than those reserves can give the rest of the world time to clear the straits.
And you also think that watching the oil price like 120, 130, maybe you're using Brent as the proxy, but increasingly it almost doesn't matter.
Was reading about one of the elites in Iran opened up a bank, gave citizens of Iran very high interest rates, took all that money, put it into a failed mall that's gone belly up, and then the bank fails. I can't imagine how they're going to finance everything that's going on. So they take everybody's money to finance whatever they're doing. It's just crazy. Fingers crossed for the Iranian people.
Considerable arsenals as well. Many of the viewers here will probably snicker at my next comment, but France is sending 8 vessels to the region, including its nuclear-powered aircraft carrier that will significantly increase air assets in the region, and 2 helicopter carriers that, at least as far as I'm concerned, are the most advanced in the world. Yes, even more advanced than what the U.S. has. So that is a good example of how a country, France, is contributing. Over the next month, you will have a much larger international presence that will absolutely clear the straits. And so from an Iranian perspective, you're kind of in a bind here. You're about to face punitive attacks from President Trump. And on the other hand, this international flotilla at some point will get to a point where it can get shipping through the straits, as it did in the 1980s during the tanker wars. And so what is the interest in facing those very brutal punitive attacks during the duration of this? So yes, I do think Iranians have an interest in negotiating as well, but they also have an interest in making sure that we're all very alarmed and that they sound very scared.
You know, I love the formula. I think we should actually try to do something where we really spell that out.
S&P has gone nowhere.
Chris Baker, who's Marsh's global head of logistics, marine, and cargo, yesterday, he said exactly what you're saying. He said, because for them, the insurance industry is not really an insurance issue right now. He said, we need multinational flotillas. So it's interesting to hear you say the exact same thing right now. Marco, thanks for your time. Appreciate it. Marco Papich joining us from BCA Research. Want to get to the 30-year bond auction with the way the yields have been behaving amid this conflict. Rick Santelli has the action at the CME. Rick, how'd it go?
Well, it went pretty well. Definitely best of breed. You know, 3-year was a D+, 10-year was a C-. The 30-year, drum roll, please, a B as in boy. Not a bad auction. 22 billion reopened 30, so 29-year, 11-month security. The yield, 4.871, which was about a half a basis point lower than the when issued market. Lower yield, higher price. Government's a seller. That's a good thing. So all the metrics were at or slightly above 10 auction average. It priced well. I give it a B as in boy. Look at the yield curve today. We have up 7 basis points on a 2. We're actually down a basis point on a 30. Why? Well, we heard our guest talk about probabilities of war. In my opinion, about as accurate as the probabilities of Fed fund futures. But nonetheless, We see that they have gone down in terms of easing almost every day this week, especially from yesterday to today. What's going on in the short end is all about the coverage of inflation on this conflict and how it's affecting markets. Really is getting to be a loud mouthpiece, and investors are somewhat
Market's just sitting here, gonna make a decision what it's gonna do in the next hour or so.
close enough attention. But we really want to pay attention to the yield curve. It's given us some good clues, especially in front of Fed meetings. And ultimately, what we want to watch is how European yields continue to move. Because should the 10-year, for example, close here, be the highest yield close since February 4th. But yet you look at what's going on in the UK and Europe, their 10-year and longer maturities go way back further in history in terms of how high the yields have moved.
To be in right now with energy prices. Rick, thank you very much. We've got a news alert out of Washington. Emily Wilkins has the story. Emily, what's happening?
Hey, Kelly. Well, OpenAI's Sam Altman is on the Hill today meeting with lawmakers. I got the chance just to very quickly catch up with him as he was walking to a meeting. I asked him about what's going on with the Department of the Defense and, of course, Anthropic, OpenAI, and the contracts. What Altman told me is that it's very important to support the United States government and the democratic process. He said that obviously we have disagreements on some things, that we don't think SCRs are a good idea, but we think that the country needs the ability to make decisions about how the most important things in the country are going to work. I then asked him about what he was looking for on the Hill today. Remember, Congress has talked a bit last year about preempting state AI laws. Listen to what he told me.
Today, it's mostly been about economics, jobs, those sorts of things. We have not gotten on that topic so far.
Got it.
Today, but we'll see what else comes up.
Anything else that you're expecting from Congress in terms of AI and legislation and what you're looking for from them?
I mean, certainly the economic impact of jobs are going to be a huge topic.
Got it.
Thank you.
That was Altman as he was going into the office of Senator Brian Schatz. I had the chance to catch up with Senator Schatz when he left the office. He told me that they had discussed the Department of Defense and the contracts. He said that he did have some concerns with how things were being handled by Defense Secretary Pete Hegseth. When I asked him if OpenAI, if he felt confident about them having a contract with the Department of Defense, he said that it remains to be seen. He is now meeting with Senator Mark Kelly. We should note both Senator Kelly, Senator Schatz, both Democrats, both individuals who are very tuned in on AI as well as national security. Kelly?
All right, Emily, for now, thanks very much. Appreciate that. Emily Wilkins. Speaking of defense,
Microsoft pulling back in now.
rhetoric from Iran's new leader. The defense stocks today are not only down 3%, they're on track for their
I would chill. Unless you're getting really good entries. I would chill on some of these names. Looking for more longer term out in June, July. Looking for that change in direction. We need a catalyst. It's just not there.
to be able to realize it. So I asked him 13 days into Operation Epic Fury for his update and assessment of that conflict in Iran right now.
I think we're having great success in the operation. You know, my focus even before these operations has been ensuring that we've got a defense industrial base that can support any conflict in the future. As you know, we rolled out some deals in the last 2 months to triple or quadruple production of some of our critical munitions. I think, you know, we're getting ahead of the need and the growth that the defense industrial base requires in order for us to secure our future. And so, as far as the operation is going, I think we're doing well, really well.
And I just want to get to some of those deals and what that means for the defense industrial base. But just first, because this has been the question, is does the military have what they need? There's missiles and munitions or other weapon systems right now, especially if we were to see this become a prolonged and protracted conflict.
Well, I think the best person to ask on that is Chairman Dan Kane, and he said very clearly last week, we have what we need. And my focus, as I mentioned, is just on ensuring that we've got an industrial base that can supply that for the future. These innovative deals and the acquisition transformation that President Trump and Secretary Hegseth have driven the department towards is ensuring that we've got a system that can get industry engaged to make their own investments and bring innovation from industry into the Pentagon and put it in the hands of the warfighter.
Under your purview also is foreign military sales. So just given the fact that there is this focus on stockpiles right now of weapons with this conflict playing out in Iran, South Korea over the weekend, for example, very vocal about the fact that they're seeing parts of one of their THAAD systems being repurposed to Iran. How much of that is actually happening in real time?
Well, we're constantly kind of evaluating and reviewing where our foreign military sales allocations are going. Right now, we're focused on ensuring that our allies and partners that are in the fight have what they need, as well as having what we need. But it's a constant process for us to look at where do we have the ability to transfer the weapons to the greatest point of need.
What do you see as the pain points or pressure points still when we talk about supply chain and defense industrial base?
I think we're making great investments under President Trump's leadership to repatriate the critical minerals industry, everything from mines to processing to magnets, to ensure that these raw materials.
Intel, we had 3 days up on Intel. It's back down to the 50-day moving average. Intel seeing a buyer of 3,000 August 50 calls. Enphase,
Which is, I think, almost 3 times what the previous administration
looking good.
over 4 years, to ensure that we're bringing back that capability to the U.S. so we have a resilient supply chain to support.
And so what's interesting is that over the last couple of days, we've had some reports that the Pentagon is hiring investment bankers as well to do more deals and to deploy what could be hundreds of billions of dollars in capital as well. He says the numbers that are being reported are questionable, but yes, they are hiring investment bankers and other finance folks and other experts in other areas of industry as well, as they do think about this entire process very differently now. Kelly, bottom line here, expect more deals in the defense industry with this administration, and also, as we saw with L3Harris, a push for more competition, including through possibly more deconsolidation. So we'll see how all of this plays out. You can see that whole interview with Undersecretary Duffy on CNBC.com. That'll be up in just a little bit on the website.
Yeah, and I understand why there's a lot of excitement in the defense space, but also some skittishness perhaps around what exactly that will look like. Morgan, thanks for bringing that to us. Appreciate it. Morgan Brennan. Coming up, JP Morgan CEO Jamie Dimon warning about the rising threat of cyber attacks on the show just about a week ago. Now it seems we have our first major digital assault since the start of the Iran war. Passage coming up.
This is The Exchange on CNBC.
If you have any recordings that maybe Lee Star sent you, I'm collecting a bunch. That was from Lee Star to Mondo. All right. One of our members that passed away last year. Unfortunately. Oh, you'll hear his name mentioned from time to time.
We have this confluence kind of close to our trend line as well, so that when you have these confluences of multiple factors converging toward each other, those stand out as potential breakout areas. So RSI, we can see
S&P, nothing going here. Still got a big squeeze. Watch that MACD.
And then we have this area here, 655 to about 700 roughly. So those would be the potential.
Want to see MACD turning up? If you're taking a long, you want to see it turn down. If you're taking a short, MACD. This is a 10-minute time frame. Netflix pushing a bit higher. A little short covering during lunch. Not much. We're not getting much out of it at this point. Broadcom grinding a bit higher. Broadcom at 338. Amazon trying to make higher highs, higher lows. Same with Google.
Type of trade here in the form of a call butterfly. +1 April 17th, 660, 690, 720 call butterfly and a $4 debit here. So this butterfly has the two longer legs of the trade here spread out a little bit more to give us a wider general area of profitability here. So this would be reflecting the relatively higher debit pay. So if you wanted to customize it, there's many other ways you could do that. But this would be a trade looking for a big upshoot recently in the next month or so after this earnings event here. Break even 663 and 717, 4 and 12.6% to the upside respectively here. Expected move about 12%. So the top edge of this trade here, where it would sink back into unprofitability, lines up pretty closely with those highs that we identified.
Futures just back and forth, back and forth. We're catching a little bit of a bid in Tesla, Netflix, Google, Broadcom. Top stocks on the NASDAQ 100, CF Industries, Mosaic. Those are number 1 and 2. Dow Chemical, number 3. LyondellBasell, number 4. All of these chemical related or fertilizers. Occidental Petroleum is number 5. Still looking for Palantir to break out.
Some new piece of technology, AI, of course, in this case, is a severe disruptor here. But perhaps the thinking now is that maybe this sector has been a bit too beaten up, and we can see that, like many other names here, SentinelOne seems to have bottomed out for now. We seem to have established a bit of a foothold here between about 1240 to 1270 roughly here. Our extreme close came in here 1224. So now we could see one more encouraging sign for the bulls would be that our trend line that began here with these highs near 2140, connecting these subsequent high points, has been broken at this juncture here. So now we have managed to hang on above this area. So that provides us now with a supportive identifying line. So if we do start to slip back after earnings and we move lower, that could be a line to watch out for potential support. Horizontal levels to consider, we can see here that we had a series of highs near about 1450, a series of lows. That's about where we topped out recently, a gap around 15, and then 1550 backtracking all the way here around. That's where we saw some lows here and a couple more times here, and then the highs. So I'm trying to give more of the general rounder numbers here, so it would not be quite as granular if you were to look.
Oracle still graveling into the gap. Oracle drifting down into the gap now.
We have started to improve somewhat here in terms of our trajectory. Price has pushed above our two shorter term ones, but for now, stuck at our 63-day EMA in gold. That comes in at 14.
TSSI is at the high of the day. TSSI at the high of the day. 60-minute is bullish. Stop underneath $11 more or less. About $1 stop. If you're interested, TSSI. Can we see $2 upside from here? Probably. Probably could see the highs. Okay, I need to get this. Yeah, I knew that. Yep.
means that maybe we're at the point where things can start to turn around.
Watching TSSI.
Starting to dissipate here. So longer term traded move in this sector.
AVAB, that's also catching a bid.
So we'll be definitely exciting to get some of these earnings moves and, of course, some more of their fundamental updates when they release this afternoon. But so appreciated you, Kat, our chart master today and every day for all the technical setup. Now, coming up next, we'll dive into FOMO. Today, we are previewing one of the big guys that's still left. That's Adobe, with earnings out after the close today, and a lot to prove for another day that's been beaten down by the broader trends we're seeing in software. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npedalides and connect with me, Nicole Pedalides, on LinkedIn, Facebook, and Instagram. Live from Chicago, this is Trading.
TSSI, you can get 2 for 1 here. You can see 14 again.
Investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Welcome back to Next Gen Investing. It's now time for FOMO, and today we are previewing one of the big names that's reporting after the close. That's Adobe, which has seen definitely some broad weakness attached to all of the pressure we've seen weigh on these software as a service names. So joining us now is Sam Badas, host for Schwab Network, for some more insight on
Yeah, I would agree with you, Money. Totally agree with you. 100%. Okay, what's Intel doing? Intel's still drifting off of the last 3 days up.
some of the other companies coming in and eating Adobe's lunch here, because you've got to, I suppose, acknowledge that while it has been very much a victim, as you say, of the sell-off that we've seen and the most recent so-called apocalypse, I mean, these fears had been around for a name like Adobe, even sort of prior to the more recent sort of indiscriminative type of selling that we've seen across this sector. So obviously we have seen the valuation very much correct dramatically. It's been a big underperformer across the space here, worse than the bunch itself, even though they all had a bit of a haircut here. These are the numbers as far as the expectations. Adjusted EPS of $5.88 on revenue of $6.28 billion. But it really goes beyond that. As I said, and you pointed out as well, it's more about the nuance and the narrative here. They need to show some evidence as far as the analysts are expecting of some resilience and stability here. Probably as far as some have been saying not going to be enough to, I suppose, dissuade or disprove the disruption fears out there at the moment. They have been getting a hit from a number of angles. Obviously, you have the low-cost providers, those like the price-sensitive consumers, the educators, for instance, and obviously younger users, etc. But also, on the other hand, the enterprise under threat from more of the end-to-end solutions that bypass these traditional editing tools as well. So it's been a bit of a double whammy for this company. So you really want to see the strength of their moat. And I think that's going to be really important as far as the commentary and the core. How deep is it? Does it have the proprietary data? Because that's really been seen as how you differentiate yourself from those who are more immune and those who are more vulnerable in this entire sort of phase that we're in at the moment. And the view is out there is that maybe it's not in the strongest position here, but let's see. You mentioned some of the sell-side notes going into this. We've had mixed views, you could say. I mean, there are still those who are relatively bullish. You had a note out from Barclays recently, actually lowering the price target but keeping an overweight rating on the shares ahead of this report card.
They're encouraged by the expectation of $460 million in Q1 net new annual recurring revenue and thinks that its estimate is feasible from a tiering contribution and growing generative credit usage. But then you had the folks over at Oppenheimer who recently turned less bullish. So they actually downgraded Adobe to perform from outperform. And I think their note was really interesting. They had previously been more bullish on Adobe, as it had expected the AI business momentum to reinvigorate growth in its digital media business, but they say that this just didn't play out as they had previously expected, and that's visible with digital media growth decelerating. Adobe has had good momentum, near-term opportunities. It's a cheap stock, they say. However, challenging operating environment during the AI technology transition, uninspiring and decelerating top-line growth, inconsistent execution with product cycles, and durability concerns about that moat. Remember, that's what I mentioned as well. Lackluster investor interest for owning software names, and one year-over-year operating margin guidance in fiscal year 2026 will likely weigh negatively, they say, on sentiment and the opportunities this year. So that's why they turned less bullish. You've had the folks over at HSBC going into this as well last month, reiterating a hold rating on the shares. So they're still sitting on the sidelines. They're waiting to see how things play out here. They've been talking about the competitive risks in the medium to long term, and they really stem from AI-powered tools who pose a threat to commoditizing the business core creative franchise. So very mixed coming from the analysts as we go into this. I mean, it's not all bearish. I think it's suffice to say and fair to point that out when we have very much seen, this dramatic correction in the stock, but we've seen it across the board. So a lot of tests, you could say, Jenny, for software lately, and Adobe's obviously going to be the next test for this space. Does tonight answer the question, though? I think that is really the big focus for the street. I heard one trader here today talking about how what's likely to happen tonight is that the earnings will be good. They'll look okay as far as the numbers because they have got a track record of holding up as far as the estimates are concerned, but maybe not enough to dismiss the concerns about AI eating this company's lunch. No signs of that happening yet. I think that's important to highlight. But the expectation is the stock doesn't perhaps do much tonight, while a lot of these questions remain sort of hovering around this particular name, Jenny.
At the center of a lot of debates, and I was reading some of the similar commentary from the sell side, where there's the thinking that, hey, I mean, we've seen shares now kind of collapse from peaking out years ago, and now, of course, trading at a relatively lower multiple. I mean, this name trades at a forward PE of like 11 times. That's cheap for even like any industry, not even just for tech. But also that there's the thinking of like, there's a reason we've repriced this substantially. They could erase their competitive moat with the entrance of AI. And I will say, I've used Firefly. I'm like well versed in their creative suite, and I still think there's nothing truly like. Maybe this is me sounding like very old here. I don't think there's anything that can truly duplicate like having that skill, that talent. But also, it's a product that has to appeal to the masses, and that's where I do think enterprise and various corporate spend is huge. But it's also about that perception. Is this worth the subscription cost?
That's right. And can they maintain that sort of premium angle to it? I mean, I think, you really hit the nail on the head there, Jenny, because this is obviously a situation where we're dealing with a sector that is under threat from AI, basically being able to do things more efficiently and more cheaply, more cost effectively. So I think, obviously they do need to put up a very convincing argument here, and as I mentioned, that's why it's more about the narrative. But as you mentioned, I mean, obviously with some of these valuations being decimated, I mean, you're right. I mean, we have seen some of these valuations for some of these tech companies, particularly in the business of softwares, basically seeing their valuations come up so much as far as those multiples are concerned that they've actually intersected with those of consumer staples companies. So they've been kissing, if you look at a chart, and that goes to show how some of these investors are actually valuing some of these customers that are on, stocks that are on par with some of the more boring sort of everyday names that we talk about in consumer staples. So it's really important, obviously, to put it in perspective, and you're right. And then obviously you have a day like today where you have broadly the software sector down, but that hasn't necessarily necessarily been the case for most of the week. It's just we've caught it on a day where we have seen this broad pullback, but then we've had this game of ping pong. George Sillis was explaining this really well this morning, where one day you have the hardwares outperforming the softwares, and there doesn't seem to be any rhyme or reason or logic or explanation exactly for that. It can be very technical in nature, but you do just continue to see that rotation between the software and semi spread right now, and I think that's a really important thing that's playing out for these markets too.
You do, and really, we've seen a few outliers like HPE, strong reports, but also it really depends on the overall market. So we will wait and see. And of course, I'm sure we'll dive into these numbers more deeply tomorrow once we have them and see how the market.
All right, S&P pulling back. All right, no follow through.
All of that breakdown here as we approach Adobe's earnings this afternoon.
S&P just sitting here doing nothing with a little more than 2 hours to go.
Strategies. Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a match?
Invest your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. AI-driven stocks continue to dominate markets, but investors are really starting to wonder what course comes next. So joining us now is Mark McCarron, Chief Investment Officer at Westcott Financial Advisory Group, to help us break down really the next phase of this AI trade. So Mark, thanks so much for being with us today. As I'm sure we both know, many skeptics want to compare this AI boom to past tech bubbles. So what really stands out to you as being fundamentally different this time around?
Yeah, it's an interesting time, and it's similar in many ways.
Have to be patient. The market's not going anywhere. We had a little grind higher. Looks like profits being taken. Tesla, Amazon, Google, Netflix. Yeah, no follow through.
Stages, there's a lot of cash-rich companies doing the investing, driving the market today.
Okay, and so that really speaks to what I was just going to ask, and that's these companies that are really heavily relying on CapEx rather than maybe relying on borrowing. But why does that really right now matter for how we assess some of these names going forward?
Yeah, I think it's important. The segment we just saw was really focusing on the impact AI is making on real world and use cases and threatening existing companies on the software side. So I think there's a lot of capital expenditure happening today, and the early fear was that is it going to be worth it? But we're beginning to see some use cases come through, and we'll see. Time will tell whether all that investment will be paid off. But I think there's enough positive use cases, and we're seeing the AI impact really across the broad market right now.
Okay, so how much index risk?
All right, S&P pulling back.
Overall direction does just frankly depend on a handful of these AI-related names.
Yeah, 8 out of the 10 top names in the S&P 500 are AI-related. NVIDIA, Broadcom, Microsoft, Amazon, Google, Meta. They all have different roles within.
Still chopping around S&P.
The hardware space is sort of the dominant one today and continues to be. But there's been a significant rotation, not only away from the hardware side of things, but clearly the software side into other areas of the market, because AI is one theme really affecting today's markets. There are a lot of other things happening.
And it does seem like right now the market's no longer just rewarding like the broad reach into AI. They really want to see that on this monetization push. So what do you see that real shift towards monetization actually looking like for some of these big tech players?
Well, I think we think about it sort of as AI ecosystem. So the enablers are the technology companies that enable the growth of it, and the chip makers. The monetizers are those that are going to sell the product and service to the enterprise software companies or the general public. And we're seeing Alphabet, Amazon, Meta, and some of the underlying model builders, right, Anthropic and OpenAI. Those are the monetizers. They're the ones that need to justify, the fees that they're charging for the service. And I think there's adoption and pickup in that space. And I think that's going to be a resilient part of the top names in the market, and long-term good positive trends there.
Okay, so if leadership starts to further broaden and continue to rotate, why does diversification, especially to maybe some international exposure, become even more important in this environment?
Yeah, it's really, what we're seeing in the U.S. is clearly the AI trade has sort of dominated the U.S. stock market for many, many years. But if there's a threat to that or a potential challenge to that, and rotation happens, it happens very quickly. And so what we're doing in portfolios is ensuring that we're well diversified, inclusive of investments in energy, industrials, materials, which are moving toward the forefront today because of the geopolitical risks out there. And the international market,
Oh boy, this is so tiresome.
against the U.S. dollar and the U.S. Market, but also a nice complement, I think, to the AI trade that's been so dominant.
Okay, so speaking on that risk, how for investors that do want exposure without, of course, being overexposed, how do you balance owning the top AI names while still being in a position for the next phase of market leadership, and also, of course, prepared for some of the headline risk right now that's dominating, unfortunately, the overall markets?
Yeah, it's a balancing act, right? So you have to have a little bit of almost everything in a diversified portfolio, but ensuring that you have enough of the AI themes to participate in the winning, driving growth aspect of that, which we do, but it's not a full weight. I think it's really important to see what other sectors of the market might actually benefit. And we're seeing energy and utilities and somewhat boring companies historically being caught up in the AI trade, so you're getting exposure there. And I think you're also getting exposure by the globalization of the AI theme. A top 10 position, for us is Taiwan Semiconductor, and clearly there are risks and opportunities globally, but that is a non-U.S. company that could benefit from the theme broadening out a little bit too. So I think it's important to look not just at the U.S. market, but make sure your portfolio is well balanced to take advantage not only of opportunities, but also manage the risks.
Okay, so with this broader shift, of course, to these AI infrastructure players, we've seen like memory chip makers are so hot right now still. Software is obviously not. Right now, do you have any of your favorite names that you see in the space, or names that perhaps are just more resilient in this current environment?
Well, I think, when you look at software, that's the challenge right now, and we're well balanced in that space. We don't have any large positions in some of the software companies mentioned, but clearly Microsoft is sort of a dominant player, large position in the top 10 names of the S&P, and a controller.
Yeah, right now we're just captive to the markets. Energy, oil and gas stocks working. The fertilizers, consumer staples, those stocks are working. Utilities. So you got to stay patient. All right, looking for another bounce back up into the range.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs.
S&P is just stuck here, making people question whether or not they should be doing anything. I would question it too. I would just like, I just sit tight. There's some things that are looking pretty good as far as buying the dip. But a lot of stocks at the highs already, so I wouldn't be chasing these energy names. Try to dispense the need to trade every single day. Right now, we're just watching for opportunities. Okay, the opportunities are few. Energy, utilities, consumer staples is flat now. Energy, though, that's the place to be right now. Energy sector. Okay, above the 10 EMA weekly, the 60-minute is bullish. Okay, this is the place you want to be. ConocoPhillips, Chevron making new all-time highs. ExxonMobil turning back up. CF Industries, Mosaic. Okay, Mosaic pulling back a little bit from the highs. Palantir. Many of these stocks have run up in the month of March. They're just consolidating right now. Watching for Palantir to stay above this the 20 EMA, 152, 153, somewhere around there. Push back up.
Solid guidance as well. We also heard more about the Bumble 2.0 with the AI tools and the redesigned profiles. But of course, users are, investors are very aware of paying users still being down, revenue still being down. We did see overall.
You know, with the conflict in Iran, it's easy for the media. I don't like using words like easy or funny or anything like that, but it's easier for the media to like completely gloss over the fact that the Iranian economy is in such a turmoil right now. Banks being hit, banks collapsing. How do people feed themselves? You know, I mean, it's just, I feel sorry. I feel bad, you know. Try to get yourself out of that kind of that mindset. But for right now, we just got this everlasting headwind that we got to deal with. And until that dissipates, the 200-day is right there below. So those put flies are still working. We got to coordinate that with the potential for a bounce in March into April. Puts are catching a bid now. Puts are catching a bid as we move back down to the lower Bollinger Band.
Low ticker at -800.
Okay, we're taking out the lows here.
Extreme low ticker.
See how far they go with this.
Gen Z user, and we're seeing that with these AI tool features.
Okay, I think it's really interesting that they're really trying to say that there's like this swipe fatigue, so they're trying to like.
MACD is rolling over.
Which I guess when you look at like the broader online dating trends, we've seen, of course, nothing compared to when we were all stuck at home during the pandemic. I really like that's when these names like took off as far as like just continual price activity. But is it too soon to say that we're in a full-blown turnaround yet? Because frankly, some of these numbers at first glance, they were not that good.
Right. No, I do agree. I think it is too soon. It's exciting to see some of these numbers turning around, but that dating app fatigue, more choices, less users very much still exist. Paying users, we're still seeing that decline. Revenue contraction is still certainly there. And then, of course, competition.
I think going forward, those are still the possible headwinds. These tailwinds for products, including AI,
MACD turning down.
increasing, and then there's some valuation opportunity potentially compared to some of the other names out there. But those all are still headwinds, and I think we're seeing analysts reiterate their ratings, either not adjust or very minorly adjust their price targets. And I think that's the appropriate reaction because the turnaround story is being broadcast, but it hasn't quite yet been completed.
Yeah, and of course, today a huge move to the upside. That 3-year weekly chart really illustrates how far we've come, unfortunately, to the downside. But so appreciate it, Jeff Pierce, for all that Bumble breakdown today. That'll do it for us for Next Gen Investing for this Thursday. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Yeah, it looks like Intel's giving us 50% retracement back to 45.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed.
MACD's turning down.
I think one of the most important things.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Moms, when my grandparents were here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
All right, we're bouncing off the low now. Shorts covering.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange, and we are watching the VIX, the fear index, right now at 26. Middle East conflict continues. Oil is moving higher. It's up at $94. So you can expect that volatility to continue. We'll have many conversations about this, and we'll examine this with multiple experts. In our Options Corner segment, Tom White is standing by and highlighting some real outsized trades that are worth watching on Mosaic, Capital One, and NVIDIA. And our panel standing by to take a close look at the Chinese EV space. Tesla China sales actually got a jump, jumping more than 90% in February. That we have a lot to talk about when it comes to Elon Musk anyway. In the meantime, you have a lot of tough talk between Iran and the U.S., and the Strait of Hormuz remains closed, and oil is still elevated. Here's one of the numbers right now. So you are seeing stocks down 5 of 6 days. The S&P is down 81 points, down 1.2%, 6694. The Nasdaq 100 down 1.5%, 24,609. The Dow Jones Industrial Average down 577 points, 46,839, using 1.25%. And the Russell, the small caps, down 1.5%, more than that. And we're seeing gold pulling back by $66 at $51.12 a troy ounce, and oil at $94.10 the barrel. You remember early on Monday, we were at nearly $120 the barrel. It's also worth noting the 10-year bond yield is at 4.25. These are the highest levels that we've seen since February 6th. I think folks are really expecting some rides here, not some, solidity or, a range. Right now, we've seen a range moving up and down and back and forth, and that's sort of what it is. Senior markets correspondent Kevin Green is with me, and you've been watching every headline, every surge, every drop. There was one day we had an 1,100-point turnaround on the Dow. People are getting a little more accustomed to this is what it is right now when you have a war happening abroad. What are some of the themes standing out to you, Kevin?
Good afternoon, Nicole. Yeah, we continue to see a little bit of consolidation within this market, especially if you're looking at the volume, a little bit more risk-off tone outside of some defensive names. If you're looking at utilities, they are actually catching a pretty decent bid, as well as the agricultural names in general as well. ADM, Dow, Chemical, we talked about that one earlier this morning. But if you're looking at tech and semiconductors, we are seeing a little bit of a fade here. Obviously, this is a news headline-driven market. We continue to see volatility trading at around 26, so we are implying more than a 1.6% move to the upside or downside. We've been pretty much hanging out at this level for a considerable amount of time here, a little bit unusual, and that's because of this geopolitical risk premium that we are seeing in the market, and we continue to see volatility actually as we speak, starting to see the markets actually move up pretty decently here. Let's see if that's going to be able to hold. But overall, everybody's looking at crude oil. There's an inverse relationship between crude oil moving higher and equity markets moving lower. At some point in time, we will get a base there, but it seems like we're still kind of turning over, waiting to see if there's going to be any type of detente or any bright signs of a resolution to this particular conflict over the next couple of days or coming weeks. The market's starting to push out those rate cut expectations in 2026. Nicole, we actually do not have any rate cuts being priced in this year. So the bond market's saying that this could actually last a lot longer.
It's interesting how, we were talking 2 to 3 rate cuts, and there were some people who came on and said, I don't see any rate cuts at all. There were even some who said, I'd see a rate hike. It was really a wild card, but as you said, they're not really pricing in a cut. We'll have the March 18th meeting with the Fed. As far as volatility goes, I think we went as high as over 35 in the last week or so. What about now when you look at the VIX and what the situation is playing out?
Yeah, so we are still seeing volatility at around a 26. So once again, a 1.6% move. There's still a little bit of a backwardation. So near-term risk is being priced in at a higher rate than what we are seeing over the long term. And I hate saying this, Nicole, but what you probably would like to see if you're an equity trader is the volatility index or the VIX actually blow out to the upside and really put pressure on this market, not only when it comes to the energy prices moving higher, but also equities moving lower, and having a potential day where we have yields moving higher, you have dollar moving lower, and equities moving lower. If you kind of go back and look at the last year and a half or so, those have been the days when we actually have true turnaround stories or these taco type of trades. Right now, we're kind of sustaining, at least for the moment. So it seems like the market's a little bit more resilient. And that could actually kind of push off the administration from taking any type of action to reduce some of this conflict. Now, obviously, we have to see if Israel as well as Iran are going to be able to calm down some tensions here. But everybody's kind of looking towards the United States as the leader to give us direction as to where this market's going to go, and if we can get a little bit calmer waters here over the next couple of weeks.
And last but not least, and definitely not least, Adobe reports after the bell today, and everybody's been waiting on this, right?
Yeah, we have seen the stock move to the downside.
Selling premium seems to be the thing to do. Range-bound action between 6,800 and 6,600.
Very sharp reaction. The market is pricing in We're on a 6% move to the upside or downside. Revenue expectations right now sitting at around $6.3 billion, with the adjusted earnings per share estimate sitting around $5.87 or so.
TSSI flying under the radar. TSSI.
Their Firefly product offering, which had a lot of hype, but unfortunately also has a lot of competition, especially free options that are out there as well. How are they combating that? So this is going to be a very interesting report here. It gives us a little bit of a gauge to the software space. Low bar, you are seeing a lot of options activity taking place, especially to the upside. $300 calls going out for a month have been catching a little bit of traction today.
All right, Kevin Green, great to see you. We're combing through the numbers, folks, all the action. I mean, we see oil elevated. Wheat is up, Brent at $100 today. We continue to look at the big picture. John Buckingham, editor of the Prudent Speculator newsletter, is with me. And I know that we've had, obviously, somewhat of a wild ride. You also had Goldman Sachs coming out and now saying there is a 25% likelihood of a recession in the next 12 months with concerns about consumer sentiment, hiring, CapEx spend, all of that happening on the heels of what's happening with Iran, because everything is sort of stopped and, just over the next 12 months, it could be tricky. That's their sort of luck. What do you think?
Well, there's always a risk of recession. And statistics, Bloomberg puts out a number on recession probability. It's been 25% for a few months now. It had been higher, earlier last year.
S&P pushing back above. Range bound action. S&P. Not quite to VWAP.
Every 11 months or so, and even bear markets happen every 3 years. It's all part of the process. And yes, the headlines today are very disconcerting. Of course, we don't know what the future is going to bring. The old saying is the market doesn't like uncertainty. But even when the market's going up, there's still uncertainty. So there's never certainty when it comes to investing. So that's why we think investors should pay attention to the prices they're paying for stocks. It's been a very good year so far on a relative basis for value. Value's outperformed growth by something like 800 basis points so far this year. And, we like what we've been seeing in this market.
Look, I've had guests who come on and said, look, the fundamentals are great. Earnings have been great. You don't need to worry because the growth story is still in play and value is still available. And, don't worry as much as you need to worry. You know what I mean? And sort of with that sort of mantra, I feel like somewhat bullish. Of course, it's a midterm election year, which sometimes can bring volatility. But, when you think about inflation, we do know that within the Goldman Sachs note, they noted that a sustained rise in oil of 10% will actually lower GDP by 1/10. 10% rise in oil also makes inflation to the tune of 0.2%. When you think about inflation and labor, tell me about both of those, particularly labor too.
Well, again, the stock market will do what it will do, often independent of the economy. And, we're students of market history. So whenever someone tells me, oh boy, we're going to have inflation, that's bad for equities.
NIMO, speaking of history, NIMO.
Equities are a hedge against inflation. So, and if you look at market history, we study the numbers. When inflation is going
Where's my NIMO chart?
when inflation is going down, value stocks have done
NIMO is at minus 81. It's at the low of the day. NIMO.
very frightening when you put the numbers there. And clearly, boy, if we're spending more on oil or we're spending more on food, that means we have less to spend on other things. But the market is much more complicated than that. There's no cause effect that immediately somehow the economy is heading into the tank, and that means that stocks are going to plunge. If you look at market history again, about the only time you will ever see stocks have a decline on average is when you have a recession. And I know you mentioned, Goldman Sachs, 25% chance of a recession. Nobody can predict when the recession will start or when it will end. And if you could and somehow had a crystal ball and could go back in time, because they don't even figure that out until after the fact. But if you knew that, then yes, you could be out of stocks during the recession and you might avoid a relatively modest, on average, 2 or 3% loss. The problem with that is that prior to recession, stocks have rallied about 9% on average, and coming out of recessions, stocks that have fantastic returns in the 40% range. You don't want to miss out on the good times because you're so frightened by the bad times.
Yeah, so let's talk about some good times. You know, I don't want to be Debbie Downer. That's not sort of my goal here. You know, I just read the Goldman Sachs report. But as I said, I've had guests who are very hot on this market. So how are you playing it? I mean, what are your picks in the current environment? What do you like here for the next 6 to 12 months?
Right. Well, again, we're stock pickers, and there's always going to be opportunities. You know, we've done extremely well this year.
All right. Starting to push back up. S&P is starting to push back up.
You know, stocks like Corning and Micron and Lumentum, we've taken some money off the table on those. But there's been a lot of stocks that have been punished, and often because of the worries about AI disrupting their businesses. And I know you talked about Adobe a few minutes ago. They're out with earnings after the bell. You know, Adobe's down over 20% this year, and the PE is in the 13 range, and the forward PE is in the 11 range. Adobe, believe it or not, is a value stock from where we stand, and so I know you might want to wait till earnings come out, but Adobe is a name that I think investors should be paying attention to. And then the financials have been hit really hard here of late. You know, I like to buy the things that have gone on sale. You know, Wall Street holds a sale and nobody shows up. I'm like the only guy who wants to show up. Financials, you know, quality names like J.P. Morgan, Goldman Sachs is being hit hard today. You know, both of those companies are likely to benefit in the long run from all of the turmoil that's going on. So I think you can look at financials and even some of the hardware names in tech. Yeah, because of course a lot of investors like tech. So you know, Cisco got hit on worries about
Back to VWAP, no follow through. S&P. Netflix is trying to make new highs, making a higher low. Tesla trying to turn. Google turning back up. Microsoft back down to the low. Looked like Microsoft was going to break out. Nope, not today. Not at the moment.
Historically, the second year of the presidency is the worst of the four. And so, obviously, as I keep saying, I'm a student of market history, so I understand that. But the returns have been positive in those years. So when we talk about the market... No serious follow through at this point, just a little move back up towards VWAP. I would just sit tight. We've got to wait for this market to give us a catalyst. Volatility is high, but we're not getting... catastrophic failure. VIX is off the high of the day. Okay, VIX is backed off. I think anybody who wanted VIX calls probably bought them a week or two ago, like we did. If anything, taking profits off the table. Okay, we're bouncing back towards VWAP. Currently touching VWAP. Oh, we're going to get above it. Bollinger Bands continue to contract. Our MACD's turned up. Can we get a runner?
Not much to look at, unfortunately. Okay, the top 4 or 5 stocks are related to fertilizers, chemicals, and oil and gas. ConocoPhillips number 5. Actually, Occidental Petroleum, OXY. OXY is number 5 on the NASDAQ 100. Okay. CF Industries, ExxonMobil, LyondellBasell, breaking out. Let's see, LYB. LYB reports again on April 28th. Plastics, chemicals, and refining. Propylene oxide, propylene compounds, propylene, ethylene, propylethylene, polyethylene. All right, so that one's on the move. LYB. All right, S&P is starting to turn back down now. Rejected.
Yeah, it continues. This theme that's been playing out, higher oil prices up over 8.5% today, equates to lower equity prices.
All right, we just can't seem to get any kind of follow through. It feels very heavy. Markets feel very heavy, like we could turn down and start to head down towards 6,500 pretty quickly. 6,600. Okay, looking at the hedge flows. Hedge flows rolled over on that last little bounce.
Make it easier for risk on assets at this point. It's more of a safety play, and I think that's what's playing out. And we're going to continue to be constrained by what happens in crude oil at this point.
And I was looking at the low Monday morning when we came in, 66.36 on the S&P 500. And while we've been selling off and seeing some down arrows, we're not crossing below that at this moment. So I guess some people would see that as a positive. Let's talk about Mosaic.
So given what we're looking at on the screen between 10 o'clock and 2 o'clock, 2:20, we haven't moved. Up and down, up and down. All right, so futures pulling back now.
So yeah, pricing going up for fertilizers and the stocks in that. And then also sentiment's been boosted recently by the ongoing efforts to ramp up its rare earth mining exposure. And they're looking at Brazil for that. So that's also lending some support to the stock and why it's rallied so much. But we did see some neutral to bearish activity in here. Maybe somebody taking advantage of this.
All right, so if you're frustrated, join the club. We're all frustrated. The markets have just been banging around in a range. Now we're taking out the range and threatening the 200-day moving average. Okay, so back down into Monday's candle. We continue to move lower. I think you get the point here.
isn't typically a lot in a name like Apple or Tesla or anything like that. It's pretty big size for a name like Mosaic, but this trader is either hedging maybe a long stock position by selling some out of the money calls, turning it into like a covered call position, or they're just speculating that
The 200-day is getting closer and closer.
And, you know, the fertilizer story, as you said, all about the Strait of Hormuz and oil and how Goldman Sachs was saying how all of this can be, you know, as it's stalling, I'll say, I mean, I'm paraphrasing, but they mentioned fertilizer and helium. And so it's not just oil.
Okay, so RSI turned down, stochastic turned back down. It's really moving sideways to lower. MACD still pushing lower. 12 distribution days. 200 days right there. We're looking for a bounce in March, maybe late March, early April. For now, we just got to deal with this back and forth. Netflix is trying to make a new high of the day. Netflix is moving here. Netflix.
But costing them a lot. Maybe that's why the stock's under more pressure than some of its competitors in their space, even though a lot of the credit card stocks have pulled back pretty significantly. B of A recently lowered the price target to 254 from 280 on the 9th of March, but they keep a buy rating on the shares. But we did see some bullish activity. Maybe somebody thinking they're trying to catch a bottom here after this massive slide from those all-time highs just 3 months ago. Trader bought 3,000 of the May monthly 200 strike calls, paid an average debit of about $4.
Netflix trying to move higher.
The break even for this trader where they start to profit is 204.90 over the next 64 days. That's about 15% above the current share price in there. So they're going to need a move to the upside. One of the catalysts could be earnings. They report at the end of April, on the 21st. So that could be a catalyst to the upside. But yeah, this trader's looking for a rebound in the shares. They need a pretty big move to get above that break even, but they've given themselves plenty of duration also. They've got 64 days in this position, Nicole.
All right. You know, I was looking at the XLF a short time ago, and I just think about everything financial and just how it's been on such a downtrend. And, you know, for example, that over 1 month is down about 9%. So year to date down 11%. So the financial, but so many of the gaps have been coming on and still picking financials as a group. And you just found this Capital One trade that was bullish. And then what about Nvidia? There's been a lot of news about Nvidia in the last
Netflix trying to break higher. Looks like traders are selling premium on the S&P. That's about it.
Data center and hardware procurement. They're expanding their relationship. But the GTC conference next week should be, you know, if we get that keynote from Jensen Huang, maybe he's going to be a little bit more optimistic. He typically is. I mean, you saw their last earnings event. They blew out those numbers once again, 13 straight quarters of growth for this company, but the stock hasn't been rewarded for that. It is up about 3% so far this week, so pushing back against what we've seen
Range bound.
in the overall market, but I think that's in the lead up to that GTC conference.
You can see we're locked in between these two levels, 6,700 and 6,670, about a 30-point range right now. Bitcoin off the high of the day, but still a doji for the daily. Bitcoin.
This was on the May monthly cycle, so 2 months to expiration. Trader bought 27,000 of the May 195 strike calls. Paid an average debit of about $7.70 for these calls. So the break even where this trader starts to profit above $202.70. That's about 10% above the current share price. So expecting some gains here. They've given themselves plenty of duration. They got 64 days until expiration on this trade. But yeah, getting optimistic.
Market's not moving anywhere.
Yeah, well, look, I mean, who knows what they'll announce? We know they want to continue to be the full service everything and chips and data centers, and GTC could be really interesting. Looking forward to that. Tom White, great to see you. Thank you so much. As always, here for Options Corner, Real Trades. Tom White finds them for us. In that case, we just saw Mosaic Capital One. State of the CEO Payoneer will be with us next.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series
Low ticker at -800.
like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach.
Okay, we're pulling back in now. Okay, S&P 500 back down. Lower part of this range. S&P. Hedge flows continue to move lower. Hedge flows are moving lower now. So on the downward moves, we've got dealers selling futures in order to hedge. Watch for this low to get tested.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths stacked with content curated.
Once again, if you're frustrated, join the club. It's a very frustrating market at the moment. Not giving you a lot to trade on except for the energy stocks. Okay, energy. Everything else is taking some heat. Energy and utilities. Energy. Exploration and production. These are up a lot. Trio Petroleum. Some of these small caps, WTI, offshore, W&T offshore, pushing higher. A lot of these speculative trades are catching a bid. Cosmos.
So it's great to join you. Thanks for having us. Delivered 2025, 14% growth, record profitability, and we guided for 2026 to more than double our core business EBITDA and deliver 12% growth at the midpoint. And we are a global payments firm helping businesses in 190 countries and territories really have a financial operating account for their cross-border payments. And we are strong business with lots of momentum and are driving the innovation in the payment sector.
Suite of services, funds management, working capital, multi-currency accounts, as you said, workforce management. What parts, do you see the most demand or bring in the most revenue?
Yeah, so what's interesting for Payoneer is we serve multinational SMBs, businesses that
Mesa Royalty.
Banks, but are too big for their local bank in their home country. So if you're a Vietnamese exporter or
Cosmos Energy.
business process outsourcer from the Philippines,
Cosmos Energy.
or in Argentina, we are your your first choice where you go to get the financial operating tools you need to hold multiple currencies. So whether you get paid
Battalion Oil,
you sell to around the world, you pay into a Payoneer account,
Occidental,
simple to use, in your mobile app. And when you have
Vistra Oil and Gas. That's on the watch list this week. Vistra dipped Monday and Tuesday, back up Wednesday, Thursday.
customers around the globe, everything from goods exporters to services companies, small freelancers to billion-dollar
Blue Dolphin, a lot of these cheap $1, $2, $5 stocks. Ring Energy, all of these are moving higher. A lot of speculation in this group. Valero breaking out.
this year to tuck into that. We launched our stablecoin offering a couple of weeks ago, and thousands of businesses around the world are turning to Payoneer to participate in the multi-currency account that we currently offer, and now we're adding stablecoin capability to that. So we're really in the middle of all the innovation and driving the innovation that's happening in the global payments landscape.
Vistra Energy on the watch list.
Yeah, I think it's a really interesting thing, right? So, your viewers obviously are familiar with firms like Circle and others that monetize float, right? So they have lots of activity and volume, and they get paid on the interest. Payoneer is a transactional company, and we have $87 billion of volume in 2025 in our platform. Amazon payouts, Walmart payouts, Etsy payouts, eBay payouts, Airbnb, really the world's biggest companies and most entrepreneurial businesses around the globe using the Payoneer account. So with stablecoin, we actually turn a tradable asset, things that are active in exchanges, and turn it into a commercial utility for B2B trade. And what's so important about that is the utility we've built includes the last mile, converting a currency into local fiat around the world. That is the killer app, we think, for the real growth of stablecoin utilization in B2B trade. And we, among a few other firms, are really out in front delivering this capability. It's early, so we're bringing it live, learning from customers, iterating in our progress, but we feel pretty excited about what the potential is for the decade ahead.
And how will you set yourself apart from the other fintech companies?
Well, it's interesting. This is infrastructure, right? There aren't many fintech companies that do business in 190 countries that are regulated globally by regulators who are deeply compliant organization with a multi-currency wallet. So if you're an entrepreneur in Argentina and you're getting paid in USDC, you're going to want to convert that to local fiat when you go buy orange juice in the supermarket on the corner. You can't buy a hammer in Vietnam with USDC or XRP or anything else. You actually need to convert the local currency to be able to do that. And that's where the Payoneer account is so valuable, is receiving in multiple currencies and converting to local fiat. And our bank rails and our bank relationships.
All right, balls continue to stay pretty flat for the most part. VIX. Balls are relatively flat. It's not spiking again. So anyone who wanted volatility have already entered, holding hedges. Okay, we got an hour and 24 minutes to go.
exceptionally strong franchise in China, where we are one of 3 Western firms that are licensed domestically in China to provide cross-border payment services to the, really the most important goods exporters around the world. The iPhone case on my iPhone is manufactured in Shenzhen, sold to the world, and Payoneer's right there with that entrepreneur, making it easy for them to get paid and make payments around the globe.
John Kaplan, CEO of Payoneer, it's great to see you. Thank you so much. Really appreciate it. Good look at the quarter and the outlook. Coming up, we'll highlight ETFs and fixed income and new strategies for structured cash flow. The watch list. We'll be right back.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vilas and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. We want to focus on ETFs and the fund flows and why they're hot. We've seen so many inflows, the record numbers that have come in. What will 2026 bring? I mean, we're already into now March 12th. Chris Ewers with us, Director of the ETF and Fund Strategy, Northern Trust Asset Management. I'm so glad you're here, Chris. I mean, what have we been seeing? I know you're launching some suites and ETFs, so I want to hear a little bit about everything, but what is the fund flow like? What are the trends?
Yeah, we're seeing investors come into various types of ETFs. Equities have had their time in the day. We've seen flows into equities. That's tapered off a little bit recently, but you're seeing more flows into fixed income, more flows into alternative types of strategies where clients are using different tools, such as distributing ladders as a great idea of a new innovation that people are looking at.
Are they looking at fixed income because they want to be diversified? Are they nervous?
Yeah, I think one of the things you're seeing today is ways to hedge your portfolio. Equities have been on such a great run that looking to take risk off the table, whether that's using low volatility strategies on the equity side or things like fixed income tools or real assets in the portfolio really across the board.
So you've been launching some new products lately, right? Tell us about those.
Sure. We launched 11 ETFs last year. We've seen good growth in those. Those have been focused on the fixed income side of our portfolio. Some municipal strategies, some tips or inflation-protected treasuries. Those that are really cool are our distributing ladders. And so those products really take the idea of a ladder where you're getting interest rate protection and turning it into a cash flow management tool. So clients are able to really take their portfolio and manage their cash flows over 10, 20, even 30 years by investing in either inflation-linked securities and tips or in tax-exempt income securities like these.
Yeah, I mean, people want the tax advantages. I mean, just talk a little more about how advantageous it is to do it this way.
Yeah, absolutely. So when you're buying a ladder, you're holding bonds across every year, every rung. And so when those mature, you're getting them back at par value. So you're mitigating your interest rate risk. And then on top of that, you have those cash flows because we're distributing the matured bonds every year. So you're getting a plannable income stream. It's almost like you're building your own annuity or pension using securities from that standpoint.
It's amazing how you have ETFs that, mature in 2030, 2035, 45, 55. It feels far away, but this is the way you do it, right? When we think about the current volatility environment, how we have this geopolitical sort of war underway, where does that fit into your story and your conversations?
Yeah, clients are concerned about their cash flows. They're concerned about liquidity. They're concerned about defaults and really the growth and where that's going to come from. The nice thing about muni securities, if you look at investment grade securities, taxable corporates, default rates are 2.2% historically. For municipals in the investment grade space, that's 0.09%. So much more secure from a default standpoint. Getting that liquidity on an annual basis is really helpful, and really also having that tax exempt income as well. So really you're hitting a sweet spot from both the income and the returning principal, so you get a really good cash flow management tool.
So for a younger person versus an older person, what are some of your recommendations?
Sure. One of the things that we've seen from younger people is they want that income, whether it's using option-based derivative strategies in equities, any sort of tool that will give them cash flow is really king. And so from that standpoint, some of these might be of an attractive use, even if it's like 20 or 30 years. If you're thinking about it, if you could say you could immunize your costs by buying a tool like that, what it allows you to do is then take the rest of your assets and invest that in areas of really high growth, wherever that may be for you.
Why did you think that this was the right time? I mean, these are the first funds under Northern Trust ETF brand. Why was now the time for this?
Yeah, we've been in the ETF industry for over 15 years with our FlexShares brand. And what we wanted to do is really have the Northern Trust brand where our funds have always been a portion of those portfolios, and really take those strategies and use our expertise both in munis and fixed income and use that as a way to invest here.
Well, and someone says happy birthday here on the floor. I mean, sometimes, I admire guests who sort of get rid of some of the excitement that happens on the floor here. Last but not least, do you feel optimistic about the market, maybe in the longer term?
Yeah, I think over the long term, if you look at where the bond market is and how investors have reacted, you have not seen, if you look at like the five-year forward for inflation, break-evens have not really come out that far. I think over the long term, the market is pricing in some risk and taking some of the risk off the table. But generally speaking, we're still bullish on risk. We're still invested for the long term in equities. And I think this is a good time to really balance your portfolio out. Also add real assets. I think one of the key things is when inflation is high, bond prices and stock prices are positively correlated. So you need other tools in your portfolio to diversify. And I think real assets like natural resources are a really good tool to have in your portfolio.
All right, Chris Humer, great to see you.
Just answering some DMs from members that are frustrated with the markets. Yeah, I understand perfectly what we're dealing with. Okay. So you've had a nice run up. We've had, 2025, everything was pretty cool for the most part. We had a few dips here and there, but we were upward trending most of the year from April. Okay, so we had a nice trend up from April to April low, April, May. And then we consolidated for almost 3 months now, right? 4 months. So yeah, it's very frustrating because the markets are not moving higher. And, most traders are expecting prices to move up every single day. Not realistic. And I will say, I love trading the long side. It's much more fun, more positive emotions. But occasionally you get these conditions where we pull back. We needed this pullback. Unfortunately, for anyone that's long looking for upside, you've been basically dealing with a pullback for what, about 5 weeks, 6, 7 weeks. We hit the highs around 7,000, and that was almost the last week of January. So we're 7, 8 weeks into this pullback. Yeah, 7 to 8 weeks of no upside spikes except for that one that we saw on Monday. News that perhaps the war would be over soon. That was short-lived. Yesterday we had, releasing the strategic petroleum reserves. Looking for a pop or a drop in oil. That didn't happen. Iran continues to be very belligerent. Short term, it's unfortunate. These things need to happen. I'm not giving you my opinion. I'm just saying short term is just, we're dealing with this issue. The 200-day is right below. The longer we take to get down there, the more frustrating it is. I've been looking at this potential 6% pullback from the highs for several weeks now. That's why we bought these put flies. So if you have these put flies, they're up to about $5 now. $4.50, $5, I think you can get for them. So yeah, you're going to be frustrated. That's the unfortunate part about the longer term trend. Okay, since the April low. Okay, futures continue to move lower. Okay, S&P pulling back. All these things considered, you have to think about the fact that the majority of traders in general are bearish, right? They're bidding up puts, so calls are very cheap. So it's just a matter of time when we finally get the bounce. I don't see these jumping to the right side of the screen in one day. They will start to move to the right, but calls are cheap. Take spreads, for example, with Tesla, even though Tesla's off right now. I wouldn't do it right this minute, but once Tesla does start to turn, we're going to have some nice trades. So don't put money to work and lose money in the meantime. Just sit back and wait. If you're a swing trader, if you're a day trader, you're doing your own thing, right? Intraday. We had some nice moves intraday. Stocks like CF Industries, Mosaic, all of these having stratospheric moves, right? On the weekly time frame, look at the move. CF Industries was trading at $80 at the beginning of the year, almost a double. Mosaic, we've been waiting for it to move above the 50-day. Finally did that yesterday. Does Mosaic go to 36, 37? Probably. I would say by next week, we might see 36, 37, maybe even 40. Maybe you buy the 35, 40 or the 30, 40 call spread, 30, 40 call spread. It's like $3.50, something like that, right? Potential to make $7, $8, so more than 2 to 1. So that looks good. Mosaic, LXU. That one's on the move. LXU back in January. This was $8, $9. Okay, it's almost a double from $8. Fertilizers, Chevron. We got this one in January. Chevron. We bought this in early January on that pop to 160. And since then, we've been rolling these up, taking half off, then rolling the rest up. So we started with 155, 160, went to 160, 165, 70, 75, 80, 85, 90. We just rolled out the 195, 190, 195. We took half profits off because we went right through that. 190, 195. We took the profits off, rolled out to 195, 200, out into, I believe it was September, right? The next strikes were September, I believe, if I'm not mistaken. Chevron. Chevron, we rolled out from June, to September. Okay, September, and it's $10 between strikes. So I'm sorry, it was a 200, 210 is what I have now. 200, 210. So you can see how rolling up your strikes, taking half off along the way. So you're constantly farming those profits, yet you're staying with the trend. The trend is up. Okay, we traded this one off the 60-minute. You're well aware of this since January over here on the left. Okay, Chevron. Okay, so this continues to move higher. Chevron. Okay, so we initially got into this on the pop. Maduro was captured. That weekend, we bought on Monday. It dipped back below the 20 MA. We added to that position once it moved back above the 20 MA. And ever since January, this just keeps following the 20 MA. The daily is the dotted line. The green line is the 20 MA for the 60-minute. So this looks good.
Chart of all the Chinese stocks, and so you're looking at that's kind of a deal for people if they want to go ahead and trade this. I don't know about a long-term investment because you're looking for it to hold its 50-day moving average. It's got a ways to go at 22, 21 to get back to
Okay.
the 100-day moving average. So I would say you'd have to be pretty tactical on this one, and then the fundamentals in China would have to improve. As far as the U.S.,
So this one's gone a long way. 155, almost 200 now. So 45 points, not a bad swing. I found that 60 minutes, one of the better ways to swing a position. If you're a swing trader, it takes the guesswork out. As long as you're above the 20 MA, maintain your longs. If it starts to dip below the 20 MA, like it did in the third week of January, you start to manage the position a little bit more aggressively. Then it takes off again in February, just keeps going. Very good way to manage your positions.
Into Teslas, but as long as they're not refreshing the 3 or the Y.
All right, so TSSI, this is another one, TSSI. Okay, that's above the 20 MA. So long as it's above the 20 MA, we want to stick with this one. Okay, so long as it's above the 20 MA, TSSI, I've got an average around $10.80, somewhere around there. Because I did add to it. Originally, I had an average right around $10 and change. So now it's about $10.80. This looks good. Looks like it could see 14. So if you have a stop underneath 12, okay, that's an 85-cent stop. Can you see $1.50, $1.60 upside? I think you can. TSSI. Okay, the 200 days up there at 15 and change. S&P pulling back a little bit more, S&P. Let's see where they go with this.
Between China and U.S. with regards to electric vehicles, we know that Canada has welcomed them now. So the United States is surrounded again. Can the legacy automakers play catch up?
Thank you, Francis Newton.
He's just talking about Canada buying Chinese cars. I think the if you're Canadian, you guys are okay with that? Running, I guess Ford and whoever else was up in Canada. Did they move out? I'm not sure what they were doing there. How's it going up in Canada for you guys that are in the room and ladies? I know there's a few of you, Lori. I believe you're near Toronto, right? I don't know why everything has to be so political between Canada and the U.S. It's the politicians. It's not the people. It's politicians. You saw that in the hockey game. Wow, that was something else. Let's see what else is going on. So, long story short, I know a lot of you are frustrated. I got a dozen DMs today talking about the markets. What do I think is going to happen next? While I don't have a crystal ball, you know, we have a lot of catalysts for more downside. We do have some catalysts that usually show up mid-March, end of March, looking for a bounce. Seasonally, that happens. Over the last 20 years, March seems to be the best time to start looking at a potential bounce. On top of that, you have NYMO. NYMO is below -80, which is generally a good level to start thinking about longs. NYMO, let's go look at NYMO. Okay, I'll get your mind off of things. Plus, look at the look at advanced decline percent. We're getting to oversold pretty quickly. This is going to be when we get down here. I start to think, let's start to look at SPXL. Okay, so there'll be for your longer term funds. Okay, and your 401ks and stuff. Okay, we're pulling back pretty aggressively. So we noticed this 2 weeks ago when we started to lose the 20 MA and the relative strength in the equal weight indexes started to lose it. We're almost back down to the green zone. You know what this is? You know how I like this. Once we get down to the green zone, look at what happened in April. Okay, if you had gotten long in April and just stuck with the long, you would have been doing very well towards the highs of the year. So we're coming down to the 200-day moving average, equal weight index. The number of stocks above the 20-day are down to 25%. Number of stocks above the 50-day are down to 30%. So we're very close to a bottom. Very close to a bottom. All right, we're getting down to a level that we've been looking for. Everything is starting to line up. So keep your chin up. We're going to have an opportunity soon.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll be joined by the team from the NASDAQ to discuss the recent performance in the index and what the options market is saying about investor sentiment. Later, we'll dive into the housing market and see if lower mortgage rates are leading to a boost in home sales. And after the closing bell today, we'll have you covered for earnings live reaction from Adobe and Ulta Beauty as soon as those reports hit the wire. But for now, Molly, take us through what you're watching today.
Yes, Sam, chemical stocks on the rise today after Dow got an upgrade from Citi, plus a price target hike of more than 40+%. Dow, Mosaic, and CF Industries are the top performers on the S&P 500 today, as the war in Iran is driving up important components of fertilizer like nitrogen and ammonia. As much as 1/3 of the world's fertilizer also passes through the Strait of Hormuz, which remains closed. And Occidental Petroleum shares are up following a double upgrade from Wells Fargo. The firm bumped Occidental up to
Yeah, this is pretty exciting. Be waiting for this to happen.
The firm says that the company's oil sensitivity could create an opportunity. Piper Sandler also upgraded Occidental today to overweight from neutral with a new price target of
Low tick alert minus 8.
All right, low tick alert. All right, so we figured this is going to happen. All right, we're getting close.
Its outlook for the year prompted the biggest sell-off in almost 2 years. We'll break down that full report shortly, but let's check in with the markets, see where we are as we head into the end of the trading day. Pretty much where we've been throughout most of the day, more than 1% down across all 4 of our major indices. We're looking at the S&P trading down 1% in the third right now at 6687.51. On the Nasdaq, we're 1.5% lower, 24,593. For the Dow, we've shed close to 650 points today at 46,763, and the Russell 2K down 1.7% right now at 24.99. That's our laggard on the day so far. As we take a look at the 10-year here, ticking even higher, we're up to 427, getting closer to a 4.3. The dollar also higher on the day, 99.74. Gold is falling down a bit. We're down about 1.5% at 5,098.80 a troy ounce. Crude oil, though, still ticking higher. We're at 96.60 a barrel now. That's up almost 11%. And Bitcoin backing above that 70,000 mark, that key psychological threshold, nice even number here, but still down 1% from where we saw it yesterday. We're at 70,090. I do want to check back in with Sam, though, and see what top stories or themes caught her eye today. Sam?
Yeah, look, I think this rotation continues to be intact here. Obviously, has been a rotation very much back into growth this week, but then we saw that back into value for the most part of today, as well as energy continues to take us higher, as well as utilities, or at least other outperformers, I should say, because we are lower across the board. But then you've also got some of the consumer staples names that are higher as well. This is obviously a sector that has been performing quite well, very much part of the catch-up trade, or have lost a bit of steam throughout the course of the week, but seems to be back in play right now. We've got this game of ping pong.
Okay, we got 56 minutes to go. 56 minutes to go. We're right back down to the lows. Watching MACD and the volume.
We did see actually the IPV number of software names up, while some of the chip names, which have been well bid throughout the course of the week, actually down. So we did very much see that rotation back into more of the softwares, although they seem to have faded throughout the course of the session, although we do have that Salesforce. Just a couple of names, still some bright spots, Palantir, Palo Alto Networks as well. But broadly, chips are down, memory is down. Obviously, we have some credit risk weighing on the financials as well, dragging down a sector that has really been the underperformer for the year. I mean, you pick your headline, you've got Cliffwater, you've got Morgan Stanley, you've got Deutsche Bank, you've got Blue Owl today, and of course, that really seems to be weighing on the minds of investors. We've got this growing unease as well with the conflict in Iran, and that is driving up yields, not just oil prices as well. So it's a double whammy here. We've got the 10-year at 4.25 today, so we continue to keep an eye on that. But that's weighing on risk sentiment as well, as we do very much see investors uneasy, of course, with some of the deficit and the potential for the long-term inflationary impact from this war as it continues to drag out. And no doubt the data that we got today was largely overshadowed by some of those fears. And this is obviously something we are seeing globally right now. So we'll continue to unpack that throughout the course of the show. But Marley, I'll send things back over to you and Jenny for now in Chicago with some of today's top movers.
Thanks so much, Sam. Like you mentioned, Jenny Horn joining me in studio right now to take a look at some of the stocks on the move today. Our first stock is more of a group of stocks, sort of prompted by Dow, but they've been on the move higher, this group of chemical stocks, because we keep talking about oil as it pertains to the Strait of Hormuz, but it's not just oil that passes through. A third of the global supply of fertilizer also travels through the Strait of Hormuz. And so we're seeing a lot of these chemical stocks and fertilizer companies moving higher as well.
I know, who would have thought these Dow components would be such interesting movers today? It's just typically not the biggest volatility gains on each session, but these chemical stocks like CF Industries, LyondellBasell Industries, Dow and Mosaic were some of the best performers today, lifted again by some of the turbulence you just mentioned, as nearly a third of
all right. So we're getting close.
Which is a primary conduit in the commodities.
Getting really close.
Many countries in the region do produce those chemicals along with components that are used for various types of plastics. And so the war has already given.
All right. I don't know that we're going to get back down to the 200-day, but number of stocks above the 20-day are at washout lows.
Industries, which is a major distributor of production is now up roughly, 38% since the U.S. and Israel attack back on February 28th. Mosaic, which focuses more on these phosphate fertilizers, climbed also today, and the stock is also up 5 of the last 6 days and around 14% this month. And so the U.S. does 25 to 40% of its annual fertilizer imports from March to May. So some March imports are in transit, but the impact on spring supply and prices could be right now fully understood, at least for a UBS analyst that I was reading today. But as far as nitrogen derivatives, that could be most impactful here in the U.S. 40 to 45% of them due to arrive between March and May of this year. That could also explain why CF Industries particularly is seeing the nicest move today, because again, there's just still remain a lot in flux right now with what these fertilizer components.
Yeah, Dow trading up almost 8.5%, but CF Industries up more than 13% today. That's up 35% since the conflict with Iran erupted. So we are seeing some big moves in these chemical names as well. I also want to move into energy, which we talk about all the time with the conflict as well. Occidental Petroleum getting 2 upgrades today. One of them a double upgrade, as it's not directly correlated, but tied to oil prices. And as we see those rise, the outlook for Occidental has gotten more favorable.
Yes, and I actually think something that's interesting is, well, we know, of course, energy prices have soared since the start of this conflict, but there's also been somewhat of a disconnect with these stocks that are more of these like legacy, really majors of the oil and gas component. So like, for example, ExxonMobil has only risen, prior to today, around 0.3%, while crude had risen around 38% since February 27th, of course, the day prior to the war beginning. So in the 10 days after the fighting began, we saw these major energy companies barely budge at all. And then finally seeing more and more of that price parity, where the street is starting to notice, frankly. Wells Fargo with that double upgrade, as you mentioned, on Occidental Petroleum to overweight from underweight. Price target was raised to $69 from $47. And they did say that their peer leading oil sensitivity is both an opportunity and a risk, but it's right now primarily the Permian capital efficiency trends that's really transforming this rating change. They did say that highlighting Occidental adjusted its Permian spending plan from 3.9 billion to 3.1, while maintaining production growth. And this capability is further enabled by a combination of factors, including like underlying productivity, child wells, and the enhanced oil recovery. Additionally, we did see Piper Sandler also with an upgrade today on Occidental to overweight from neutral, and also raised $66, highlighting its increased price tag for the upgrade. A more simpler upgrade, frankly, as they did say, look at the right now prices of crude oil and the fact that we're going to see this have lasting supply impacts. So I think the impact is still that looming uncertainty. It does seem like everyone has different conviction on how well the market's reading into some of the conflict, but I think that the timeline remaining so unclear is still the major overhang.
Yeah, certainly, and a significant move to the upside for Occidental, even on a down day today. But while we're talking about things moving down today, Dollar General under some pressure after its earnings, despite beating on every metric.
Despite a really strong report. We saw a strong fourth quarter performance overall. Sales growth was 6%.
All right. Testing our patience. S&P continues to drop off.
Ticket value, and their profitability rebounded sharply in the quarter, and we saw operating profits up close to 100%. And their full year outlook, while this did include some deceleration for same-store sales.
If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is 3:10 p.m. on the East Coast. Another drag of a day. Yesterday was a doji, so really chopping people up. This time we're closing near the lows of the session. People getting frustrated, doing stupid things, or throwing money at the markets. Wait for the markets to tell you what to do. Right now we're waiting, watching for the equal weight index to get down here at the lows. Once it gets down here like last time, 95% of stocks below the 20-day. Same thing with the 50-day. When that happens, it'll be time to buy. And you buy 3 to 6 months out and everything's going to be fine. For now, it's just trading what's showing relative strength, like energy names, oil and gas, fertilizers, utilities, chemicals. Those are all catching a bid. Bitcoin pulling back. Bitcoin. It's a doji day. It's not really that big a deal. But we keep hoping for some risk on. I don't see us having that anytime soon until junk bonds can catch a bounce. Junk bonds. Speaking of 50-day, let's look at the 200-day. Number of stocks above the 200-day, 50%.
Seeing some movement from the downside on concerns about conservative guidance. So this last one, I'm going to make a pun, so pardon it. We're talking about Bumble. It's got an almost meme stock-like move today. I think it was up about 35% last I checked. As investors are swiping right. Tell us why.
I almost tried to make that joke earlier. I'm so glad you did. I'm so glad you did. I couldn't find a good way to tie it. Really seeing a huge move to the upside, and frankly, we were in need of a bit of a lift here, but now today's move, at least, propelling shares up 10% on the year and pacing for actually its best day in over 4 years. Previously, it had risen 42%, so we're not quite there yet, but hey, 36%, not too shabby. As we're seeing this turnaround strategy really spark some improvement in their key metrics, they said they're seeing this higher engagement quality as well as stronger retention trends due to their focus on their membership base. They did say they're focusing on cutting down on bad actors and these low intent profiles on their platform. And so, while this has actually affected their top line, revenue slid around 10% last year, while their total paying users fell 12%. They did say they're in this member base reset as they're shifting their strategy to their next phase of growth. And so for the current quarter, I mean, they did give some disappointing revenue forecasts, or it's basically in line, I guess you could say. Adjusted EBITDA was well above estimates, but they still saw a loss. And if you actually look at like the headline numbers, revenue slid 14%, total paying users fell 21%. You'd be very confused about this 36% move. But I think also, and this is just my speculation, the fact that they mentioned they're utilizing AI to connect the dating experience. You can basically be like automatically generated with a profile that matches your own or has similar interests to your own. That was something that the street seemingly liked. I feel very mixed on that, allowing AI to enter the dating game. But hey, we haven't seen as much of an interest in the entire space since really it peaked during the pandemic. So maybe AI is the way to do it. But I will say, I don't know if I want AI interfering in my love life, but I'll leave it at that.
I think people will take a leg up on dating whenever they can get it, right? So if AI is going to help, maybe it will. It seems to be working out today, up almost 37%. I thought it was very interesting to see if they might try a no swipe approach.
Okay, you should be excited about this, right? Once this starts to get down into the green zone, we're getting near a very, very important moving average. You know, how much more? Probably not much more of this Iranian issue. You know, I don't have clairvoyant crystal ball, but you know, everything is starting to line up. So we just have to be patient. I know it's really hard when you're watching your account lose value instead of gaining value every single day. That's not really realistic, especially when we have a headwind like we do right now. Even in trending times, you know, you still have to pay attention. That said, the number of stocks trading above the 20-day, when it gets down to this level, we're getting close to a pivot. Okay, we just have to keep our eyes open for VIX reversing, for junk bonds bouncing. Once these conditions are met, then we'll start to look at it as a long-term swing. Nearly a year from the April low. So that was a pretty decent run.
Big movers, real-time interviews and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome back to Market on Close. I'm Sam Bartas on the floor of the New York Stock Exchange alongside Marley Caban over in Chicago. Let's check in with these markets because, of course, a very important hour, the final one of trade for the day. And, of course, we have been very much on the back foot today. A lot of caution in these markets. We weren't managing to hold 6,700 on the S&P 500. We are below that now, 66 at 84 as we currently stand. Tech hasn't been able to muscle its way in and do the heavy lifting today either, like we have seen in previous sessions. So we are lower right now on the NASDAQ 100 as well, about 1.5%. The Dow Jones, we've got obviously some of the credit concerns and risks are weighing on that, of course, with some of the financials as well being a big drag here, the underperformer as far as sectors are concerned for the year in the Russell 2000, which continues to be the underperformer here, of course, as the market is really just backing out the rate expectations for the year, which a lot of the small caps had benefited from with respect to those rate cuts coming in sooner. So that is really the picture and the scorecard in this final hour of trade here for this Thursday as we continue to monitor these headlines coming out of the Middle East. Obviously, we've had Khamenei coming out this morning and talking about how they will continue to keep the Strait of Hormuz shut as this is a tool to pressure the enemy. And that is, of course, why we have seen those crude prices staying elevated today. Obviously, with West Texas, we are knocking on the door of 100, but at 96 right now, but we are in triple digits on Brent. So obviously that is something we continue to watch. That continues to weigh on risk sentiment, as does that 10-year yield. We've ticked up even higher now. We're at 427 now on the benchmark. We know that some of the mortgage rates have been picking up as well because of this situation in Iran. So it's going to be very interesting to continue to see this data, of course, that we get tomorrow with consumer sentiment and how, of course, some of the GDP is holding up as well, given, of course, now that feels a bit backwards looking as we know how have this inflationary pressure on the horizon. But I'm going to leave it there and send things back over to Marley for a chat with our next guest. Thanks so much.
All right, we're getting a little bounce now. Okay, so once again, selling premium seems to be the best thing to do presently if you're even involved in the markets. Selling above and below with everyone else, okay? I don't know where my histogram went. Okay. All right, hedge flow's turning back up, though. I'm starting to rally back up. We got 40 minutes to go, 40 minutes to go.
Thank you very much for the opportunity.
40 minutes to go.
Comment on credit, right? There's lots to talk about private credit, lots of issues with credit. If you look at the IG market's holding up much better. There's a bit of nervousness about it because if you're hedging credit with treasuries are not acting the way they are. And so that's causing some volatility. But the overall IG credit market functioning quite well. But what about the implication of what the Treasury Secretary told him as soon as militarily possible? That suggests to a market participant that maybe you're not going to wake up in the morning or the following morning and have a resolution to this issue in Hormuz. Those are great words. And I hope that happens. And I hope we get resolution. I hope diplomatic resolution comes in. But you can say a lot of things. Now we have to prove it. Now we have to go forward. There's still a ton of uncertainty.
Okay, who's reporting tonight?
Warfare out there. And there's a lot of... So I'll see it when I believe it. It's great. These are great words. And again, I want to see some diplomatic solution as well. And the coalition is fantastic, but there's still a lot of uncertainty. And when you're dealing with a military action, there's few things that you can guarantee.
The Energy Secretary already said this is going to happen at the end of the month. So we sort of knew going into this interview, which I'm sure is fantastic nonetheless, that it's going to take a little bit of time to get assets in the region in order to start escorting the ships through. I think the bigger question that I have is why are Iranian ships getting through the Strait? This is a separate conversation, but we can track the data. Everybody knows what's getting through and how. How are we letting Iranian ships getting through the Strait? I haven't been able to get a straight answer on that. But that's a conversation for another day since I don't have the answer today. But like Chris, I want to turn back to private credit, which was the genesis of this conversation.
Right. Before we went to Wilford, we were discussing, as Leslie Picker was, as
That's
she
right.
has been, frankly, every day.
S&P back up into the range. So there you go. Selling premium, that's working. Range bound. Brent pointed that out in the Gamma update. Leaning towards selling premium, leaning towards range bound action is what that implies. Selling premium above and below support and resistance.
It is in the agreement you make by investing in some of these vehicles that you know in any given quarterly period, redemptions will be capped at 5%. This is not something that was done surreptitiously or illegally or on the side. Like this was
WTI.
It is a contract that you effectively sign saying redemptions will be capped at 5%. So when you hear redemptions put in were 14%, they're only meeting 5% because they're gating.
You continue to downplay this entire issue.
I do.
You do.
But to be clear,
too, so that the viewer fully
sure,
understands.
I have unquestionably on what's going on with private credit. But I sort of caveated last time I was on, and I will do it again. I'm not apologizing, so to speak, for the fact that 15 to 25% of loans were done to software companies. Among the private credit companies, they're going to be disproportionately more highly rated than the public equivalents. I'm not saying there wasn't malinvestment or bad loans or any of that. I'm not saying that. What I've been arguing is some of the narratives around the systemic nature of private credit and BDCs, some of the narratives around some of the activities that they've been engaged in have been framed in the most nefarious and negative ways. Someone who is sort of involved in the credit space by virtue of what we do at Solis, I'm trying, and I know Anastasia.
Yeah, the market's right back up into the range a little bit.
Just trying to provide an alternative viewpoint here.
MACD turning up. MACD's turning back up. Chop, chop, chop. Better to just stay out of the markets for right now. Wait for the markets to pull back. Wait for the markets to pull back into this zone. Okay, once it gets down to this zone, okay, this is going to be a good setup. It's almost there. We've had to wait almost a year for this to get back down to this area. I mean, we had a couple of bounces back in November, but in December, but almost down here at a level where we'll start to buy again. That could line up over the next week. A lot of stocks like Microsoft are still basing. Microsoft did dip, but it's turning back up. So it's showing signs that institutions keep buying inside the range. Google's back up. It's just below the 50-day, right? Google. But it's holding up okay. Google, all right, it's range bound. So when the markets get down here, when the markets get back to this level, okay, and a number of stocks above the 20-day get to this level, stocks like Google and Microsoft are going to do well, most likely. Hopefully this holds above 295, 300. You have to check Money Magic's levels for that, but you know, for now, what's working is obvious. Fertilizers, Mosaic, LYB, LyondellBasell, LXU. Okay, all of these taken off to the upside. ConocoPhillips, obvious. Chevron, new highs. We've been along in this one since January. Chevron. ExxonMobil, along on this one too. Looking for that the Bollinger Bands to open up, maybe tomorrow. All right, so while it is frustrating, I got about a dozen DMs today talking about where do I think markets are going to go. This is probably the best way to determine what's coming next is when you look at this chart. Okay, when the stocks get to a washout low like this, number of stocks below the trading above their 20-day, number of stocks trading above their 50-day. This is a clear signal when this happens. Okay, So maybe we're a week off, 2 weeks off. Maybe we have to go through this another week. I don't know. It's hard to say. I don't know what's going to happen. All I can tell you is that when I've seen this in the past and you get NIMO at minus 80, it's pretty close to an area where you want to start paying attention, not necessarily jumping in, but pay attention, see where institutions are they active? Right now they're buying, obviously they've been buying those stocks I just mentioned. But this gets down to minus 30% in all cases. I mean, we're washed out. I mean, what's happened since then? Since April of last year. That's the last time we got below this level on the small caps, April. We had that reversal on all of these. Every single one of these reversed off that April low. And then again in November. We're almost there. So keep your chin up. Don't get too depressed or upset because the markets will bounce. If you're trading for the long term, you're an investor for the long term. I've been doing this since 87. So I've seen the markets go crazy since then, right? It's these periods where the markets don't do what you want for, weeks and months at a time that get people upset. But they're not going to do this constantly. Let's see. Let's go here monthly. All right. So I started over here. I started over here, 1987. Okay. December of 1987. The first stock that I bought was IBM. I think anybody that's been here long enough knows. Just from the March low at 666, the March low right there after the last secular bear market. This is a secular bull market. We're still in this bull market since March the 9th. We've had these cyclical bull markets that happen inside of a secular bull market. We've had secular bulls and secular bears. The most recent one was 22 and the 23. That was a 28% drawdown. But this looks good. This is fine. This is fine. So just wait until we get back here. Okay, we're getting there close. We're getting close. So stick with it. Hold your cash close to the vest. Apple's starting to bounce. Everything's going to be fine. Don't look at your P&L. Don't look at your P&L because that'll make you make decisions that you shouldn't make, right? Yeah, this looks good. We're going to be fine. Everything is setting up perfectly. I don't know how much more they can take in Iran. I mean, the pounding that they're taking right now. I think the biggest problem in Iran is there any banks that are listed on the stock market? Iranian bank? No. Anybody know any Iranian bank symbols? There are any Iranian banks that trade on the market? I don't know. Couldn't tell you. Let's see what XLY no. EWY for South Korea that pulled back again. EWJ, there a lot of talk about this being an area to put money to work that institutions were buying. Okay, these all pulled back this week. Emerging markets, okay, pulling back this week. Everything is off right now. So one of the best ways to watch this, in my opinion, is watch the number of stocks below the 20-day. A lot of these things are going to turn at the same time. General Electric putting together a deal with Palantir. That's coming off the low at 302. General Electric got down to 302. GE Aerospace, rather. GE Aerospace.
Uncertainty what AI does to traditional software companies, and basically there's a coming huge, pipeline of mega IPOs. You're going to see two of the four, right?
Schlumberger, what's Schlumberger doing? Schlumberger.
SpaceX, probably not Stripe this year.
Schlumberger. I think the biggest issues I had as a new trader or new investor was I had no reference points. I'd listen to CNBC and they would get me upset. So at some point, I guess about 30 something years ago, I started developing a system that I share with you every week. We talk about sectors, let's go see what that looks like, by the way. Sector wise, we've got signals. I got about 25 signals. I share 20 with you. I have 5 that are proprietary. But a lot of this is just common sense, right? You don't want to buy at the high of the day. You don't want to buy puts at the low of the day. You want to wait for this indicator. This will start to turn. It's already, you see how the shorter term moving averages are starting to widen out. So we're looking for the next valley, and that's going to coincide with probably the end of March. Maybe next week we can start to see some activity that suggests we'll get a bounce. According to Ryan Dietrich's analysis, for the past 20 years, March was a time where we start to see a bounce. You got the midterms at the end of the year. You got everybody extremely bearish right now. You got junk bonds at the lows. Okay, new lows for junk bonds. This is telling you risk off. So don't put money to work when this is saying risk off. You're waiting for the number of stocks above the 20-day to get down to 10, 15%. Advanced decline percent is near minus 30. Everything is starting to line up. Schlumberger, let's see what that looks like. Schlumberger, SLB. Okay, that's below. Valero had a good day today, right? Valero at the high of the day. Vistra Energy, VIST. Okay, trending. WTI back up again. Drop down to 250, back up, headed back towards $4. All right. TSSI, that one keeps going. TSSI, Mondo mentioning that one last couple of days, right? Did they have earnings, Mondo? Is that what that was? That pop? We bought Mondo, myself. I think Cayman, you might have bought some too. On this gap down, we bought some. My average was around $9 at the time. It just kept going lower, averaged back in. It started to move higher. So long story short, my average is around $10.80, something like that. Looking for this to continue back towards the 50-day. If you bought it today, put a stop underneath 11. $1.50 stop. Can you see $3 upside? I think you can. I think we could see 16.50. Got to get through the 50-day. Fill this gap. RSI is rising. Volume shows institutions have been picking up shares. Shorts covered initially, probably. SMCI, what are they doing? Okay, they still basing SMCI. 25 minutes to go. 25 minutes to go. S&P is doing nothing but chopping people up. What else can I tell you? Let's see what bonds are doing. Bonds, TLT. TLT is off. Gold. What's gold doing? GOLD. Gold. Gold is flat. Gold is flat. Silver. Okay. Centos. Economy. Okay, that pulled back. Centos. Copper, another economic indicator, leading economic indicator. That's flat, range bound. So all I'm seeing is frustrating price action. The average trader investor wants to see their portfolio increasing in value every day. You're okay with a week or two where it doesn't do what it's supposed to do, but for 8 weeks, 10 weeks going nowhere, that's when people get nervous, think the worst. You tune in, you're trying to get some sort of reference point. You're listening to people on StockTwits, half of which don't know what the hell they're talking about or don't have the longevity or the experience to develop a system that gives you an idea. Right now, you shouldn't be thinking of anything, really. When we lost 6,800, what was risk off? Okay, Microsoft turning up off the low. Microsoft at some point, when we get down to 20%, 10% of stocks above their 20-day, and we start to turn up, a lot of these stocks are probably going to take off because Microsoft's been basing nicely here. Palantir is doing okay. It's basing near 150. NVIDIA is probably going to do something. It's below the 50-day right now. Stocks that did well today, for the 10th time, CF Industries, fertilizers doing well. You just don't want to buy the high today. You want to buy these dips, right? They're hard to buy, but if you have a reference, they're not that bad. Mosaic. Okay, and you might want to zoom out. Go to the 60-minute. So I wouldn't buy the high here. I'd wait for this to pull back in. Maybe this pulls back a little bit more. Mosaic. Vistra Energy from the watch list. All right, that's just sitting there. These might be okay. All right, going down the list, Lionel Bessel, LYB. Okay. Mosaic, Oxy, Occidental Petroleum. That's fine. It's probably going to pull back in a little bit. NVIDIA. Okay, below the 20 MA. This is probably going to pop back above the 20 MA. Netflix is still basing up here. Netflix. Okay, looked like Netflix wanted to bounce. Energy, oil and gas, and fertilizers. That's all I'd be touching right now. Intel pull back, right? Intel pull back. Okay, Intel. It's about a 50% retracement. 45 is a 50% retracement from this low right here on the 9th to the high right there. 50% is right there at 45. Very possible we bounce tomorrow. RSI turn up. So your fear will be alleviated. Okay, Kroger, consumer staples, Kroger, trending upward. Chevron, been trending since January. It's extended right now. So if you took profits right now and you waited for this to pull back a little bit, probably not a bad idea. We'll see how the news overnight goes. Over the next several days, we should see the release of petroleum from the reserves impact prices. That still has to be refined, but these will probably come back in a little bit. We've been trading this since January from 155 all the way up to 195, 200 call spreads, taking profits along the way. Okay, PSX, AWK, a lot of refiners in the top 10. Gilead, what's Gilead doing? Gilead. Okay, trying to turn the corner. So stocks like this. All right, so the number of stocks above the 20-day gets down to oversold and starts to turn. Stocks like this that are basing, these are the ones that are going to go, I would think. What's Johnson & Johnson doing? Johnson & Johnson. Okay, that looks good. Merck pulled back, right? All right, Merck's about ready to turn back up. Several days, a couple of weeks down. Going to look for a couple of weeks up. S&P pulling back now. Okay, we've got, 19 minutes to go? 18 minutes, 50 seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, March 12th. Trying to calm the nerves of some of the newer members, newer traders, people who don't have a reference to what to anticipate. We're closer to a bottom. We're closer to a bottom right now than we are at the top of the markets. We needed this pullback. Okay, we remain below the 20 EMA. So this is bearish until this turns back up. Okay. Okay, this is so ugly. For the past 3 months, this has gone nowhere. Let me go to 2 hours. 2 hours and go 9 months. Okay, you can see where the market started to roll over, right? Trend up, and then we go sideways. We start to roll over. Okay, it's not going to keep doing this. All right, so that's what we're dealing with right now. So we'll probably come down here somewhere. Once the number of stocks above the 20-day reaches a low, we're probably going to get down to this level right in here. 6,600 which is what we've been looking for, right? 6,600 to 6,500, 6,550. That's where the JP Morgan collar is, 64.57, I think it is, something like that. So just sit back. If you've got vacation time and you were thinking about taking a vacay over the next week, take your vacation. What's this? It's March. I don't know what there's any holidays or whatever. But a good time to bow out of the markets if you haven't already done so. About 6 weeks ago, we got out of TRBCX. We started taking profits off of TRBCX. If you were around then, you know what I'm talking about. Okay, TRBCX. Okay, so let's go take a look at that. TRBCX. I'm looking to buy, get back into some TRBCX, the T. Rowe Price Blue Chip Growth Fund. Okay, so TRBCX. What happened to my... There it is. Okay. So back in 22, at the end of the last bear market, we got long in 23. Late 22, early 23. 176%. Okay, we're off 10%. And we're looking at this potential buy zone as an area to start to put money to work. Now, remember the number of stocks above the 20-day had yet to get down to the oversold conditions, which means that we could see this move a little bit more, maybe 15% off the high. Gets down to this level, we'll be looking for everything to turn. The number of stocks above the 20-day start to turn back up, pivot. Number of stocks above the 50-day will do the same thing. We'll see junk bonds bounce. We'll see bonds reverse. And it'll be time to start to add back to TRBCX. All of this is right around the corner. So hang in there. Don't get too upset. Try to talk you off a ledge. Only reason I'm carrying on like this is because a number of people called. They were very upset with the markets, what's happening. Not with their membership or anything, just the general overall market and what's happening with Iran, blaming things on things you have no control over, basically. But at some point, institutions will buy. You can mark my words. They are going to buy. They have to perform. They have to beat the markets. Okay, we're dropping off again. And once they start buying, it's going to be very obvious. And we'll join in. That's it. Okay. This really snuck up on us, right? I know about a week ago or so. Thank you. Thanks. There are no publicly traded Iranian banks listed on the New York Stock Exchange or the NASDAQ due to strict U.S. sanctions. Yeah, that makes sense, actually. Makes a lot of sense. Major Iranian banks such as Bank Serdarat, Bank Malat, Bank Pasargad are listed on the Tehran Stock Exchange, not U.S. exchanges. Okay, that makes a lot of sense.
Low tick alert minus 800.
Okay, low tick alert. Okay, we're dropping off here. Extreme low tick alert. Okay, starting to drop off. New lows. Okay, here we go. With 13 minutes to go. 13 minutes to go. Markets are dropping off. 200 days down there below. 200 days right there. Why don't we just go down and tag it? All right. Interesting when people get upset, the markets are pulling back. I always like to go back and look at the S&P 500. You want to get scared. Go back to 2007. The markets dropped what 50, 60%, something like that. That was scary times. That was scary times.
Fiscal spending has to become a problem, and then you probably go into the midterms where there's a situation where you could have a regime change in Washington, which could affect regulation.
So you're getting clients that call you up and they say, Chris, this
Okay.
looks like it could get pretty bad. Like I see oil at 100.
Yeah, that was scary. 2000, 2007. I mean, compared to 2000.com, 2007 to me was a lot more scary because I wasn't as heavily invested then back in 2000. But 2007, I was more heavily invested. I was able to get out before the markets took everything with it. 57% drawdown right there. You see that? 666. I know everybody remembers that number. And March 9th, we reversed 2009. And we've been in a bull market ever since, with occasional cyclical bull markets, bear markets along the way. Almost 1,000% from the March low, almost 1,000% right there. You see that number? To recent highs. That's why you need to put money to work. If you're a new trader, new member, and you just started working at a nice corporate entity that matches, whether it's 25 cents, 50 cents on the dollar. Some firms will do $1 for dollar up to a certain amount, like 5,000. For every dollar you invest, they're going to match it. So, I mean, if you can make $2,500 on a $10,000 investment during the year, free money, or $5,000, you deposit 10, the company deposits 5,000 over the year. Get with your HR rep. Talk to your HR rep. Find out how to invest in your 401k and start buying, because we're just now getting a dip. So that'll be a good opportunity for you to start a 401k right now. If you're in your 20s, trust me, by the time you hit your 50s and 60s, you're going to thank me later if I'm still around. Hopefully I will be. Company match, man, that's probably the most the least known investment advice. I don't see a lot of people talking about that. Get involved in your 401k. If you got a small company and they have a small company investment plan, get involved. It's tax deductible until you get to retirement age. If you do a Roth IRA, you pay your taxes ahead. And, when it comes time to withdraw the money, you don't have to pay taxes on it. You've already paid taxes. The company match is the biggest part, though. Pinterest, yeah, that was one that Elliott Management was buying. Pinterest. Yeah, it's back to the 20-day. So, yeah, that would be a stop. Yes. Okay, so let me just check real quick. Pinterest. Okay, so here you go. Elliott Management added to their position. Okay. JK. So keep an eye on that. $1 billion. Elliott Management purchased $1 billion in convertible senior notes. Third largest shareholder with a stake of approximately $725 million. Prior to that, Pinterest is using the entire $1 billion proceeds from Elliott to fund an accelerated share repurchase agreement. So that looks good for the stock, although it has pulled back recently. Pinterest, 20 MA. Looking for that. If it gets back above the 20 MA, that would be good. They're going to repurchase shares, so I would think this dip is an opportunity. Okay, so still dropping off here with 7 minutes to go. 7 minutes to go. S&P. All right, I don't want to beat a dead horse, but we'll have better days ahead. It's not as fun for me either as a podcaster or someone talking live about the markets. When the markets are moving lower, invariably you have most people are accustomed to going long. So when the markets are moving against them, you think of all the worst things that could possibly happen. You start focusing on the negative instead of focusing on the positive. And you lose sight or you lose reference to what's actually going on. Let's see what happens here. Adobe reporting. Let's see what the VIX looks like. VIX. All right, VIX back up to the 20s, the upper 20s, 27. Starting to get elevated again. We've seen this before. We've seen it get elevated only to reinflate again. Volatility. Back in April, March, April, when we had the tariff situation. Looks nothing like current price action. And the spread between volatility and realized volatility is at the greatest that we've seen in since the April low. Another case for potential bounce.
This year, underperforming the S&P 500, even underperforming the software IGV ETF as well. As Wall Street just really worries about AI tools from the likes of Canva, Google, and OpenAI just eating into Adobe's creative software dominance. There's three things to watch, though. Total annual reoccurring revenue, ARR, Adobe's key subscription metric.
All right. Yeah, VIX a little bit elevated. Moving back up towards 30 again. S&P 500. S&P. Okay, we got 3 minutes, 30 seconds to go. 3 minutes, 30 seconds. Another drag of a day. Unfortunately, price action pulling back. No bounce.
Yeah, look at 20-day lows today. This is a couple hours
hours ago, but it was only 24%. That was actually a number lower than where we were back on Monday. You want to see 20-day lows expand. You want to see them really suggest that it's indiscriminate selling and that risk is being taken down. The other thing I would just say, Scott, is most of the sentiment measures that we go through aren't bearish enough yet. You can see skew is rising, so that's the difference in the pricing of volatility front month versus 3 month. And I think people's expectations around what's happening in the Gulf is going to be a short-term war. Therefore, that premium makes sense, but we'll get back to normalcy in 3 months. Maybe not. And I think the put call data just shows that complacency, that there's just not enough there. So I think we've got a little bit more reading to do. I think we'll probably have some more bad news. The good news is we're still in, kind of this neutral trend. So oversold conditions should hold, but we're not there yet.
What levels are critical on the S&P to keep our eyes on?
6,500 is a big one. That'll be important. But for us, it's going to be more the internals than anything else. So even if in fact, I wouldn't even mind seeing us break an important level because that might force some selling, get those internals where we want them, get the sentiment where we want it, and then we'll start going after it there.
Hard to feel better about this market as long as financials. We're looking at the screen here. We just cycled through some names, but Goldman was one on the list, down almost 5%. The group just hasn't traded well at all. It's making people uncomfortable.
Yeah, it is, and I think it should. It started in the private asset managers, right? The private credit guy or the private equity guys that basically morphed into private credit. And then it's just kind of snowballed. We lost consumer finance this week. The regional banks actually act better than they
All right, we're going to close at the lows of the day, lows of the week.
they tend to be more broadly economically sensitive, less financially engineered sensitive. So I like that. I think one of the more interesting things.
All things considered, when you think about a war, the markets are only down. They're down less than 6% from the all-time high. So I guess there's a silver lining. Okay, so we're down less than 6%, and the 200-day is just below. So we got a very good possibility. We could bounce, maybe hit that level and bounce tomorrow. 30 seconds to go. 30 seconds.
Yeah, I mean, you just seem to think that space is oversold and maybe deserves a look. I'm going to let you go. I appreciate you joining us here.
And that's a wrap. Let's see what Adobe has to. Adobe add any color. Let's see.
Along with Mike Santoli. Stocks taking another leg lower today. The Dow finished the session down almost session lows. 1.6% is a loss there. The S&P 500 down by 1.5%. Of course, oil was a big story.
Without a doubt, continuing to move higher, getting closer to that $100 a barrel level on WTI crude as Iran continues to make threats about the Strait of Hormuz. We'll get the latest on that, along with all the stocks making moves, plus what's happening in the bond market. And we've got some earnings to watch this hour as well. Adobe, Ulta Beauty, and the home builder, Lennar. Meantime, yeah, we did close on the lows.
Yeah.
S&P 500 is above the intraday lows from Monday, but it's almost 5% as a peak to trough decline. Maybe you say no big deal. I think the big debate is, does this reflect composure or complacency? Is the market actually trying to, in a sober way, look through these challenges, or are we just...
All right, folks. Like I said, hang in there. We're very close to a bottom, and it'll be we'll be out in the middle of summer after this is all over with, hopefully, and completely forgot about what happened in this particular pullback. I need to write all this stuff down in my journal just to remind myself what we were thinking. All right. Have a great evening, everyone. Take care. We'll see you in the morning. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is March the 12th, Thursday. One trading day left in the week. Take care. We'll see you tomorrow. Ciao.